Very good morning. You're watching India Market Open, and we're set up for an interesting day, aren't we, Alex, as we move towards a monthly expiry. A market that has the will, but perhaps not all the strength needed to pull itself through a bull run.
You said it, because there seems to be fatigue that is creeping in at those higher levels. We've moved very, very quickly. And I think we've had technical analysts over the past few sessions saying, look, at least on the shorter end of the spectrum, we are in overbought zones. And we saw that play out yesterday.
Yeah, but what's heartening is FIIs. Once again, with buys coming in while DIs were selling yesterday, 28,000 crores have been bought in in the last few sessions itself. So that is good. The setup globally is not half bad at all either. All things considering, and this will all come to a head on April 2nd when it becomes clear what exactly is the shape, form and nature of the reciprocal tariffs that US President Trump is talking about. But having said that, US markets did manage to close with marginal gains. And when I say marginal, truly marginal, the Dow just about 4 points up. It was the NASDAQ that was still moving 0.5% up on the NASDAQ. But 3 continuous sessions of gains for the US markets. The data points that have come in are important because consumer confidence index for future expectations has plunged to a 12-year low. Now, the actual data, consumer confidence is really a gauge of expectation of US consumers. But the actual data that's coming in is not half bad. The expectations that things will become bad is higher, is how you should see it. It's usually an early indicator of a recession, which is why a bit of stress about it. Treasury yields also dipped because of that figure, because of the consumer confidence numbers dropping to recession levels. The 10-year was at 4.33. The positive front, Ukraine and Russia have agreed to a ceasefire in the Black Sea. They will lay off on each other's energy installations, but crude has remained elevated because of the secondary tariff threat on Venezuelan oil, where the US government, Trump, has come out and said that anyone buying Venezuelan oil will also face tariffs. That literally targets largely China and, of course, Venezuela. Brent was at $73 mark. Asian markets have opened in the green on expectation that the final shape of tariffs will not be as bad as is being talked about right now. So a bit of a mixed bag there with Shanghai in the red, but otherwise Asian markets have opened in the green. The implied on India also tells us that we're in for a positive start today. And that's definitely some relief needed after a great start yesterday, but all gains given up by the time we ended the session.
Just a couple of takeaways before we talk about yesterday's session, though. Consumer confidence and also inflation expectations. So the Fed is trying to control and to safeguard, if I can call it that, inflation expectations. So this whole conversation about tariffs in the US has led to even people and the respondents to those surveys thinking that the implications of the tariffs for us is that everything is going to get costlier. So you're trying as a central bank to ground those expectations, which is why some people are starting to say, take those surveys with a pinch of salt. An inflation expectation survey, etc. Take it with a pinch of salt.
Yeah.
We'll see soon enough how that pans out. In the actual data, you pointed that out, the data is holding up. But let's talk about what happened in yesterday's session. You had foreign institutions, as Tamanna pointed out, buying to the extent of 5,371 crore rupees, and considerable buying at that in the concentrated, of course, in the large cap space. Once again, you see delivery data, and that will point to significant buying. Domestic institutions, however, selling to the extent of 2,769 crore rupees. And you could argue that quite a bit of that selling was in the mid-cap space as well as the small-cap space, which saw cuts yesterday. Of course, as we pointed out, the red-hot rally saw signs of cooling yesterday. The Nifty 50 gained for a 7th session in a row, but the gains were very muted. The benchmarks gave up about 0.8% intraday to end largely unchanged. HDFC Bank, Infosys were key contributors in the session, keeping the benchmark in the green. And of course, 30 stocks in the Nifty 50 actually declined while 19 advanced. The broader market gauges, as I pointed out, declined yesterday on the back of profit taking in all probability. look at the Nifty Next 50, dropped about 1.5%. You had the mid-cap index that dropped about 1% or so, and the small-cap index ended with cuts of about 1.35% or thereabouts. The one bright spot, IT. If you saw earlier on in the last few sessions where banking and financial stocks were in focus, IT was really the sector that got favor this time in yesterday's session, and this seems to be foreign institutional buying. The gauge ended higher by about 1.3% off the high point of the day, but certainly was positive. Most sectors, however, ended in the red. Defense, PSU banks, realty, all stocks that had ratcheted up in the recent past saw signs of cooling. EMS players, another pack that has been in focus in the recent past, lost ground yesterday. The likes of Dixon Tech, Keynes Tech, as well as PG Electroplast among the few that saw very sharp cuts in trade yesterday.
You know, the setup today, I would say on the back of those FII flows, definitely looking positive because you are seeing a buy in dip mode on the Nifty. So, you know, if you look at the setup and what you expect, this is despite resistance at higher levels. So, both ways. You are seeing resistance at higher levels on the Nifty, but when you see a dip, there is some inherent strength coming in. So the Nifty 50 faced resistance at its previous swing high, triggering volatility. That's what you saw yesterday. This is after a sharp rebound over the past 5 to 6 sessions. A pullback from the highs was expected. The Nifty failed to sustain above the crucial 23,800 level. So that's one to watch. Do we get to 23,800 and do we stay there decisively, at least for a couple of sessions? Now, despite holding above the 23,650 mark, the index dropped over 250 points from the day's high, as Alex mentioned, but still managed to close in the green at 23,669. Nifty and Sensex extended their winning streak, even as broader markets saw profit booking. Now, a move towards 24,000 is possible only if the Nifty holds above 23,800. And this is the figure to remember because we've seen some narrative. We had our guest yesterday, our technical analyst, also saying that he could see 24,000 in the next 3 sessions. Now, that could happen only if you see a consistency above 23,800. And could that come from FIIs? Now, we saw that FIIs were buyers for 4 consecutive sessions. Their long positions have improved to 33% from recent lows of 17%. So that is something I would take heart from as well. And again, we are hearing this from every expert, and Goldman Sachs has also underlined this, that the worst is over. So that's something to remember. You might see momentary dips, resistance at higher levels, but Goldman Sachs says that they believe the growth slowdown is cyclical rather than structural and largely reflects policy tightness. Some recent policy easing measures may help revive real GDP growth later this year. They also believe that the worst is likely behind us. Hold on to that. The worst is likely behind us. You had Ramdev Agarwal the other day saying happy days are here again. So in the same tone or tenor. This is in terms of economic growth and earnings trajectory. Prices have corrected meaningfully. They see higher market volatility in the near term, given elevated domestic positioning in small mid-cap and ongoing global uncertainty from tariffs. They remain market weight on India and recommend focusing on quality growth and earnings visibility. They highlight stocks that offer 23% upside on average, and they've given their list over there. HDFC Bank, AU Small Finance Bank, M&M, Indigo, Adani Ports, Power Grid, Apollo Hospitals, Titan and Godrej Consumer. So quite a few picks over there, Alex.
And all large cap.
And all large cap. But you have some interesting ones on your radar as well. So let's start with your list of stocks today.
Absolutely. And I thought this was interesting because finally you're seeing stocks react very sharply to order wins. Perhaps you can see that today as well. The first stock on my list is NCC, and it has gotten orders to the extent of 10,000 crore rupees, 10,800 in fact, crore rupees from BSNL. This is certainly a thumbs up. There are 2 orders here. The first order is valued at 2,647 crore rupees, and the second value is for 8,157 crore rupees. What is this for? It's essentially for the construction, maintenance, and in fact, the ongoing care of certain networks. So it will design, supply, construct, install, upgrade, and maintain these networks. The orders will be executed over a period of 3 years with a maintenance for a period of 10 years. From what I saw, a bulk of the analysts that are tracking the stock, 10 out of 15 have a buy rating on the stock, and the implied upside is over 30% at this juncture. The stock, of course, has moved up in the recent past, so bear that in mind as well. Satin Credit Care is the second stock on my list, and this is essentially another one of those microfinance lenders that went into a little bit of a troubled time, or in fact, it went into rough weather over the last few quarters, where it saw elevated non-performing assets. And there is, in fact, a sale of non-performing assets that they have done with a value of 213 crore rupees, but they will only get 42.6 crore rupees of that. It's interesting to note that this is actually a sizable chunk for this player, because the GNPA, the gross non-performing assets, as a percentage of overall assets for this lender, stood at 3.9% in the third quarter, and its net non-performing assets stood at 1.5%. It had recovery against write-offs in the period of April to December of as much as 27 crore rupees. So effectively, it will be earning more by selling these loans that it has most certainly written off. So it certainly is going to be positive for this company. The credit cost stands at 5% in the third quarter, and in its investor presentation in the third quarter, it had guided towards maintaining it within that range, even though it is a little elevated. The last stock is also going to possibly react to an order win, and this is Waaree Energies. No, actually it's Waaree Renewables. Waaree Energy is also going to be in focus because it's going to inaugurate a solar plant cell in Gujarat, but I'm talking about Waaree Renewables. It has received a letter of award for an order worth 232 crore rupees. The order is for 170 megawatt solar power plant. So this is certainly something that you should keep on your radar. The stock was down about 3% or so yesterday, Tamanna, but I think a raft of these stocks that ran up very quickly did see a cool off yesterday.
Yeah, so that's the tricky bit. We saw the same with defense, for example. Some of those real estate names,
PSU banks as well.
PSU banks as well, absolutely. So let's come to the three on my radar this morning, on my watch list, so to speak. And the first one is because of a brokerage note. So a thumbs up for Lakshmi Dental because of how excited Nuvama is. They've initiated a buy on Lakshmi Dental with a target price of 570 rupees. They say it's an end-to-end integrated dynamo in an underserved yet growing market because of their shift to metal-free products, digitalization, catalysts for lab business, and aligners. Nascent but thriving segment is aligners. Kids E-Dental, a pioneer, see their revenue adjusted PAT CAGR of 26% and 59% respectively, with the ROCE rising from 19 to 29% over FY25 estimated and 28 estimated, so over a 3-year period. So this excitement, I mean, they've called this a dynamo of a business. It's a recent listing, Lakshmi Dental, and in a space where there are not too many listed companies to really compete. So Nuvama has given it a thumbs up. The stock was down 5% yesterday. Watch out for a Lakshmi Dental. AU Small Finance Bank is the other one that we're watching out for. Goldman Sachs has maintained a buy but cut the target price from 813 to 796. Nevertheless, it is a thumbs up. They say it's a GARP play with industry-leading earnings growth profile. Valuation derating is an opportunity on sector lending earnings growth over FY25 to 27. They believe AU Small Finance Bank will likely start delivering a strong growth momentum in the second half of FY26. They expect the bank to deliver earnings growth of 31% between FY25 and FY27. Remember, even among all the microfinance players, AU Small Finance Bank seems to be relatively healthier. They had a clarification recently on reports of a management change, and after that, you've seen some recovery. So that's why you're seeing that big that pattern on the charts as well. So AU Small Finance Bank is the second stock on my list. ONGC is the third, also a thumbs up. They will be infusing up to 3,300 crores in their arm ONGC Green, which will utilize the proceeds to buy Ayana Renewable Power. So ONGC Green is a story which is cooking and one that we need to look out for. So that's the third one on my list. But there are many more stocks that you need to watch out for today. Varsha, in fact, joins us for more. Varsha, which are the stocks on your radar?
Yes, good morning. Let me start with Welspun Enterprise, wherein subsidiary company has received a 209 crore order from BMC. Now the project is for upgradation of Haji Ali storm water pumping station, which needs to be executed in next 18 months starting 1st October. If I were to talk about the order book details, total order book stands at around 2,900 crore, wherein the EPC order book is at rupees 2,677 crore, followed by O&M, that is operation and maintenance order book at 237 crore. Then on my list is Asahi India, wherein they begin commercial operation at their float glass facility in Rajasthan. This is a thumbs up for the company. Then on my list is NTPC Green, wherein company's third and last part, a capacity of 100 megawatt out of 320 megawatt at Bainsara solar plant has been declared commercial. And last on my list is Minda Corp, wherein they're going to raise fund by issuance of equity securities or by other means. So basically the guess is that they are going to raise it through QIP, which is the board meeting is set on March 28. We're going to take this decision about the raising of funds.
Okay. All right. So, Varsha, thanks so much for getting us those details. In fact, there's an interesting play when you're talking about metals. Often you talk about graphite electrode manufacturers as well. They sometimes move in tandem, but these two companies, I'm talking about HEG as well as graphite, they were buzzing in trade yesterday, but they've had a rocky few years where, because of certain updates from China, where emission norms have forced certain restrictions on production in the past, these companies saw a red hot rally and then that cooled off quite substantially. In the 12 months, they're down about 19% or thereabouts. However, let's talk about why we're focusing in on these two companies right now. Mihika joining in to give you some context about where things stand right now. Mihika?
HEG and Graphite India have been buzzing this week in terms of, just their gains in the last two trading sessions. HEG is up 13%, whereas Graphite India is up 7%. Now, the key trigger this week has been Japan's cabinet, which has imposed a 95.2% anti-dumping duty on Chinese graphite electrode exports. Now, the duty will be imposed for a total of 4 months as a provisional measure, and it will be effective from March 29th. Now, this decision came after a government probe was carried out, and as per an interim report last month, it was reported that China was exporting graphite electrodes made from electric arc furnaces at unfairly low prices to Japan, and this was harming the industry. Now, this also poses an opportunity for India. Now, Japan's total graphite electrode market, the size is around 60,000 tons, and 25% of the demand in Japan is actually met by China. Now, because of the duty imposed on Chinese graphite electrodes, this will increase the landed import price and make it not as competitive in the Japanese market, and this poses an opportunity for India to export. HEG and Graphite India already do export to many countries. 67% of HEG's FY24 revenues did come from exports, whereas for Graphite India, it stood at 35%. And in fact, HEG does have little exposure to Japan already. As of the FY24 annual report, revenues from Japan stood at 6.26 crores. So there's an opportunity for this share as a part of the total revenues to increase because of the anti-dumping duties imposed on China's exports.
Okay. Meanwhile, Mihika, stay with us because we're also talking about the power sector, which is in focus after JP Morgan initiated coverage on 5 stocks, including NTPC and Power Grid. What is JP Morgan saying, Mihika?
They've initiated coverage on 5 stocks. 2 of the stocks that they're most bullish on is NTPC and Power Grid. Coverage has been initiated with an overweight rating, and the upside for NTPC stands at 14% when you compare it to the previous closing price, and that for Power Grid stands at 9%. They've also initiated coverage on Torrent Power and Tata Power with a neutral rating. The upside for these 2 counters is only 1%. And then JSW Energy, they're the most bearish on this counter. An underweight rating has been initiated. The downside is actually 10% for this counter with a target of 500 rupees. Now, in terms of the growth opportunity in this space, well, they forecast power demand to grow at a compounded annual growth rate of 5 to 6% over the next decade, and the industry is seeing a tight power market and structural growth. But there are certain challenges that they've marked. One is the continued losses that we are seeing in the DISCOMs, which are the power distribution companies, as well as persistent execution challenges and slippages. In terms of view on valuations, they do believe that there are certain sectors that you can chase expensive stocks, but the power sector is not one of them. The execution challenges do warrant a caution on the valuations of the company. Currently, the regulated utilities, which is your NTPC and Power Grid, are at an acceptable valuation zone according to JP Morgan, but the private independent power producers and utilities counters are still somewhat expensive. Lastly, why JP Morgan likes NTPC and Power Grid: one, they benefit from the expanded thermal opportunity. They're also trading at reasonable valuations, and their risk reward offering is decent as per the brokerage, with average return on equities of 17.5%.
Okay. All right. Thanks, Nika, for getting us those details on the power sector as well. But let's shift gears, so to speak, and talk about the auto space. And of late, you've been having conversations about the fact that there is muted demand in certain pockets, particularly consumer or retail-focused pockets of the automotive space. We've got notes that have come through from both Bank of America as well as Jefferies. And we've got Somit to tell you about what they're saying about this. Somit, what are they saying? Are they saying that things could improve?
Well, yes, auto stocks would remain in focus in trade today, given the fact that March is about to end, so the sales number would start coming in, or the estimates would start coming in before that. And also a couple of brokerages, in fact, BofA and Jefferies, both have come out with kind of negative notes on the auto sales. Now, what Bank of America here is saying that March demand was quite weakish. They're saying weak retail trends for both two-wheelers and passenger vehicles in the month of March. And they're also saying that the underlying inquiries or walk-ins have also been quite subdued in the month of March. Now, among all the auto stocks, including four-wheelers and two-wheelers, Eicher is one thing that they have pointed out, and that company could stand out, and they're expecting sub 90,000 sales again from Eicher Motors in the month of March. As well, for passenger vehicle OEMs, they're expecting, or they're saying that the annual price hikes that they have taken of around 2 to 3% is something that they have done in past also, but sustainability of this will be important to watch out for going forward. For electric vehicle, they're saying that the adoptions have been quite weak in the two-wheeler space. In fact, the adoption is weak despite the fact that electric vehicle two-wheelers are quite cheaper when compared to petrol two-wheelers as well. Apart from that, they're saying that the commercial vehicle has seen some stabilization in demand in the month of Feb and March, and from tractor segment, they're expecting a strong uptick in the upcoming season. For April month, they're saying that will be an important month to track, given the fact that there is festive season coming up, there are wedding dates as well, and some easing out of financial will also aid to demand in the April month, but that is something that they will be watching out for. And in the auto space, their preferred picks are Eicher, Mahindra & Mahindra and Maruti. Now, when it comes to Jefferies, they're also concurring with the view of BofA. They're saying that the auto demand have been quite weak in the recent months. In fact, in the month of Feb and March, they're saying that the auto retail sales were down around 11% for passenger vehicles and 6% down on a YOY basis for two-wheelers. They're saying that channel checks that they have conducted with nearly 50 dealers of passenger vehicles and two-wheelers are suggesting weak inquiries in both the segments, and they are also saying that the inventory levels for passenger vehicles continue to remain on the higher levels. And for two-wheelers, another issue that that customers are facing is stricter financing that is happening currently in the market. And there's when it comes to Jefferies, they're saying that amid this underlying demand, they are preferring stocks like M&M, which has been outperforming in the passenger vehicle space, and TVS and Eicher, which have been outperforming in the two-wheeler space.
Okay, got it, Somit. Thanks so much for that wrap. And we've got, of course, Eicher as well as Mahindra & Mahindra, Maruti Suzuki to focus on account of those notes. Let's look at another set of stocks that were under a little bit of pressure yesterday. We spoke about this, the Realty pack cooling off after a red-hot rally over the past few sessions and losing about 1.5%. But look at that. Over the course of the last month, they've made a recovery of 4.5% or thereabouts. The question is, why are we talking about this right now? You had Citi that released an interesting note on the outlook of new launches, and that's really what the street focuses on when it comes to these realty players. Anushi is joining you to tell you what Citi is saying. Anushi?
Hey, morning, Alex. So
morning.
What Access is saying for the real estate pack in terms of how the absorption and the launches and the other key operational trends have been for the top 7 cities is something which we needs to focus on. So if you look at the launches across these top 7 cities in Feb 25, they showed a decline of 47% on a year-on-year basis. Now, do note in the previous few conference calls also of majority of these companies that we are seeing in the real estate space, they have seen a slowdown in terms of where the launches are concerned, and this is on the back of the lack of approvals that we are seeing. So in fact, what is some of the key underperformers in terms of the key geographies which are there. MMR, NCR, Hyderabad and Pune stand out. But what was the key outlier was something like a Bengaluru, which reported a 19% of a growth on the other hand, while these were the underperformers. Bengaluru was in a relatively healthier space. So some of these south-based developers and how their outlook is something that we can focus in the fourth quarter of this financial year. While talking about the absorption, like on the one side, we are seeing that launches have remained on the muted. On a negative side, launches have been relatively stable, seeing about a 5% of a downtick on a year-on-year basis. So considering launches and absorptions both into the picture, inventory has declined 7% on a year-on-year basis and a 3% on a month-on basis to 717 million square feet. Now, do note that inventory overhang is something which we have pointed out before. Also, inventory levels have remained low for majority of these companies which are there. So there is a demand supply mismatch that we are looking at, and inventory has stayed below the 500,000 mark at 484,700 over here. So these are the kind of trends that we are picking up. Of course, this puts emphasis on other parameters like pricing, realization, as well as something like demand supply, considering that launches have now slowed down. So on one side, we are looking at supply being relatively lower compared to absorption, which portrays the kind of demand picture which is there. So the demand supply mismatch is something that we continue to see in the real estate space.
All right, thank you. Thank you for that. So comprehensive take for you. What are the best picks in real estate, in auto, and of course the stocks that should be on your radar? But what is on the NDTV Profit watch list? Let's recap that for you very quickly. In terms of those with good news, we don't know if the stocks will be up or down, but those with good news, Wari Renewable, definitely letter of award of 170 megawatt. SIS, because of an approval of a buyback of 150 crores, that's why it's on our list. Siemens, we're watching out for. Their demerger has been sanctioned by NCLT. That could be a bump up for them. Federal Bank will be buying 4% of Aegis Federal, and Wellspun Enterprises has won a 209 crore order.
And we've got NCC. This was on my list. It's won orders worth 10,800 crore rupees from BSNL. This is a two-part order. Advait Infra has also won orders for transmission lines and should be watched in trade today. Prism Johnson is the preferred bidder for a mining lease, and it could be something that the street takes note of. And finally, on the negative side, you have Maruti Suzuki, which has received a tax demand of close to 3,000 crore rupees. But remember, when it comes to these tax demands are often taken up by the companies and are often challenged. So we'll have to watch carefully as to what happens. For now though, let's slip into a very quick break. We've got more stock-specific action on the other side to talk to you about, specifically stocks where you're seeing the lock-in period end after primary issuance. Do stay tuned.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery? Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DS
Welcome back. You're watching India Market Open. Now, a lot of action today in terms of shares which are going to be exiting their lock-in. Meanwhile, the implied open showing that we're in for a decent start, about 60 points up. Will we hold on is the question. And some pressure could come in on these specific stocks whose lock-ins exit today after their listing. So, Ventive Hospitality. And we've given you on the right-hand side column the quantum of shares that is going to be exited or are open for lock-ins. Not necessarily that all of them will be, but 2% of Ventive Hospitality. For Synoris Pharmaceuticals, it's 7%. For Carraro India, it's 5%. For Tollens Tires, it's 54%. So expect some pressure there. For Sri Tirupati Balaji, it's 55%. So you might see some pain point there. Meanwhile, Mayuresh Joshi joining in, Head Research Market Smith India. Mayuresh, great to have you on the show as always. Very good morning to you. Is it looking like momentum can sustain? Because what we saw in the second half of trade yesterday gave us a sense of the underlying weakness. While we're all saying happy days are here again, maybe it's going to take some time for this to stabilize.
Morning, Tamanna. Always a pleasure to be on your show. No, two things. One, I think the move that came through for the markets as far as the indices are concerned, I think was a little bit surprising, because I think the kind of action that happened in the market, both in the main indices as well as the broader markets in the last 5 to 6 days, caught everyone by surprise. The other element is obviously, I think, how macro indicators are going to play out henceforth. What happens to Trump tariffs on April 2nd? What happens to our own corporate earnings as we head into Q4? And therefore, I think the markets will have to digest a lot of macro elements in the next few weeks. And then the corporate earnings as we head into the first half of April. So I think there are a lot of events on the plate here. And therefore, I think the volatility in the markets might very well sustain. With the move that we probably seen in the markets, there is a high probability, as we see it, that the markets might just consolidate over the next few days and let the events unfold to have the next leg either up or down.
Okay, so consolidation on the cards. Mayuresh, good morning to you. How much attention are you paying to the buying that you saw in IT yesterday? Because if I look at the last week or so, and you see foreign institutional investors seem to have come back into the fold, oftentimes they look at banking and IT. And you saw evidence of that over the course of those sessions. So if there is indeed going to be a return of foreign institutions and there is going to be buying in these two pockets, how would you deal with that information?
Morning, Alex. No, I think from a consensus point of view, I think banking and financial services probably seem to be on the radar of not just foreign investors, local investors, both mutual funds, AIFs, PMS, and therefore that probably becomes a consensus call. As far as the IT sector is concerned, as we see it in markets with India, the ratings and rankings have come off quite significantly. As a precursor of what is expected to come in Q4, the expectations are relatively muted on all fronts, whether it is order wins, whether it is execution, whether it is the EBIT margin performance. And therefore, commentaries will hold key, because what the market was really getting into at the end of Q3 was that with corporate tax cuts expected in the US, with inflation expected to ease off, not just in the US, but also in a lot of European economies, the order wins were expected to be significant enough if discretionary budgets expected to ramp up. And therefore, I think how does all these, how do all these elements play out are going to be extremely critical. And therefore, I think from a construct perspective, the move might have come through because they had sold off quite significantly, both large caps and mid caps. A few of the mid caps were in overvaluation territory, late stage phases, as we call it. And therefore, I think we will wait out for numbers, Alex, to answer your question as far as the IT sector is concerned. Just a matter of time. I think it's just a matter of a couple of weeks when the companies will start reporting the Q4 numbers. Let's see how the numbers come out, what the management commentaries are. Till that point of time, I think largely neutral on the sector as we speak.
Horses on the IT space is not too far away. The earnings season just around the corner, of course. Let's talk stock specific. Mayuresh, we were speaking about HEG and graphite.
Yeah.
And I think these stocks come into the conversations in circles, right? You speak about them and then they go quiet for a little while. The latest update, of course, is with regard to the anti-dumping duty that Japan has levied on Chinese imports of graphite electrodes. The implication of that, or the interpretation of that, seems to be that it's positive for Indian manufacturers. Can you draw that conclusion? And based on what you saw over the last few sessions, these stocks have rallied. Would you be venturing out and perhaps looking at them?
No, I think I'll give you this macro and the micro argument both, Alex, for this, right? From a macro perspective, obviously the graphite electrode players and the electric arc furnace route that they use in terms of making green steel, I think that is a huge positive, because even the European Steel Commission has probably ensured that over the next few quarters and years, you probably need green steel to be produced, and that might be a norm across the globe. So over a periodicity of time, I think producing green steel and all inputs related to green steel will probably come through, and therefore graphite electrode players will remain in focus over a longer period of time. Now, from an immediate perspective, and how we are probably seeing and how numbers are probably played out in Q3, you understand the construct of the steel industry. China is still the biggest producer and consumer of steel. The expectations in terms of global demand and supply of steel is expected to be around 1755, around 1800 metric tons. China is going to be the biggest supplier there as well. Obviously, what has happened till Q3 is that the Chinese suppliers went easy in terms of the green route as far as producing steel is concerned. And therefore, the graphite electrode makers in China had no option but probably dump graphite electrode all across the globe. Now, within the space itself, you've got UHPs and the LHP players. The UHP players might do relatively better. But what you've probably seen is that with a large part of the production being dumped across the globe and consumption not happening in terms of producing green steel internally in China itself, the prices of both graphite electrode as well as input costs, which is basically petroleum coke needle, has moved a tad bit higher, which has crumpled EBITDA margins to a large extent. And that is not a good scenario. So I think the perspective might be good that Japan has probably done that. But at least for the next couple of quarters, both HEG and Graphite's management have put it very, very clearly that realizations, margins might remain under pressure. So earnings might remain under pressure. So a little bit circumspect from an immediate perspective as far as these graphite makers are concerned.
I'm wondering, Mayuresh, since you're talking about earnings and what we are learning is that maybe for FMCG and staples also you will see Q4 earnings under pressure. Is that now already priced in your view, in terms of corporate earnings? And having said that, then where would you be more constructive and positive and start building positions right now?
So, Taman, I think from both a discretionary and durable perspective, I think Q4 might be the last quarter where I think earnings might actually take a hit for a large pool of the companies operating within these spaces itself. Again, I think the perspective and a base case scenario getting built in is with the tax cuts expected to come through and the incremental benefits seeping in. Discretionary spending will be very, very evident by the time we hit Q1 and the first half, and specifically the second half, where I think that might be even having a profound effect as far as spending is concerned. And therefore, I think earnings should bottom out for a large pool of stocks within the spaces as Q4 probably ends. You are seeing hints of rural consumption coming back, pockets of urban consumption holding up. And therefore, I think as these pockets start showing improvement based on these factors, along with expectations of an excellent monsoon that is probably expected because of La Nina conditions, I think these spaces should start showing an uptick as far as earnings are concerned. And therefore, yes, keeping a close eye between both discretionary as well as durable. Marico, Dabur are showing relative strength compared to the rest of the pack as far as FMCG is concerned. Within the consumer durables, I think the AC makers, we've all seen that spring into action over the last few weeks. The relative strengths of stocks like a Blue Star, as an example, is still holding out. Something like a Crompton Greaves consumer is also holding out. So I think these plays might actually come back in focus as we head into the first half of the next financial year.
Okay. Stay on with us, Mayuresh. Meanwhile, Goldman Sachs has shown quite a optimistic view on India as well. They've released their India strategy where they have also talked about specific counters that they like. Harsh joining us for more details. Harsh, they say the worst is already behind us. I found that quite interesting.
Very interesting, and they've kept a market perform on India as well. But really, currently, the larger concern is what they're trying to address. They're trying to say that growth, which has been difficult to come by, will likely recover. One, in terms of the reasoning why growth has been sluggish, is largely policy driven. With a change in policy, growth should well be on its way back, is what they are saying. So a bottoming of growth is likely what they are saying. Policy tightness was the concern. Now policy measures easing. Now, in terms of what therefore it could lead to a bounce back in growth very quickly, likely is what they are saying, along with a bounce back in earnings. So you might likely start to see earnings start to pick up. FY26 is what they are saying. Prices have corrected meaningfully, and therefore they're starting to see value, see higher market volatility remain. Why is that so? One, you're seeing that there's higher retail participation, or rather higher domestic investor participation in the small and mid cap space. That is one concern. The other one is all the uncertainties regarding global and tariffs that could continue to weigh with regard to volatility. Market weight on India, they recommend focusing on quality growth and earnings visibility. They highlight stocks that offer a 23% upside. I quickly read them out. HDFC Bank, AU Small, M&M, Indigo, Adani Ports, Power Grid, Apollo Hospitals, Titan, and a Godrej Consumer. So some of those on their radar, 23% plus on several of those nifty names standing out.
Okay, and certainly something to watch out for in trade today. Thanks so much, Harsh, for getting us those details. We're joined by Chandan Taparia, who's, of course, with Motilal Oswal. Chandan, very good morning to you, and thanks so much, as always, for taking the time. I'm just wondering whether, or what you made of yesterday's move, because you saw quite the gyrations intraday and a cooling off after quite a few sessions where the bulls certainly had the charge. So is this simply a situation of profits being taken, money being taken off the table? And where do we go from here?
Good morning. Thanks for having me. Good morning, Mayuresh, and all the panelists and viewers. So yes, I think after a long time, we witnessed some profit booking. Otherwise, every small decline was being bought smartly. If I look at the price behavior of last 7 days, we have seen a decent run-up of more than 500 points. If I look at the last 4 weeks, the index is rallied by more than 1900 points. So after the sharp surge in the market, some sort of profit booking was seen at higher levels, but still the index has been making higher highs, higher lows. So as of now, 23,333 could act as a major level, and any decline could be a buying opportunity until it holds about 23,333. Use any small decline as a buying for an upside target towards 24,000, 24,444. So I believe the FIs are now buying after a long time. Short covering is seen from their stance, and any decline could be bought because total market has started to recover along with buying in selective heavyweights and sectorial chart.
Okay. Chandan, anything that you're looking at in terms of data points ahead of the monthly expiry as well, for you to get certain direction as to where we would heading into the new month as well?
Yeah, so I'll start with the FI's long short ratio first. That was at 8 to 10% just 4 to 5 weeks back. That is going to 35%. That means FIs are now having 35% long position in index future and 65% short position. That gone to 8 to 10%, and that was a deep oversold territory by them. Now, if I look at the data setup, we are heading towards its monthly expiry. And in this month, index is up by around 5%. And in the last week, we have seen a record of highest weekly gain in last 2 years. If I look at the volume weighted average for the week, that goes at 22,700, and we are almost 8 to 900 points higher than the volume weighted average, which clearly indicates that shorts got trapped and we witnessed some coal unwinding pressure. If you notice, 2 days back, market was moving up and India VIX was up by around 8 to 9% because 23,500 call writers didn't get chance to cover their position and they were finding tough. So I believe that 23,500 zone could act as an immediate support because that is the pain area for call writers. So as per the VWAV's bias or VWAV setup, I believe 23,500 could be hold and market may attempt but may not go beyond 24,000. So you have to play the range between 23,500 to 24,000. If I look at the bank nifty as well for the data point of view, here also the index is trading much higher than the volume weighted average, almost 1,500 points higher than the volume weighted average, and it managed to recover the weakness of last 2 weeks. If I look at the rollover data, that also indicates short covering trigger. So I believe most of the data are in favor with the view that a small decline again could be bought and short covering could continue in the market.
Covering could continue in the market. 23,800 seems to be the pain point, Chandan. What would be the strategy over here?
So I believe till 23,333 is being respected. Buy on decline could continue with intraday support at 23,500. And I believe if market doesn't decline today, then there will be more pressure for 23,500 call writing or even the pressure on 23,700 call writers, which can take it to 24,000. And I believe one can either go with buy on decline stance or can initiate the bull call spread, buy 23,650 call, sell 23,850 call, initiate the 200 point spread at cost of 40 to 50 points. Risk reward ratio will be 1:3. And if market doesn't move, the risk will be limited. And if it short covering continues, we can make a decent return in this strategy.
Spread between 23,330 and 23,800. And that range is what is important to see. Chandan, let's get your picks this morning.
Yeah, so looking at the stock ideas, first it will be buy on Bharti Airtel. One of the strongest name, margin of safety with lesser beta could continue to keep the stock on the higher zone. However, it is a slow and steady mover, but I believe the monthly setup indicates the further momentum. It rallied by 10% and the rollover data indicates the positive stance. So I believe Bharti can continue its positive stance with support of 1695 and it can head towards 1800 if a small follow-up happens, which can lead to the fresh breakout on the daily and the weekly chart. Second trading idea that will be buy on Grasim. We have seen selective cement companies has bottomed out and reversal is clearly visible on the daily and the weekly chart. Grasim has given a consolidation breakout of almost last 60 days and holding well above 25-20 marks. We have seen surge in the volume as well as the open interest activity, so which indicates positive stance in the counter. One can buy with support of 25.12 and this time Grasim can head towards 26.50 to 26.80 zone.
Interesting. I want to talk about that second pick, in fact, with Mayuresh. Mayuresh, not just necessarily about Grasim, but the cement manufacturers, as Chandan just pointed out, a few of them have been buzzing, right? And I saw an interesting note earlier in the week that perhaps talked about the fact that maybe the worst is over for this sector. Things will look up in the next financial year. Do you concur? And which specific stocks would you be watching out for?
So Alex, I think that seems to be a base case scenario, I think, for two reasons. One, I think what we probably saw in the first half, because of monsoons, which is typically a seasonal factor for cement companies, where volumes probably go off. And obviously elections across the country, you probably had some element of beleaguered moves that happened for the sector as a whole. But as we speak, I think, and as channel checks are suggesting, I think in some pockets, you've seen some element of price hikes happen. There is expectation that Q4 numbers relatively, both year on year and quarter on quarter, should be better, both in terms of volumes holding up and sustaining, the expectations in terms of margins holding up because input costs have largely stabilized. And let's not forget, both because of consolidation in the industry itself, the pricing related issues are largely going to be behind us as we head into the next couple of years. Having said that, both in terms of captive power that a lot of these companies are now incorporating, both in terms of waste recovery or greenfield power projects that they've incorporated, power and fuel costs are expected to be lower. with crude expected to be lower, albeit with the effect of a depreciating rupee, it should be relatively better as far as logistic costs are concerned. So with this construct, the expectations in terms of volume growth holding up for Q4, for Q1 as we head into the next financial year seems to be a base case scenario. And as we head into the next 2 years, housing, roads, infrastructure, where the impetus is already there from the government side as far as capex is concerned, should probably ensure that the volume leverage, volume and price leverage probably holds on with consolidation in industry. Having said that, I think JK Cement is something that we've got on our watch list. A very good mix between grey and white cement, where realization should hold up. Cost measures have been appropriately put in place for JK Cement as well. And therefore, I think with the entire macro perspective in mind, I think a stock like JK, in our opinion, can perform better over the next few quarters as far as earnings is concerned.
Just on cement, to take that further, Mayuresh, what would be your top picks in that space, and would that essential underlying story extend to other players in the infra space as well? Because if channel checks are showing an increase in demand, of course, price hikes being taken, then what are the other areas that benefit, and plus your top picks in this space?
So, Taman, as I mentioned, I think JK probably remains on our watch list. That probably looks one of the strongest stocks with a good mix of grey and white cement as we speak. Again, I think selectively in terms of where the capex of the government is, assuming power and defense, our own sense is that specifically within the power segment, you've got pockets of strength that are emerging. The expectations in terms of the entire ecosystem as far as power is concerned, whether they are generators, transmitters, EPC players, or in fact even the renewable players, I think those can very well remain in focus as a big picture argument over the next few years. And therefore, stocks like an NTPC as an example, or a power grid within the PSU basket might actually continue doing well over a longer period of time. Dividend yield also becomes a huge supportive factor for these stocks under concentration. There are obviously a couple of EPC players that we like, but for compliance reasons, won't be able to discuss that. But again, I think that EPC space looks very, very interesting as far as power is concerned. To probably look at infra as a space as a space.
Okay. Yeah, those EPC players, by the way, yesterday in trade saw a little bit of a crack. I will go to Chandan on that, but before we do, Soumit is joining us to tell you about a couple of stocks that are in focus on account of meeting with analysts, and those are Marico as well as Ujjivan Small Finance Bank. Some very interesting takeaways coming through for both of them, and very different spaces. Soumit, what are you picking up?
Well, firstly, when you look at Marico, Motilal Oswal broking firm met with the management of Marico, and what are the key takeaways that are coming in are firstly that Marico is focusing on achieving steady double-digit growth going forward. They are also saying that this growth will be led by volume, pricing, continued momentum in the food and premium personal care portfolio. On the margin front, they are saying that the elevated input cost may weigh on the margins at least for the near term, but when it comes for the longer term, they are shifting focus towards value-added products, and they are expecting a CAGR growth of nearly 20 to 25%. Now, these value-added products are higher margin products, so over longer term, they are still bullish on maintaining the current level of margins going forward. When it comes to Parachute and Saffola, the key products, they are saying that the demand continues to remain steady despite the multiple price hikes that they have taken for both the products. And lastly, when it comes to their online businesses like Plix and Beardo, they are saying that both these businesses are seeing a strong progress and strong traction currently. So that is some positive commentary coming in from Marico. When it comes to Ujjivan Small Finance Bank, Axis Cap in fact had this MFI day where they met the management of Ujjivan Small Finance Bank, and commentaries that have come in are actually quite positive. The management is saying that they are seeing improvement in collections, excluding the Karnataka state. They are expecting their NPAs or gross NPAs to likely to peak in this current quarter. There is a fourth quarter of FY25, and they are saying that credit costs will continue to remain elevated for the first half of financial year 2026, but things will improve for Ujjivan Small Finance Bank at least from the second half of financial year 2026. When it comes to their MFI portfolio, they have already lowered their share of MFI in the total portfolio, and they're expecting this to decline further going forward as the company is focusing more on secured segment loans. And lastly, they are saying that the MFI will continue to remain at a growth rate of 15 to 20%, and this growth will be most likely back-ended in FY26. So though MFI, they are lowering their focus, but growth would continue to remain on the higher side at around 15 to 20% is what the management is saying to Axis Cap.
Okay, so Jeevan Small Finance Bank, watch out for. Equitas also watch out for. And Marico, of course, let's watch out for. We'll take a very short break, but on the other side of the break, we get to your top picks, pre-open, etc. As we go into that break, look at this exclusive conversation with Raymond Lifestyle. We've spoken to them at the sidelines of the Motilal Oswal Financial Services 11th Ideation Conference. Listen in.
Festive season has started well. I think from mid-November till mid-June we expect, good festive offtakes. We have seen steady secondaries at this point in time. We expect this momentum to improve going ahead also. Thankfully, even the next wedding season, which starts somewhere September of this year, also is expected to be long one and also having a lot of number of wedding days. So we do expect a gradual recovery in the overall space driven by wedding season this time around.
Okay, but sir, we've seen an overall slowdown in the economy, and there has been weak consumer spending as well. So kind of wanted to understand, how do you see demand outlook going forward from here on?
So yes, we did see, very soft consumer demand because of inflation, because of heat waves, run up to elections. I think the reasons were, manifold, and also very weak wedding season in the first half of the year. Thankfully, some of those things are, easing off while inflation still remains sticky, but especially with crude at the levels at which it is, eventually inflation will, kind of cool off, which is good news from consumption perspective. Wedding season is, kind of pretty, long this time around as well as the next one. So we do expect some of this derailers should no longer be actually a barriers, right, in terms of growth, going ahead. In fact, if we talk of our business and we have this concept of booking where we have trade shows for good 7 to 10 days and then customers, our channel partners actually walk in to, book their orders. We did see a very robust booking growth. In fact, our booking growth both for branded textile as well as branded apparel business was in early double digits to mid-teens, which is a very, very good space to be in. But more importantly, it reflects, what they are envisaging, the consumers' demand, over next 2 to 3 quarters, which seems to be robust at this point in time.
Okay. You spoke of brand textiles. I wanted to understand there has been slightly a decreasing trend, in the revenue. So what's your strategy and outlook for growth on that front?
So there has been a shift over last, 10, 15 years in terms of consumers moving from stitched garments to ready-made, garments. But there is still a class of consumer which wants, kind of stitched garments. Indian men also genetically, change their shape and size every 3 to 5 years. So there is a very strong need for, stitch, kind of garments. What we are doing from our end is one, premiumizing over there, so that, we can get better realizations and also tap in that TG, which is, looking at premiumization. We are also looking at having very innovative campaigns like Y-Stitch, right? We are also trying to solve for convenience aspect, which is missing partly, in the entire journey of...
A big proponent of value investing principles. But what is Govind Parik's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
Welcome back. You're watching India Market Open and we're heading towards what could be another positive start. Whether that continues or holds during the session is something that you have to watch out for, because we saw signs of a little bit of a cooling off yesterday. That was evident particularly in the broader end, but even for the benchmark Nifty 50, we gave about 0.8% intraday. Chandan Taparia as well as Mayuresh Joshi are with us this morning. Chandan, I'll come to you on a pack of stocks that saw a little bit of a crack yesterday. EMS players, the likes of Dixon Tech, the likes of even your other ones as well. So why don't we talk about some of these names? Would you say that the drop that you saw yesterday, Amber dropped about 1.3% or thereabouts, PG Electroplast also dropped in trade. Would you say that these are opportunities to buy?
So I believe the relative strength is missing in most of these names. If I start with Dixon, it failed to hold above 50-day exponential moving average. The important part is in the recent recovery, when index rallied by 19%, many sector and stocks have really done better than the index movement. And that is called the alpha generation. But few counter recovered because they fell down sharply, bargain buying, and the oversold scenario was there. And again, selective IT stocks are not doing well. In fact, Nifty IT has not performed in this market recovery. So I believe Dixon might face some sort of profit booking at higher levels. Multiple hurdles are visible at 15,000 marks. In fact, the call writing is clearly seen in those strike. So with that hurdle at 15,000, it can retest to the recent low of 12,750 zone as it failed to surpass the key hurdle. And that is also hovering near its 50-day exponential moving average as a barrier. Looking at the Amber, again here also decent recovery was seen, but momentum is missing. But one can go for buy on decline stance because the setup is comparatively better in Amber than the Dixon. So I believe with support of 6,500, use any small decline into buying opportunity. So be selective, and I think selective stocks in this space can find a recovery, while rest can see the capped upside in the recent scenario.
Okay, first few rates ticking in as the session opens up, and of course these will settle, but just to see what we're spotting this morning, NCFC was on our watch list, 6% up right now. Like I said, it'll settle, and those rates moving very, very quickly. We also should look at Varun Beverages and Siemens, both with some news flow there, acquisitions, etc. Varun Beverages, in their case, it's an investment they're making. In Siemens' case, it's an NCLT node that they have got. Century Ply also looking quite interesting this morning. I want to pull up Star Health and see if their clarification on a news report that they're being investigated by IREDA has helped at all. Well, not really, about 2% down right now. But again, like I said, that will settle. What's catching my eye is Zomato, still under pressure as the quick commerce story is being added with more layers. We now know that Zepto is heading to the IPO market. We'll be speaking with Delivery later today as well. Just Chandan, how are you looking at Zomato on the charts? It had a down day yesterday, could be headed for a bit of rockiness today as well.
Yeah, so we have seen a decent recovery in the counter from 199 to 225, but it failed to surpass that key hurdle. However, our medium term or the long term target remains same, and we are overall bullish, but for short term it is finding tough. So I believe it need to look at the 199-200 zone. If that level is being respected, then recovery could be there. Otherwise, needs to hold about 230. So as of now, we have to play the range between 199 to 230 zone.
Okay. All right. So that's the view on Zomato. Let's see how it opens at this juncture. At least in pre-open, it seems like it's going to be another day of selling pressure. Let's talk about the banking and financial space though. And this has been a pack that has done quite well in the recent past. In fact, if you look at the time frame from September onwards to March, you have an outperformance of the Nifty Bank and FinServ over the Nifty 50. How should you look at this, and what are the reasons for that outperformance? Harsh is joining in to give you some context. Harsh?
Well, absolutely. What you're seeing is an outperformance. Now, two questions we're asking. One is whether this outperformance can actually sustain, and why this outperformance, and what's driving this outperformance. So basically, these two is what we're going to try to address. First off, how much has the outperformance been? And in that sense, we've seen a decentish outperformance. Look at where the Nifty is. It's down 10%. Nifty Bank down just about 4 in comparison. And the Nifty Financial Services absolutely flat. So the outperformance is quite stark when you're looking at it from 1st of October all the way up until now. So that's the first parameter. Now let's talk about stocks and which ones have actually stood out. And here we're talking since September. Look at the outperformance of some of the Nifty 50 counters. Kotak is up 16% since September, comprises nearly 3% of the Nifty. HDFC Bank up 4% when Nifty hasn't had a great run, and ICICI Bank up 3%. These are heavyweights, mind you. Combined, nearly 20+% of the Nifty. When you're combining all these three, nearly 25% of the Nifty within these three stocks, which have shown real good resilience. Now let's talk about March, because that's where it's really beginning to pick up in terms of the way in which we're seeing returns. Look at the gains that we've seen in March for some of these counters, and PSU banks in particular starting to gain traction in the month of March. We roll the graphic forward, we'll see more names where we are seeing good traction across the board. The heavyweight HDFC has done 5% month to date in March as well. So some names that are really standing out. Now, let's talk about the valuation picture, because this is where this is the primary reason why we've seen the outperformance. The Nifty Bank has traded at a discount to its 5-year averages, and let's talk about that. The 5-year average price to earnings, and we'll talk about price to earnings first, thereafter take specifics on price to book. The price to earnings has been 19, whereas the Nifty Bank currently trades at 13 and was trading around that range itself, maybe between the 13 to 14 times range, even in the month of October. So this discount has been 30% now for a while. And when you're comparing it to the Nifty 50 as well, just look at the differential. 22 times is where the Nifty 50 index is, and the Nifty Bank is at 13. That hasn't been the case over the last 5 years. The graph is just widened, and we'll talk about this in the next graphic. The differential between, in terms of price to earnings, is the largest, Nifty Bank versus Nifty 50. Let's pull up that graph, and we'll see that it's currently at 9 in terms of the differential, the absolute PE differential between the Nifty 50 and the Nifty Bank. But well, one can argue that PE is not the best metric for the Nifty Bank. So what we've tried to also do is try to pull up price to book value versus 5-year averages. Let's pull those up, and you look at the discount rates here. IndusInd 59%. Now there may be a one-off there, but let's look at the others maybe. AU 51, Kotak 34, Axis 27. So some real large discounts that are getting built in. Let's also talk about what is possibly going to continue in terms of outperformance. What are the factors? FI is making a comeback, could well be a positive. Liquidity push by the RBI, repo rate cuts on the anvil. We're also talking about easing regulatory restrictions coming through on specific counters, growth making a comeback in the system, GDP growth, and valuations continue to be at a discount, which we've just spoken about. Let's last off talk about what analysts believe in terms of upside. IndusInd, again an outlier there. If we exclude that as well, very, very decent upside on some PSU banking names. Bob, PNB, SBI, some of the favorites with regard to where analysts is concerned. Axis has 17%. HDFC, ICICI, just about a 10 to 12% upside is what analysts see. Kotak actually has a 4% downside. So after this kind of outperformance, you might well see Kotak not do so well as per analyst estimates.
Let's ask an analyst about those estimates. Nitin Agarwal, Senior Group VP, Head BFSI Institutional Equities at MOFSL, joining us this morning. Nitin, good morning and great to have you on. Is banking, BFSI the big comeback story as we hope that this leg of the recovery continues?
Yeah, hi, good morning and thanks for having me. So certainly, like, we have seen a good pullback in the banking stocks, and that is primarily driven by valuations, because while on one hand you have earnings which are moderating over the last couple of years, and we see FY26 to be a year wherein the earnings bottom out, but I think a sustained performance in the sector can be visualized more from the second half of 26. And in anticipation or the visibility of this earnings recovery, there's something that will drive structural performance of the sector. Probably until then, you will have bouts of sharp rally, something that we have seen in the last 10-15 days, and the valuation catch-up will happen because the P ratios or the price to book, as we were talking about, certainly has seen a fair bit of derating, and most banks are now trading below one-time peg. So to that extent, valuations will continue to support the performance, but I think earnings support is also needed. To that, visibility will likely show up from the second half.
Okay, let's quickly get to it because we have 5 minutes to opening, Nitin, and this is important. We had a very elaborate setup there from Harsh, and in conclusion, Kotak Mahindra Bank, HDFC. I want to get your take on both of these specifically in fundamental terms on whether you see that inherent strength coming in.
Right, certainly. So Kotak, one name which has been like stagnating for years, and last few months, 3 months, we have seen a fair bit of outperformance by the stock. And I think the bank is well positioned now to deliver a healthy double-digit growth somewhere in the high teens over FY26 as they benefit from the lifting of the ban and the entire bank pursues aggressive growth in the consumer banking space. So to that extent, I think it's still amongst the very few banks which can deliver you high teens growth along with a 2% plus ROA. And that has enabled this pretty good re-rating in the bank over the recent months. HDFC Bank, on the other hand, is a name which is like still consummating the merger in terms of the operating performance, and which is going to keep getting better over the years. It's still going to take some time because CD ratio is still elevated. So to that extent, growth in the near term will remain suppressed. But the bank is on track to deliver an improvement in the operating performance led by recovery in growth and margins over the next 2-3 years. So which is the reason that we continue to like HDFC Bank also from a long-term outlook.
Nitin, hi, good morning. A quick view on the PSU space as well, because often, obviously, and then that argument has never changed, right? They are trading at a discount. They will likely continue to trade at a discount, but still, the argument has to be made that they are very attractive right now, valuation-wise. What would you buy if you were to buy in this space?
Right. So if you look at PSU banks had a very sort of a glorious rally in FY22-23. And last 1 year, we have seen a fair bit of sort of stagnation to derating in the PSU bank index overall. And that pretty much aligns with how the earnings trajectory is changing, wherein from a high double digit to even triple digit earnings growth in some quarters. Now we are looking at a 6-7% earning growth outlook for the PSU bank sector as a whole. Valuation certainly has derated, reflecting this earnings outlook, and looks very attractive in context to how the ROAs and ROEs are still placed, wherein we are estimating these banks to deliver 1+ kind of ROA and ROEs to sustain in high teens. So to that extent, we believe that these banks will collectively deliver 13 to 15% CAGR returns over the years. But given how the private bank space has also derated, our bias has been more on private banks in the recent quarters, and that remains. So we remain selective, and we continue to like SBI as a preferred buy in PSU banks, and followed by Indian Bank amongst the mid-sized names.
Thank you so much this morning for your time, Nitin. We would have loved to talk more, but we're just getting into the pre-open session. And I want to get a quick word in from Milan Vaishnav, Gemstone Equity Research. Milan, very good morning. As we get right into the session, let's get your picks this morning.
Yeah, very good morning, Tamanna. I am again going extremely stock specific. I won't be chasing the markets per se. So my first pick would be from the financial services space. It would be Paytm. I would be looking to buy above 775, looking at the target of 830 while keeping the stop loss at 730. And the second pick would be Jubilant Food. I would be buying above 668 rupees with a target of 720, stop loss of 640.
And you've seen some of those rates settle, Milan. Very good morning to you. It could be another range-bound session perhaps, or cooling off visible. But would you see any opportunities based on what you've seen in the first few ticks?
Good morning. What I'm seeing right now is that markets are now overdue to take some breather because of little macro technical reasons, I will call it, because we are nearing the levels of 23,800, and 23,834 is where the 50-week moving average is, and that was the level we had violated before we started a major corrective move. So that is supposed to act as resistance plus the 24,000 levels where the 200 DMA is placed. So anything above 23,800 onward is likely to show some resistance to the market, and it would be in fact a little bit healthy for the markets if they consolidate, because this kind of unabated move is slightly becoming unhealthy as such. So I expect that markets would take a breather, and I would rather continue to stay stock specific and focus more on protecting the gains at these levels rather than chasing the stocks.
Very quick answer. We've got 40 seconds, so 25 seconds. What's your view on the Nifty Bank? Would you say that the resilience will continue, or do you think that it's high time that you lose some ground here?
Nifty Bank, I expect it to show some retracement, but not a very large one. Broad-based consolidation is more that I see in Nifty Bank. I expect 52,000 to act as a rock solid resistance. So long as we are below that point, expect it to show some corrective retracement.
Okay, some corrective measures today. The way the implied open has also sort of vanished by the time we're getting to open. You could see corrective measures as well. Remember, 23,800 is the mountain that the Nifty needs to climb decisively to make it there. Not showing signs of it yet on the first tick, just barely under the 23,700 mark on the Nifty 50. The Bank Nifty also not showing any signs of action. The Nifty IT, after being the outperformer yesterday, seeing a bout of profit selling and down in the red. Let me pull up the heat map very quickly, even as we see the broader markets not really in a kind of a stellar performance. Remember, the monthly expiry is tomorrow. What we've been seeing the last few sessions was also short covering. Will that short covering sustain, I think, is the key question for the market. Your even Stevens on the red and the green this morning. Remember, yesterday's top gainer on open was Ultratech. On the other side of the spectrum today, Power Grid doing fine, BEL doing fine, Bajaj Finserv, Aisha. There's a whole host of notes today on the auto sector. One of the top picks is Aisha across the board. That's what's being seen today. M&M as well. I think BofA and one more brokerage very sanguine on the auto space. So you're seeing M&M, Hero Motor there as well. Some recovery coming in IndusInd Bank. RIL in recovery mode is, I suppose, what is actually propping up the Nifty. If you see Nifty contributors, it possibly is there. Those fears of indirect tariffs on Venezuela, which would impact RIL, perhaps receding. Bharti and RIL, yes, those are the two holding things up. Infosys, not quite. Very quickly, you see those rates changing. It's going to be a bit of a volatile morning. Volatile and range bound, and even in the broader markets, it becomes a very stock-specific story this morning, Alex.
And in the absence of very major stock-specific news today, you could well see consolidation as we've been speaking about over the course of the last hour or so. In fact, the small cap index already turning into the negative right now. Let's pull up the sectoral heat map just to give you a sense of what is moving this morning. And you have quite a bit of green on the screen, but not too much in the way of big movers. Realty up and about, gaining about 0.6%. You have energy that's up about 0.6%, 0.5% gain for oil and gas. And on the bottom of the picture, you have consumer durables that's losing only about 0.33%. So not too much in the way of big moves. Let's talk about individual stocks, and there are a few stocks that could be reacting. Let's see. Waaree Renewables was on my list because of the letter of award that it's gotten, 170 megawatt order that has come through. The stock is up and about. As we've seen for a few of these stocks that have order wins, that has been looked at positively. Let's see SIS, whether it's reacting to the buyback approval of 150 crore rupees, is down about 1.5% at this juncture. Siemens in the news on account of the demerger that was sanctioned by the NCLT. It's up about 3% higher or so. Federal Bank is set to buy a 4% stake in Aegis. It's not doing too much in trade today. Welspun is something that you should focus on as well. There's also an order win here, and there are several order wins here. NCC stands out, and so does Advait Infra, both reacting very sharply. NCC, by the way, a 10,800 crore order, quite a large order coming in from BSNL, and this is something that will be executed over a period of 3 years and will have a maintenance contract as well for a period of 10 years. So certainly being looked at very positively by the street. And you also finally have Prism Johnson, which is the preferred bidder for a mining lease, and again the street is looking at this positively. So not much in the way of very specific news updates in the small cap and the mid cap space, Tamanna, but you have a few movers in the space nonetheless.
Sure. I would also add Zeref to that list. A newspaper report this morning saying that there's an application to the Transport Department saying let's bring in ADAS, that is automated driving systems for buses as well. I don't know how good an idea that is on Indian roads, but nevertheless it's beneficial to ZFCom, which supplies that kind of a technology. That's about 6% higher this morning. Some of those really firing up, but if you look at the advanced decline ratios, it's very, very precariously positioned. This is by no means a bull run right now. You have better advances to declines on the NSE, but look at the Nifty, look at the Sensex as well. You are seeing signs of weakness there, and I would suspect all of your quick commerce plays feeling the heat because of what BofA is also saying, underlining what Macquarie has been saying. So there you have Zomato. I want to pull up Zomato first, about 3% down. We spoke about it earlier as well. I want to pull up Swiggy as well, which is also seeing some pain coming in. So I don't know, let me come to Milan. And Milan, I know that you very tactically don't take call on index before open. I think it's a smart move. And now that we have the first few minutes in, you go stock specific, not necessarily market. But I do want to get your take on where you think the Nifty will go today. 23,800 seems very, very far away in this minute.
23,800, that's not an issue even if we see some rebound coming in the second half. I continue to see 23,800, 850 becoming a resistance or staying resistance, I will call it. And on the downside, I don't see 23,600 getting violated today, even if we see some corrective retracement. So by and large, I expect the markets to stay in a range, no major retracement and no major trending moves either.
We've seen a few, and Tamanna pointed this out. Let's pull up Reliance Industries, see whether it's holding out at this juncture, because a very key cog in the Nifty wheel, if you can call it that, up about 1/3%. For the Nifty to move decisively higher, you need those HDFC banks, you need those Reliance Industries to move higher, and it's just about losing some of that ground. Mayuresh, in terms of the fundamentals, I think we've been speaking about some of these moving parts and some things improving. If consumption does improve, you see that soft performance perhaps by retail then turns around, right? And it wasn't as bad as some had anticipated in the third quarter either. How do you see earnings driving Reliance Industries fourth quarter onwards?
Should be stable enough, Alex. And again, I think it's a sum of parts for Reliance. So largely, I think how their oil to chemical business performs is going to be very, very stable as a performance metric. As far as the retail businesses are concerned, you've already seen some element of traction happening as far as the Geo business is concerned. And therefore, the ARPU increases that have taken place over the last few months, expectations of the street are largely to be believed that there might be some more around the corner in the next few quarters as well, will mean that the relative individual strength of the telecom business should hold out. For the retail business per se, as we have been discussing and as the street probably believes, as the tax cut starts coming through in the first half and even more profound in the second half, with the expansions that we've probably seen across product categories as far as the retail business is concerned, that should show a steady state uptake. And therefore, I think the kind of utilization levels in terms of same sales store growth should show significant and sequential improvement as we speak. Again, let's not forget that both these businesses account for more than 50-55% of the overall EBIT. The downstream business, which largely includes the petchem business, might still get affected because of the macro demand supply factors. The delta spreads across product categories as far as the downstream petchem business is concerned. Pricing still remains an issue, but that might largely get offset with the retail businesses as we head into the next few quarters. And therefore, new businesses ramping up, leverage not too much on the balance sheet, expectations of improvement of on the ROE front might actually hold Reliance in good stead. So ratings and rankings are showing improvement as we speak, Alex. And these factors might act as triggers going forward.
Okay, thank you so much, Mayuresh, for joining us this morning. And it's turning out to be a morning where you really need to be a stock picker and you really need to think long term. It's not going to be an easy one to spot trends. What's easy to spot though is one section which is seeing a bit of pain. In spotlight will be the food delivery space, as Bank of America has downgraded and trimmed their targets for both Zomato and Swiggy, both seeing a bit of that pain in the opening ticks. Mahima joining us to tell us why.
Right, so Taman, as you rightly mentioned, Bank of America has downgraded Zomato to neutral from a buy rating, has cut target price to 250 from 300. Swiggy, they have downgraded to underperform from buy and cut target price to 325 from 420. Now there are a couple of reasons as to why they have done this. First one being that they're saying that the quick commerce overall picture, there has been prolonged competition and they are expecting higher losses going forward because of the dark store addition overall. In terms of medium term prospect, they remain positive, but overall picture in terms of competition is getting tougher. Food, they're not in the food delivery space, they're not seeing any material slowdown, but overall cash flow is set to sink is what they're expecting. And lastly, in terms of changing narrative in a risk aver market overall right now, they are cutting their overall earnings estimates as well for both of these counters, and these are the reasons, the specific reasons as to why they have downgraded both Zomato as well as Swiggy.
Rated both Swiggy and Zomato. I think the key line for me over here is change in narrative, and the change in narrative though of course is a bigger story. Milan on charts, I don't know if you'll have too much data for Swiggy, but at least for Zomato.
Yeah, Zomato is in a secondary downtrend, a corrective downtrend, I will call it, and it needs to watch its behavior vis-a-vis the levels of 200 to 202. And if those levels get violated, then it could be in some bit more of pain in near future.
Okay, so let's talk about a few other opportunities that we're seeing. We've not spoken about pharma so far. Milan, are you staying clear of the space till the dust settles? And I'm talking about fundamental factors here, of course, but how would you treat the overall healthcare space? Any opportunities there?
Yes, I would. There are certain sectoral opportunities here, and I see that the pharma sector, by and large, is in the bottoming out process. The secondary retracement that it was in, it's now about to end, and I see overall pharma space in general with the leading names like Cipla, Lupin, Divi's Lab, Dr. Reddy's, etc. May do quite well, but I would stay away from the second-run pharma stocks.
Okay. Okay, I'm just wondering whether there are any opportunities in the infrastructure space as well, broadly, because a few of these names have seen corrective moves, and then there has been buying interest as well. Any opportunities you're seeing here?
I will stick to the large cap area, large cap space. I would stick to L&T here and not go anywhere else. I will not be looking at the broader market space in this sector.
But what are the key levels that you would watch here for Larsen & Toubro then?
Larsen & Toubro, any move above 3,500 or so long as 3,300 stays defended, or dips up to 3,300 are excellent buying opportunities in the space.
And where would you put the stop loss?
Stop loss 3,300. That's what I'm saying. So long as it's staying above 3,300, it's absolutely safe. It is relatively stronger stock, and its relative strength is improving even with even when the markets are very into secondary retracement. So I would not look for very fast or quick gains here, but certainly that would be a key addition to the to anyone's portfolio for that matter.
Okay. Thank you for that, Milan. Always a pleasure to have you on. Give us your sense of what's working, what's not. In focus is delivery this morning. It's in the spotlight as the company is charting plans to expand its new rapid commerce service. Before we get the management on board, let's go across to Anushi to understand what's the latest.
Hey, morning, Tamanna. So talking about the rapid commercial business, commerce and the T2C brands of the business, let's start with the overall management commentary that they have given. So they have said that the dark store volume stand at about 500 orders per day. The break even is expected at 700 to 800 orders per day this per store. Even if you look at in terms of the delivery fee, that includes the warehousing cost ranging from rupees 80 to 100 per order. And the plan is to open about 50 dark stores across the top 10 city and expect full year revenue of about 80 to 100 crore from rapid commerce which are there. Margins, if we look at, is in the range of 17 to 20%, and the presence currently is in Bengaluru, Hyderabad and Chennai. The schedule is to add around another 15 clients by the end of the next quarter. Now what has happened with delivery, if we look at the Q3 results, we had seen about a 8.4% of an uptick in terms of where the revenue is concerned, while the EBITDA was down about 6.3%, with the margins remaining in the similar range of 4.3 to 4.9%. 9%. Net profit stood at 25 crore as compared to 12 crore last year. In terms of the segmental performance also, if we see, the express parcel revenue was up around 3%, while supply chain services revenue was up at 222 crore as compared to 173 crore. Again, express parcel service margin that we are looking at, is margin had declined by around 500 basis points from 20.6% to 15.6%. Higher rents associated with the opening of the new mega facilities that we had seen in Bangalore. So interesting would be to understand how they plan to expand the rapid commerce business, which is there, the targets, the expansion plans, and beyond. So this is the overall point of conversation about the growth outlook for the rapid commerce business of delivery that should be in focus.
Okay, rapid commerce in focus one way or the other today. Rapid commerce in focus, not for the best of reasons, because you have, a note coming out and saying that perhaps the narrative has changed. But for Milind Sharma, the narrative is just beginning. He's head of rapid commerce and D2C brands at Delivery. Milind, great to have you on the show, and thank you so much for your time. Tell us why the excitement around rapid commerce at this stage, when it's kind of a been there, done that story for the space, or do you see much more to go?
Good morning, Tamanna. Peter, thank you for having me here. So honestly, I think we are just getting started on the rapid commerce bit. The idea is, of course, to deliver to end customers of the brands we work with in anywhere between 30 minutes to 2 hours. I think we started off the service in Bangalore, Hyderabad, and Chennai as of now. And I think we are seeing early great results. I think the SLAs are intact. We can see there's a delight factor on the customer side when we are able to deliver products in a quick manner. So I think the service absolutely is, of course, it's here to stay. I think with the recent boom of Q-commerce, the consumer preferences have changed. And I think it's our duty to get products to our customers of the clients we work with in a quick manner. Hence, we are building this service.
Two-part question. One is, when you say you will, be delivering from 30 minutes to 2 hours, give us some context. What kind of products will you deliver in this time frame compared to what the current delivery time is?
So right now, if I talk about the setup we have, so we are live in 3 cities, as I mentioned. We are running close to 20 rapid stores in Bangalore, Hyderabad, and Chennai. We are currently live with beauty, personal care as a category. We are live with healthcare, nutrition, baby care, some bit of apparel, fashion as well. So these are the categories we have gone live with. We are working with more than 5 brands already, and we are integrating with more than 20 brands. So these integrations are work in progress. Majority of these brands already work with delivery on the express parcel side. So that's on the category bit. Yeah.
And it comes back to my first question. Have you been a little late in getting there? Because some of these categories you've mentioned, and maybe not with the specific partners that you have, but some of those categories that you've mentioned are available in 15 minutes. With competitors, say a Blinkit for example. So, and we're seeing now from their balance sheet that as much as there's customer delight, it's a burn on their balance sheet. So I'm trying to understand how you are positioning yourself differently.
So Tamanna, on this, if I just talk about, so basically we are a third-party logistics company. Sure. We have been in the business since 2011. For us to launch Rapid as a service, of course, it was a conscious call. This is something which our clients needed. Our clients, basically the D2C brands, they also do sell on quick commerce platforms. So for us to launch the service, the idea was that we need to get to customers in a faster fashion. I don't think it's late. If I talk about the express business, I think that's growing on a year-on-year basis. Brands, honestly, our realization was that brands, of course, want to reach to their customers at a faster speed, and they needed a third-party variable cost service provider where we come in, and we are now trying to deliver to their customers in a quick manner. So yeah. So basically, if I talk about the growth bit, so when we launched the service in January, we have grown from a 200 order per day scale to already we are doing 3,500, 4,000 orders per day. So we have grown 10x in 8 weeks as we have launched the service.
Okay. Milind, good morning. This is Hiral on this side. So when you talk about almost 3 to 3,500 orders per day. Does that mean that you've already broken even? I mean, you've reached a break-even point per store?
Not yet, Hiril. So I think the business is early. As I said, we have just launched this service 8 weeks back. So it is still early to comment on that bit. But of course, our idea is to become profitable as soon as possible for this business line. I think we have, of course, taken aggressive targets. We want to grow quickly.
Milind, I'll change my question then. So per store, if you have to look at achieving break-even, how many orders will you have to hit, and what should be that average order value?
So we work on a per transaction basis. So basically what we do is we charge our clients on a fulfillment and delivery side. So basically the cost, the 80 to 100 rupee, I think the number, this is something you also mentioned a while back. So that is something we are charging our customers. This is a variable charge. We don't charge any fixed cost to them. As we have built pricing for this service. So this is something we are charging them. And of course, there's a break-even level. It will largely depend on what is the size of my store, how many people I have deployed on those stores. Because I'll tell you, my store will look very different in a city like Bangalore versus what will look like in a city like Chennai. A store in a tier 2 city might be much smaller than what I'll probably have in a large metro. So of course that order per day number varies. So I think it'll be anywhere between 500 to 700 orders per day at a store level. And we are seeing some early signs, but I think it'll be too early for me to comment on this bit.
Milind, I'm a little confused over here. You're saying 700 to 800 orders is what you need per store to break even. But you just mentioned earlier as well that 3,500 is what you've already reached. So is the 3,500 orders per day on a cumulative basis or per store basis? Okay.
It's on a cumulative basis.
And how long will you take to actually be profitable from here on? Because I'm sure there are multiple aspects in terms of your expansion plans as well. But when do you see break-even? When do you see profitability hitting in?
So honestly, I would love to do that within 6 months of launching any store. So any store we launch, we would love to become profitable / at a break-even stage within 6 months of launching the store. But we of course see the early signs. We are growing on a month-on-month basis, week-on-week basis, as I mentioned. But it is still too early. We are just 8 weeks into this business, being very honest with you.
Oh, absolutely. And Milind, we're glad you've come and spoken to us about this business. We are asking you every question I think that viewers and investors would want to know. So I'm glad you're taking it in that spirit as well, because this is what people want to know about quick commerce. It's a great service. Does it make money? So let me come to the question about CapEx. What is the kind of spends you're expecting in the rapid commerce segment? What is the kind of CapEx penciled in terms of the number of stores you'll need to actually gain momentum?
So I think for this FY, we have taken a target of 50 stores. I think we'll be launching this across the top 8-10 metros to begin with. So basically Delhi, NCR, Mumbai, Pune, Ahmedabad, Jaipur, Chandigarh will be the cities we'll launch Rapid as a service. So I think that's the idea. Honestly, on the CapEx bit, I think we are maintaining a very lean infrastructure. A very lean CapEx is being deployed at our Rapid stores. So these are typically 3,000 to 4,000 square feet facilities. We have minimal infrastructure. So basically this is racking, IT infrastructure is there, and some bit of, it will look something very similar to a small processing center, which we already run at delivery. Yep.
Let me tell you why I'm asking that question, because the overall CapEx for the company is expected to decline to 3.5%. But then you have embarked on this business which needs a lot of spends upfront. I'm wondering how that's going to work in terms of efficiencies and actually rolling out the service as per expectations.
Honestly, Tamanna, it's not a high capex model, which basically we are operating at. So I think on the cost side, we are keeping a very lean structure, being very honest. It's as low as 10 lakh rupee per dark store. I think that's the number we are targeting. So yeah.
Interesting. 10 lakh rupee per dark store. So maybe that could be sort of the secret sauce because you're in an extremely competitive space. Are partnerships and collaborations also the other part of the equation that you will look at?
Absolutely. I think that is the key focus area for us. So as I mentioned, we are already integrating with more than 20-25 odd brands for this service. I think we are already live with 5-6 odd brands. The best thing here is that these brands, the marketplaces, we already work with them on the express business side. So we have a prior relationship with some of them. The relationship is as old as 10 years. So yeah, the idea is to absolutely go out, expand rapidly, and basically build on the existing relationships and give great service levels to the brands we already work with.
So Milind, overall, if you have to look at this rapid business that you are looking at, what's your revenue expectation in the first 2 to 3 years? So say, for example, in terms of FY25, you'll hardly have a couple of weeks to account for. But let's look at 26 and 27, the revenue expectation, and secondly, what's the kind of margins that you would be aiming to achieve?
From the revenue front, I'll be honest. So for next financial year, we would love to reach to a 100 CR number. I think that is something which got called out in our last earnings call as well. So that is the number we are looking at, we are targeting. I cannot really comment on the FY27 as of now, but at least that's the first benchmark, first threshold we want to reach.
Okay.
And on the profit, on the, I think the margin bit, I'll just give a quick point. I think the margin will be very similar to how we operate in our express business side. It will be in the same lines.
Okay. Thank you, Milind. Really appreciate your time and answering all of our questions, and best of luck with
Thank you for having me here. Have a good day.
Yeah, it sounds interesting. Delivery in focus this morning. Let's pull up that stock. Mildly in the red, but relatively doing better than Zomato and Swiggy this morning. Focus now on Suven Pharma. The company is doing fairly well in the CDMO space, and we're going across to Varsha now to understand what the setup is before we get to the conversation.
Thank you, Tamanna, for that. As you rightly said, Suven Pharma is all about CDMO, although company, operates in 3 segments. But let's start with the CDMO, which is the next leg of growth for the company. It generates 53% of revenue when it comes to CDMO services and offers end-to-end CDMO capabilities in segments. And through acquisition of NJ Bio, they've gained to extensive library when it comes to different products. And company has robust pipeline of around 100 plus molecules when it comes to CDMO. While if I were to talk about the specialty chemical business, which contributes almost 7% of sales, they serve innovators when it comes to in agrochemical, cosmetics and electronic chemicals, and they operate dedicated facility in Vizag with potential of further capacity expansion. They've also started cost saving initiatives which will actually help to aid margins when it comes to specialty segment. While if I were to talk about their API, contributes 40% of sales. They are top 3 player in 8 out of 10 top molecules in their API portfolio, and they've built cost position through backward integration, which has helped company to aid margins. Lastly, if I were to talk about key highlights, what they want to take this business to, they aim to reach $1 billion in sales by 2030. CDMO is expected to contribute almost 80% of sales by 2030, and the growth is projected in all 3 business segments that the company operates in. And they are actually have a strong focus in a class of drugs for treating cancer, which are called ADCs, and they're also open when it comes to M&A, that is mergers and acquisition, to acquire specialized capabilities such as peptides.
Right. Thank you, Varsha, for getting us the details. The stock is though under pressure today, but let's take this conversation forward with Vivek Sharma, Executive Chairman at Suven Pharmaceuticals. Vivek, good morning and welcome to the show. This is Hiral on this side. My first question coming to you is, an interesting space that you are in, specifically the timing with regards to where CDMO as a business goes. Now, when we look at what you have given as your vision, a $1 billion number by FY30, What is it that is going to drive this kind of growth to reach $1 billion?
Yeah, good morning and thanks for having me on the show again. So I think few things, let's understand the macro environment. If you look at large pharma companies or biotech, they're all looking for partners like us to accelerate their drug delivery as well as they improve their cost margins. They are all under tremendous pressure to bring drugs to the market sooner and cost effectively. The costs have gone up and then drug delivery has been delayed, right? So we as a CDMO provider comes in play. The overall outsourcing has been on an increasing trend. If you look at intermediates and APIs, the amount of outsourcing that gets done, that keeps increasing day by day, as well as R&D capabilities and other deliveries, other product deliveries that large pharma and biotech is looking at. So as a key partner to the supply chain, we believe that the CDMO industry will continue to grow over the next foreseeable future. Where do we come in play? And India has built a very nice network of regulatory compliance sites, including what we do at Suven, which are really essential for these large companies and biotechs to be successful. So given the capabilities we have, given the challenges we see that these companies faces and will continue to faces, and given our track record and what we have built as a capacity, we believe that we have a very high chance of succeeding organic growth into the different areas that we have built out for our growth, which are the three key areas which we talk about as CDMO, the API, ADC, and oligo. We have an API plus business and a specialty chemical business, and all three are growing. And we expect that growth will allow us to work with some combination of inorganic to reach that $1 billion target that we have taken for us.
Right. That's interesting, Vivek, to hear. So 53% of your revenues come in from the CDMO business, right? Now, when you talk about this segment itself, are you now seeing increased inquiries as well? And if so, I mean, the previous conversation, that is what our takeaway was. What is the kind of conversion rate that you're sitting on in terms of the inquiries?
So we are not only seeing increased inquiries, we are seeing increased interest in relationships. So I'll just give an example. We were just in New York last week for a very large pharma event called DCAT, where all the suppliers and all the partners and parties like us, they come and meet face to face. We're very happy that we had a very large number of meetings with customers. And this is the first time that we had an event like this after acquisition of Sapala and acquisition of NJ Bio. And I'm very happy to share that a lot of our meetings were focused on integrated selling. Means if we were meeting a API customer, they wanted to learn more about ADC and oligo capabilities and can they buy those things from us. When we met an ADC customer, a very large company, they wanted to understand our chemistry capabilities and our oligo capabilities because they had a need to buy that as well. We met a very large oligo customer and they, again, same thing. They wanted to understand our broader needs so they can buy things from us. So that was a very positive feedback from us. The deepening of relationship, we met customers who have been working with the company for 26, 28 years. There were customers who were 20 years. There were customers who work all their projects with us for years and years. And there are customers who are just starting us and they've given us their significant portion of their supply chain.
Right. So Vivek, with all of this said and done now, how much is the kind of growth that you're expecting in terms of where the CDMO business goes? And where do you plan to take it from here on in terms of the contribution?
So listen, I think we have given a broad guideline of $1 billion. That's what we are sticking to.
But that's the overall business, right?
That's the overall business. But CDMO is the key driver for growth and the value creator. It'll play a significant part in the growth. That's how we see it. We have not broken down the numbers for the analysts by business. And we expect that, organically plus with some help from inorganic, that we will be able to achieve that overall $1 billion target.
Now, when you talk about specialty chemicals as well, will that continue to remain a low-key segment because it's just around 7 to 8% in terms of contribution? So how are you seeing specialty chemicals as a business grow from here on?
No, we have high hopes from that business. It is not a low-key segment. We have invested in talent. We have invested in capacity. We have invested in relationship. I myself was in Europe with very large customer recently, and we have very high hopes with the potential that the business has. And we are really excited with the wins that we are seeing in our favor. our credibility with the kind of commitments that we have been able to deliver, with the value that we are able to deliver to the customer. Customer want us to invest more and then continue to grow with them. So we are excited with the potential.
Yeah, but Vivek, the reason I ask you this is because 53% is CDMO, API is around 40, 7% is your specialty chemicals currently. Now, in terms of your analyst meet, you've categorically mentioned that you want CDMO to contribute almost 80% of the sales by 2030. So if CDMO is going to become 80%, how are you going to focus the remainder 20% between specialty and API? How does that change? And then in turn, how does your margin picture change?
Yeah, so I think few things. Listen, Spec Chem is a very important piece of the business. We serve very large customers. We are partners with very large customers, and it's a very small base compared to the CDMO business, and it's going to grow. Secondly, keep in mind what we do for Spec Chem is also part of CDMO. It is the CDMO piece that we do for Spec Chem. It is not. We do not have a product of our own. We work with our partners to really build what they need. So that is also part of the CDMO growth.
Okay. And with acquisitions like Cohance and NJ Bio, how does that impact your margins overall?
Now, we are committed to maintain very high margins. So while we see some short-term challenges with some of these businesses, but we are looking at cost efficiencies, pricing, to really make sure that we continue to deliver the margin expectations that we have been set for the investors, as well as in mid-30s. And as you know, the different businesses are at different sites. So sometimes we see challenges in one business for a short time. But we are overall excited that we think we have a path to really achieve and keep delivering the mid-30s margin that we have been delivering and committing to our investors.
So when do you think you will be going back to above 40% kind of margins, which you did achieve in financial year 22, or even for that matter, FY23, because those 2 years were really strong. 43-44% was the kind of margin profile you had. Your profitability was in that range of 400 to 450 odd crores. Do you see that happening in FY25-26 anytime soon?
Our focus is to maintain what we have, mid-30s, and then keep growing the business as fast as we can. Those were unusual years, not just for us, but for everybody else in the industry. And we are fortunate to really take advantage of that situation for our investors as well as customers. But we are continuing to improve margins and then targeting mid-30s margin consistently. And if there's an opportunity, we'll try to do better.
Okay. So as you grow from here on, and you're saying you're going to accelerate from here on to reach that vision 2030, right? What is that number that you're aiming for in terms of 26?
Accelerated growth is the target that we have given. We've not given a specific number. So we will continue to maintain our growth rate that we have been delivering at to achieve the $1 billion target for the 2030. So you will see an accelerated growth in revenue as well as EBITDA for 26.
Okay. And any more acquisitions that could be in the pipeline? Because you have made a couple of them, at least in the last 3 to 4 years. So if so, what segments would they be into?
Yeah, we've done 2 in the last 6 months. We acquired Sapala and oligonucleotide in Hyderabad, and we acquired NJ Bio in Princeton. And we're very excited with those acquisitions because they not only bring a very unique capability, but they bring a world-class team to us as well as customers, right? So we're very excited. What are we looking at? So yes, there will be more acquisitions, and they're opportunistic as we look at as to what is available. But we are looking things in peptides, we're looking things in flow chemistry, some unique capabilities that allows us to differentiate ourselves and then capture that market.
Okay, and will they all be funded through internal accruals, or what's the plan?
No, it's all internal accruals. We have a very strong balance sheet, and we're optimistic that we'll be able to fund through internal accruals.
Okay, and any capacity expansion plans on the cards in the near future?
And so we expanded the API capacity in the last few years. We are working on ADC capability expansion and adding conjugation suites in NJ Bio in Princeton. That was part of the acquisition. And for oligo, we are expanding and building a GLP site in Hyderabad that will be completed by next quarter. So there are plans in each of the business to really look at capacity and expand that.
Right, so I think expansion is something that is going to be key, but the vision and the route that you take to reach your vision 2030 is something that the street and the investors will be watching out for as well. Thank you, Vivek, so much for joining us on the show and sharing the view. So that's the management of Suven Pharma. What's interesting is a CDMO company, which gets revenues to the tune of almost 53% from CDMO, plans to increase the contribution to almost 80% from here on. The stock has been under pressure, and that's the reason being is because the last 2 years have been pretty subdued as compared to what the company achieved in FY22 as well as FY23. So that's one of the reasons why you're seeing this kind of pressure. Let's just quickly pull up a 1-year chart or even a 6-month chart to understand the kind of performance in terms of the stock price. There you go, 12 months, 73%. There has been a blip in between, but the pressure specifically from a raw material perspective continues. The kind of blips that have come in this space does continue as well, but CDMO is the space that analysts are betting big on as well. So that's with regards to Suven Pharma. But let's quickly first again take a look at what markets are doing at this hour. It's just around 10 o'clock now. So 23,644. We've given up those gains. We're nearly trading at the day's lowest levels in terms of Nifty 50, but on a flattish note. If you see in terms of Bank Nifty as well, let's just quickly pull up a Bank Nifty and then we'll slip into a short break. There you go. Contribution continues 0.2% higher. So the FI buying that is happening in the BFSI space, and probably IT is something that they're taking a sneak peek at as well. But let's quickly slip on the short break. On the other side, we'll put the spotlight on some of the top stocks that are buzzing at the moment, as well as bring in Vaibhav Sangvi, CEO at Ask Hedge Solutions, to talk about markets and whether you should be invested or taking fresh positions from here on. Please stay tuned.
A big proponent of value investing principles. But what is Govind Parik's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Open. But first up, onto the big brokerage call of the day, you have Nuvama, which has gone ahead and initiated coverage with a buy rating on Lakshmi Dental. And they have set a target price of 5,070. Harsh joins in with more details. Harsh, the stock did see some strong moves on opening, but still up around 1.5%, has given up some of the gains. What is making the brokerage positive?
A 40% upside. So really, really healthy. They've initiated coverage. They believe that formalization with regard to dental and dental care in India will largely be led by a consolidation, and one of the plays of that is surely Lakshmi Dental. Now, in terms of the market itself, they believe that it's an underpenetrated market. This is Nuvama's view. It's got Lakshmi Dental in particular has a wide range of product offering, 22,000 plus strong dental network, which is also unique. Catalysts with regard to the stock and the lab business is one, there's a shift to metal free products which will likely drive numbers. You'll also see digitalization, especially with physical impressions now shifting to digital. That is the other big shift with regard to the business itself, and there's a larger focus with regard to export growth as well. So those maybe 2 to 3 levers will well keep the growth with regard to this business poised. You are seeing the lab business revenue growth expected to be around the 20% CAGR number, so extremely healthy on that count. Margins in the meantime to expand by over 9% absolute. So the margin number will sit at around 22% is what they're penciling in for FY27. They value this at 40 times FY27 expected earnings. It's still a 25% discount to Polymedicure, not exactly a peer, but nonetheless it's something that they've looked at, and they've said that it's at a 25% discount. And there's also another Chinese company. So they've taken a couple of these as related companies and therefore compared their valuations. Key risks being one, slow ramp up with regard to the aligners product, geographic concentration, and a pending CBI case. Those could well be overhangs as well.
Right, so that's with regards to where Lakshmi Dental goes. Thank you, Harsh, for getting us the details. But moving on, you have Goldman Sachs also who's issued a note on AU Small Finance Bank, and they're highlighting its industry-leading earnings growth profile. The brokerage, I beg your pardon, has gone ahead and cut the target price on the counter despite maintaining a buy rating. Harsh, that you're with us, a sector that you track pretty closely. What are you picking up? 2.5% up move today.
Yeah, absolutely. They're calling this growth at the right price, and that's what's really making it attractive for them. 31% earnings compounding is what they are seeing on this one. Of course, EPS may not be the best metric, but we did some analysis earlier today, and even in terms of price to book, this one is trading at over a 50% discount to the 5-year average price to book. So growth at at the right price is, I believe, what Goldman Sachs seems to be really, really punching on this one. Valuation derating, they believe, is an opportunity. Sector leading earnings growth, 31%. I did speak about that, FY25 to 27. Believe AU will start likely delivering with a strong growth momentum in FY26, which could be a lever for the re-rating. And that's where Goldman Sachs believes that AU stands out. Of course, they've cut the target price, but just by 2% thereabouts. Believe it's just a minor adjustment, and therefore the upside even from here looking very, very healthy on this one.
Right, so that's with regards to AU Small Finance Bank. Clearly 2.5% is the kind of up move. Let's just pull up a 1-year chart as well, because there has been some bit of a downtick, that pressure that has come in terms of microfinance companies and small banks. They go high, and then from the peak, the kind of downtick the stock is seen, I think 750 is the peak that the stock did achieve. It's again come down to 572, so further upside that could potentially be on the cards. But moving on, another stock which is seeing some smart moves today is NCC, and this is on the back of the orders that they've got, and the number is pretty strong. 10,000 crores, little over that is what they've got from BSNL. Anushi is getting us more details. Anushi, over to you.
Hey, morning, Hiral. So it's a considerable big order that, as you've mentioned, it's a size of around 10,805 crore order that they have NCC has received from BSNL, and this is divided into two orders that you're looking at. The order one valued at around 2,647 crore, while the second order is for the size of 8,157 crore, and this is for order for BharatNet in Uttarakhand and Madhya Pradesh. Even in the past, if we have seen in the last few weeks, we have seen a couple of counters. RVNL being one of them in focus on the back of receiving orders from BSNL. So that's where it is go. If you look at the construction period for the same, that stands at 3 years along with a maintenance contract for 10 years. So considering these factors into consideration, order inflow, if we see in March 25 so far, it has stood at about 14,415 crore. A strong order book order inflow in terms of the company's projections which are there in Feb 25. This number stood at 219 crore. So strong pickup in terms of ordering for March onwards that we are looking at, with this making up the bigger chunk of the order size which is already there. If you look at the estimated order book, considering these order inflows which are there, that roughly stands at about 70,181 crore. Do note that the company, while it does remain optimistic on the cautiously optimistic on the revenue growth prospects of the business going forward for FY26, it is expecting a similar trend it has seen in terms of revenue growth of around 25%. So a big order is what we are looking at. 3 years is the construction period, along with the 10 years of a maintenance contract clause also added to it. So NCC in focus on the back of this order win.
Right. So that's with regards to where NCC goes. 6.5% is the kind of up move that you're seeing on this counter. In fact, let's just pull up few of the other stocks. 1 minute. Yeah, a few of the other stocks which are actually seeing some bit of an up move in today's session on the back of an order win. So if you talk about even Arvind Smart Space, they've actually gone ahead and sold around 200 plots which were valued at 180 crores. Let's pull up that one on the screens. There you go. 1% is the kind of up move that you're seeing on this one. Welspun Enterprises also has received an order worth around 209 crores. So that's a stock which is in focus. Advait Energy Transition, that stock again, the company has emerged a successful bidder for a L1 stage for the supply and installation package of transmission lines. So you have a Advait Energy Transmission, which is a recent listing as well, which is in focus in today's session. Apart from that, you have NCC we already spoke about, but Bharat Heavy Electricals is another one that we have been watching out for in trade. So these are a few of the stocks that have been buzzing on the back of order wins. But moving on, ZF Commercial, that stock, let's pull up that one on the screens and see what the stock is doing. 6.5% up move, trading at the day's highest levels. And this is after the Ministry of Road Transport and Highways has announced a latest proposal for buses and trucks. Now, what the proposal is, Mika joins us with the highlights of the new proposal. First, Mika, explain to us what is the new proposal and how does it benefit a ZF Commercial?
So in terms of what has been proposed, the MORTH has mandated 2 systems for buses and trucks to be taken into consideration. One is the Advanced Emergency Braking System, or AEBS, and ADAS, which is the Advanced Driver Assistance Systems. And the proposed mandate timeline for new vehicles is October 2026, and for existing vehicles, it's October 2026, and for new vehicles, April 2026. Now, ZF Commercial is a major maker of both these systems. One, in terms of how it could benefit. Now, addition of both these systems can add content per vehicle of up to 80,000 rupees. Even if you consider and assume a 50,000 content addition from October of 2026, this could help ZF Commercial's EPS. As per analysts, the potential increase in their FY27 and 28 EPS could be of 10% and 19%. And when you look at the change of estimates in terms of their revenue CAGR versus an old estimate of 14%, this could increase the estimate of a 30% CAGR, and for the EPS, a 29% EPS CAGR over FY26 to 28 versus an earlier estimate of 18%.
Right. Thank you for getting us the details. So ZF Commercial, potential increase in revenues is what the street is eyeing as well on the back of the new proposal. 5.7% is the kind of up move that we've seen on this counter. But moving on, Zomato and Jio Financial Services, These are among the top companies that could potentially be included, that will be included in Nifty from tomorrow as a part of the semi-annual rejig. Somit Sen joins us with the details of the inflows and outflows that can be expected once the rejig comes into effect. Somit, over to you.
Well, multiple stocks remain in focus on the back of the Nifty rejig, which was announced a month back. But whatever changes were announced a month back, the flows regarding the same, in fact, the passive flows regarding the same, are expected to happen on March 27th. So we give to you which are the stocks that we need to keep an eye out for. Firstly, it's Zomato, where inflows of around $321 million are expected on March 27th, which is nearly 2.6 times its 20-day average volumes. For Jio Financial, inflows of around $200 million are expected. Apart from that, keep an eye out for Indian Hotels, Power Grid and CG Power. Inflows of anywhere between $47 to $85 million are expected in these three stocks. Now, when it comes to outflows, Britannia is a stock that is expected to see the highest amount of outflow of close to $153 million, which is nearly 8 times its 20-day average volume. BPCL is expected to see an outflow of close to $145 million, which is nearly 4.6 times its 20-day average volume. Well, apart from that, it's Bajaj Finance, Kotak Mahindra Bank and NTPC, which we should keep an eye out for, which could see an outflow of anywhere between $72 to $79 million, which is nearly 1.2 to 0.6 times its 20-day average volume. Now, this is the net inflow and outflow that we are expecting in these stocks across all the indices, that is Nifty, Nifty Next 50, Nifty Mid Cap, Nifty Small Cap, and also the CPIC index that we have. So keep an eye out for a host of stocks on the back of the Nifty rejig, which is expected to happen on March 27th.
So tomorrow is the day we should be watching out for Zomato. Jio Financial Services seeing the highest in that range of $200 to $391 million, and then the rest follows with the Britannia, BPCL, Indian Hotels, Power Grid, as well as the CG Power. But moving on, we've been bringing you exclusive action from the Motilal Oswal Financial Services 11th Ideation Conference. We spoke to Vijay Anand, our Executive Director at City Union Bank, about the bank's outlook on the MSME segment. Let's quickly listen in to a slice of that conversation.
So our focus on MSME continues. So our heart of lending is MSME.
Right.
We see the good opportunity there, and the growth rate has been good, and we wanted to be at least 2% more than the industry growth rate in terms of MSME. I think there is a plenty of opportunities there in this space. That's what I feel.
But is there? Are you seeing in what range would you see your loan book growing? Your MSME book growing going forward?
We would be at around 13-14%. That's a number which we are looking at in MSME space.
Okay.
We are quite comfortable with that also.
Okay. And now the RBI has given a green signal in terms of bank lending to NBFCs. They have reduced risk weights, but unsecured lending on that front, risk weights still remain high, and there is also a lot of scrutiny around gold loans as well. So kind of wanted to understand, how is the bank looking at it? I mean, are you seeing lower unsecured loans and higher gold loans? How is that playing out?
See, traditionally as a bank, we have never focused on unsecured. So that concept continues. So we really don't want to be a big unsecured player, and we want to stay away from that. In terms of gold loans, we are having a good amount of book in agri gold loans and non-agri gold loans. We wanted to focus there as well, and there are recent regulations from regulator we have compiled with, and we are confident of taking this book, and there is plenty of opportunity in that segment as well, in both agri and non-agri.
Okay. Sir, any number if you could throw in for us where you could see your gold loan book?
We are growing at 10-12%, and that trend should continue. We don't see an issue there.
Okay. Sir, you have a high concentration in Tamil Nadu, right? But there is a lower concentration, of your CASA in total deposits, and that is also keeping your cost of funds high. So, what is your outlook on the same?
So CASA has quite been a challenge. So we are working towards that. We have devised a strategy for that, how we need to increase the CASA. We have coming out with feet on street for CASA, and we wanted to focus in our branch area network, which we are confident of pulling it out.
Okay.
CASA has been a challenge, which we are confident of pulling it out.
But if you could, give us some guidance on where do you see your CASA going forward?
We wanted to be at 50% in overall deposit growth, because we want the loan book also growing in the same way, because we want our LDR to be around 85%. So in that case, we need to grow our deposit book, which we are confident of.
Okay. Sir, a lot of banks are actually, were facing liquidity challenges, given that liquidity in the banking system was in the, has been in deficit for some time. And RBI has been taking a lot of, measures to, boost liquidity. How is your bank, coping with these challenges?
Our LCR is quite pretty stable. When I'm speaking to you today, we are at 119% of LCR. And we have an internal threshold of 110%. We don't see an issue, which we are confident of making it for sure.
Okay.
So that's
okay.
been.
Okay, sir, on your NIMs, I wanted to understand, NIMs have been at 3.6%. Now that we are in the rate cut cycle, any impact on margins that you would expect going forward from here on?
So two things. We were at 3.63 when we closed the last quarter. With this rate cut, we expect our NIMs to go down. We should be around 3.53 to 3.55. This is a number which we are looking at. 3.5 to 3.55. This is a number which we are looking at. We will eventually reduce our SAR rate as well.
Okay.
That's a piece which we have.
By how much, sir?
We should reduce by 25 bips.
Okay.
We are in the process. We have already reduced for some piece.
And this guidance for NIM, this would be for the next financial year?
Next financial year, we should be somewhere between 3.5 to 3.55. That's a number which we are looking at.
Okay.
Right, so that's with regards to City Union Bank, the stock trading pretty much flat as we speak. But moving on to some market action and what's in store from here on. Joining us is Vaibhav Sanghvi, CEO at Ask Head Solutions. Vaibhav, good morning and welcome to the show. Hiral on the side. My first question coming to you is, what do you make of the current market scenario, the kind of euphoria that we saw probably last week and the start of this week on Monday? Cooling off did happen in terms of yesterday's session. However, how would you trade?
See, I think it was a much needed relief from a market perspective from the bottoms. But now what has been happening is, there is definitely a reason behind it, in the sense that we do expect that from an economic standpoint, FY26, in all likelihood, we would be surprised on the GDP growth on the upside. Why do we say that? Is because, while this government has always been focused on investments and that is pretty much in place, what has got added is basically a good amount of welfare schemes along with incentives on consumption, or in terms of increasing the disposable income in the hands of consumer by some tax rebates. So what we do think is, in the coming year, a combination of both investments and consumption will probably, surprise the GDP growth on the upside as against your expectations. Having said that, the relief rally kind of has happened. There are a few global variables which are out there still waiting to get settled. From tariffs perspective to global growth forecasts. We do expect that, I think, that noise will also settle in, within few months. And that is where we will start seeing some amount of structural movement from a market perspective on the upside. Large cap continues to be pretty attractive, whereas mid and small cap, we are still cautious.
Okay, so Vaibhav, let's incorporate the other variables that could come into this mix. The street is watching out for the 2nd of April in terms of what could be announced in terms of reciprocal tariffs. Some kind of probably, initiating comments coming in with regards to pharma and auto, but no one knows as to what side of the banter will Trump lean on because of the mood swings that he has, right? So taking the tariffs into consideration, what is it that you should be watching out for according to you? Do you think avoid sectors like auto and pharma would be the best thing to do, or do you think they will be insulated?
No, of course, there is definitely an event lined up, no doubt about it. And it is best from a trader's perspective, it is best to kind of avoid at this point in time, let it come out in terms of the announcements. But from a strategic perspective, right, I do think that, this April 2 or probably the potential trade deal with us, can be a huge opportunity going forward. Why do I say that? Is because currently, looking at the way China has been imposed in terms of tariffs, I'm not witnessing any kind of major activity in terms of them arriving at a trade deal pretty soon. probably it kind of increases our competency in some sense. And over a longer period of time, if we are able to, have that first move advantage, and in any case have a strategic kind of relationships going, which in our view, is the case. The benefits of the trade deal, along with whatever is happening from a macro perspective, from a tariffs perspective, I think from a medium to long term perspective, it's a positive for India rather than anything else. So while it may be temporary volatility in terms of what autos and pharma can kind of come about, but from a medium term perspective, I think it will be positive on an overall basis.
So we will be positive in terms of a longer term perspective. How are you looking at valuations of Indian markets at the current point in time versus what we were earlier? Because much cheaper it's compared to the last 3-4 months. But if that is the scenario, from a valuation perspective, where would you see investments happening now?
See, I think valuations, of course, from a large cap perspective are looking reasonable. At the same time, what we also need to understand is that the valuations at this point in time, we are looking after these kind of earnings downgrades or forecasts. Now, as we look at GDP growth kind of resuming in the next year, my sense is in the second half of FY26 is where we will probably see some amount of stability to earnings and probably growth resuming in higher than expected is what I would assume. So valuations are a factor of both your earnings and your multiples, right? So if just by the sake of earnings growth, the potential of valuations to increase becomes a little higher. So my sense is we are at a comfortable scenario. And at the same time, we are looking at a backdrop where there has been considerable selling from an FPI perspective. So any kind of reallocation of money towards India in along with the domestic flow, which is continuing, I wouldn't be surprised that we may probably inch up in terms of the valuations, especially on the large cap. Small and mid cap, I'm still avoid.
Okay, so avoid a small and mid cap, but valuations look pretty reasonable or somewhat reasonable in terms of the large cap space is the word coming in there. But let's talk about sectors. Now that you're seeing the return of FIs into the country, do you think this is going to be sustainable? And if so, the usual trend is that you see funds flowing into the BFSI space and the IT space. IT, I think people are still shying away from that sector, taking into consideration the kind of job cuts that are happening, probably the discretionary spends that are on the cut on a global level. But if so, do you think banking could be a space that the retail investors in India also should be watching out for?
Yeah, of course. I think, whenever we've seen in history as well, when FPI flow kind of comes about, banking and finance would be the natural ones where the money actually goes in, purely because if you see the banking financial weights, it's more than about 25-30% in terms of their portfolio allocation. So whenever any dollar comes, 30% of it straight away goes to these sectors. And when we talk about banking, I think my sense is basically it is largely likely to go towards the top tier private banks at the beginning. And then probably, populate to the mid caps where there is decent sized growth opportunities with a clear eye on control of your NPAs. So all in all, yes, BFSI is a sector to look at. And with respect to IT, which you mentioned, right, I think you've typically seen that March quarter is generally a dull quarter, from the IT companies' standpoint. Along with there are few events in terms of the IT companies where guidance would be kind of announced for the next year as well. So it tends to be a little volatile and probably historically it has been weaker. So we'll wait for April, March end quarter results to kind of get declared, the guidance being kind of issued, and then we'll probably take a fresh call, from an IT sector perspective.
Okay. And if, Vaibhav, someone wants to start investing at the current juncture where we are at, which sectors apart from BFSI or the major ones should one start looking at where you see value and growth?
See, our clear view is that looking at what the government has done in terms of the boost in terms of consumption, I think consumers as a sector, has to be looked at for the next 12 to 24 months. Of course, you will not see right at this point in time in terms of some amount of traction coming in, but post April, when you
I think we've just lost the audio with Weber. We'll try getting him back. But what's interesting is the kind of positivity that Weber shares in terms of the large cap space. He's still in a void with regards to the small and mid cap space, and that's where the pressure is building in. That's where the volatility is high as well. Weber is back with us. Weber, yes, you can continue because I think we just lost your audio. But overall, in terms of sectors, what's your view?
Which I was just saying that consumption is a sector which we are kind of bullish. The reason being that the government has been, has implemented some amount of measure where it increases their disposable income. So in effect, I think this is a sector where the valuations have corrected. Two, the ownership is not much there, from a sectoral perspective. So I think the moment the earnings starts getting, positive on these sectors, you will see disproportionate increase in terms of the share prices as well. So that's something to look for, initially starting with durables, consumer discretionary, and over a period of time flowing into consumer staples as well. So, and lastly, from a financial services perspective as well, is a sector which we like. And from a longer term perspective, renewables is a theme which we've always liked.
Right, so the consumption space is something that Vaibhav is betting big on as well. Thank you so much for joining us on the show at NDTV Profit and speaking to us with regards to what one should be doing with the markets at this current juncture. But yes, valuations have got reasonable in terms of the large cap space. However, it's an avoid in terms of the small and mid cap space. That's the word coming in from Vaibhav Sanghvi. With that completely out of time, it's a wrap on this edition of India Markets Open. Up next is Ask Profit with Alex, Matthew and Mahima. Please join in to ask all your queries.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachrajani. I got your name right today. And this is Ask Profit, of course. This is where we get all of your questions answered, stock-specific questions. Questions related to the weather you can direct elsewhere. For the time being though, let's take a look at where the markets are before we get started on some of those questions. The benchmark Nifty 50 trading just about flat with a negative bias at this point, and it's been chop and churn through the session today. This is par for the course considering that we've moved very quickly over the course of the last week and a half or so, and the last 7 sessions have been particularly good. We've been gaining. Of course, yesterday there was a bit of a loss of momentum that was visible, particularly the broader end of the spectrum, and in fact that is where you're seeing a little bit of a loss of momentum today as well. Though you have the mid-cap index that's trading with gains of about 0.33% at this point, and you have the small-cap index that's down only about 0.4%. Of course, the market breadth is tilted at this juncture in favor of the declines, but it's not very stark. It's not as stark as it was towards the end of yesterday's session. So let's also look at the sectoral picture and see what is moving. You have the Nifty Bank that's gaining about 0.33% or so. And you have defense that is once again making some headway in trade. Yesterday it lost ground. You have metal that is up about 0.5% or so. Energy that is up about 0.5%. Media is down about 0.9%. On the other end of the spectrum, healthcare is lower by as much as 0.7%, and pharma also losing a little bit of ground. But if you notice, there aren't very many very big movers, at least at the index level. Of course, there are stocks that are reacting. Anything standing out to you, Mahima?
Right, absolutely. So there are certain stocks. Before I move on to stock-specific actions, let's also pull up the NSE 500 and see what stocks are actually, gaining and not gaining as well. There's ZF Commercial on the back of news up by around 6 odd percent. HEG also gaining today. Graphite is also gaining today. It's up by about 3.5 odd percent. Indusen on the other hand did close around 4% lower yesterday, but it's up around 3.5% today. NCC is up 5%. Siemens is also up around 6 odd percent. Suven Pharma is down by about 4 odd percent. There's Credit Access, which is not doing well. Sapphire Foods down by about 3.7 odd percent. Rajesh, exports is where the real pain is since the past 3 odd days, down by about 3 odd percent today as well. In terms of certain stocks to talk about, let's also pull up something like Indian Overseas Bank, something like Advait Energy transitions on the back of news post market hours yesterday as well as today before market open. There you go, IOB up around 1.3 odd percent. Advait Energy is doing well in trade today. Let's also pull up something like Varun Beverages, Armin Smart Spaces, Star Health, Allied, all of these counters. So Varun Beverages is trading flat right now, with Star Health up by about 1 odd percent. In terms of Welspun Enterprise also, it's up by about 3 odd percent. So all of these counters in focus.
And I think if I'm not mistaken, did you mention NCC?
NCC, yes.
NCC is also doing quite well in trade today. Let's pull that up as well, 5% or so on the back of a very big order win, 10,800 crore or so from the BSNL. This is something that will be undertaken over the course of the next 3 years, and the maintenance contract for that will be for a period of 10 years. Stock reacting very positively to that. Let's get our experts on for the day. We've got Mahesh Ojha as well as Vaishali Parekh joining us this morning. Good morning to the both of you, and thanks as always for taking the time. We've already got our first caller, by the way. So let me get Dheeraj from Hyderabad on. Hi Dheeraj, good morning, and how can we help you today?
Good morning, everyone. First of all, I should be so thankful to all of you. You have been so important in my daily stock market journey.
That means a lot to us, Dheeraj.
All of you.
That means a lot to us, Dheeraj. You've got a question on... Sorry to cut you off.
My query is regarding Credit Access Grameen. So I have been holding this share since last 1.5 years, but there is no improvement in the entire financial space, stocks like Poonawalla Fincorp, Credit Access Grameen, Ujjivan Small Finance Bank. The entire financial space is troubling everyone in the market. I have been holding it at 1450 level. It is not an elevated level at that point of time. 150 shares, and now the stock is eating up all our money since so long. And I have one more small concern. The market rallied the index, the Nifty index rallied at around 1,000 points. But is that our Indian companies are lacking the basic fundamentals? Is it all the frauds which have gone? But the index rallied a lot, but the individual stocks did not rally at all. All the railway stocks are also troubling as the same.
Yeah. So legitimate concerns, Dheeraj, and appreciate that you've put all of this in context. For me, I don't really have too much to say to add to your question, but it's a point that you've made about individual names perhaps not moving as much. And yes, let me go across to Mahesh on the fundamentals on the Credit Access question that you have. 150 shares, Mahesh, bought at a price of 1,440. This is part of the group of stocks that has underperformed over the last 2 or 3 quarters on account of microfinance stress. And while the company has said that some of that stress is now going out and the portfolio, the PAR ratios as they call it, improving, portfolio at risk, what is your opinion on Credit Access Grameen? Would you hold on at this point?
Good morning, Alex, and all the viewers. I think he can hold further because we can see next 1 to 2 quarter improvement in Credit Access result as well as in their books. So I think he can hold further, but usually if you are talking about index, then in these type of cycle, first index 50 index and Nifty 50 item is moving. After that, what all the other mid cap, small caps are joining the same. So from current view, you need to keep patience, and I think stock can move up to 1150 to 1200 level in next 3 to 6 months. As management also guided, I think he can hold further.
Okay, so hold further is the view coming in on credit access. The next counter that we are talking about is Texmaco Rail. Shankar Ganesh from Chennai has bought 1,000 shares in August 2024 at 284 rupees, and he wants to know whether he should sell or average out at the current price. He has a short-term view from a 2 months perspective. Vaishali, good morning to you. What's the view like on the charts for Texmaco, and what is the stop loss and target that you'll give for this counter?
Definitely. Very good morning, all of you. So yes, overall, if you see, rail stocks are showing a bounce. So talking about Texmaco Rail, the stock is really corrected and we are now seeing a consolidation happening. So I would say keep a stop loss of 130 and currently it's at 140. Keep a stop loss because it's showing signs of bottoming out at 130. And once we see momentum picking up, this can go towards 175, 180. So in my view is average out or hold on.
Average out or hold on is the view coming in for Texmaco. Vaishali, what's the target price that you've given for this counter?
175, 180 to start with.
Okay, 175, 180 to start with. All right. Our next caller, Abhiraj from Bengaluru, is calling in. Abhiraj, a very good morning to you. How can we help you?
Yeah, so hi, good morning. I have bought NBCC at around average price of 103, 18,000 shares. So I would like to know the outlook for this. So should I average or more, or should I sell and enter a different counter? What's the view?
Okay, and Abhiraj, you bought this from a longer term perspective?
Yeah.
Okay, and I hope that this is a part of your overall portfolio.
Yeah, it's a significant chunk of the portfolio, but yeah, it's...
if you don't mind me asking, what percentage is this of your total portfolio?
Should be around 15 to 18%, I think.
Okay, got it. All right, I'll take your question with Mahesh. Mahesh, I'll come to you. NBCC is the counter. What's the view like?
He can hold further. I can see some more upside in coming time. I think if his horizon is 1 year or more than 1 year, we can see up to 110, 120 level for the same. But from current view, he can hold further. Fundamentals has nothing to do with the current downside. But yes, he slowly we can see improving in order book also as well. So I think he can hold further for a 1 year horizon. 110 to 120 level could be coming NBCC.
NBCC, all right. So 110 is the level that you can look at. We've got a question on BSE and a clutch of these capital market plays coming back into focus in the recent past. We've got Sarath, who's writing in from Dubai, and he's bought at levels of 4,870. He's got 10 shares and he's looking for both the short term as well as the long term perspective. Vaishali, on the charts for BSE.
So I think it's showing a bounce back. So for short-term perspective, I would say keep a stop loss of 4,500. And once the stock sees a bounce back, this can go towards 4,850 or so. And for a long-term perspective, if market corrects, it can retest the previous lows of 3,800. So that would be the level that one can get into for a long-term perspective. And then once again, look for a target of 5,800 to 6,000 to start.
So just confirming, 3,800 would be the stop loss?
For the long term, that is the support. That would be the level to add more with a long-term perspective.
Okay. All right. We've got our next caller, Govind Kumar, who's calling us from Hyderabad. Hi, Govind. Good morning. And how can we help you today?
Yeah. Hi, sir. Good morning to all. Sir, Alex, sir, actually, I have bought Lemon Tree 2,000 shares for 6 months back, sir. 146 rupees. Can I add some more or else exit, sir?
Okay. Govind, help me understand, you bought it based on the fundamentals of the hospitality space and you bought it for the long term?
Yes, yeah, only for fundamentals.
Only for fundamentals. Oh, got it. I got it. Mahesh, this is a company that has, over the course of the last year and a half, transformed the way that it does business and it's gotten more in the way of franchise properties, right? So it's not owning the keys. That's the transition that they made. How do you see the fundamentals, and would this be your pick from the hospitality space? He's got 2,000 shares at a price of 136.
I think it's a good pick from if your horizon is a 1 year and more than 1 year. And at least we can see in 160 level in 1 year horizon. If you are looking on hospitality sector, this sector is more or less face the same selling pressure in the stocks. So I think he can hold further, and after 160 level, if maintaining above the same level, we can see up to 175 level. We are optimistic for some upside in the hospitality sector as well as other counter. So I think he can hold further.
Further, let me add another question to this. We've got Lakshmi Narasimhan Srinivasan, who is holding 500 shares of Indian Hotels at a price of 745, and he's looking for the fundamental view here. Mahesh, he's in the green right now, and what would your view on Indian hotels be in the context of what you just said about the hospitality space?
Alex, if you're looking on the current downside cycle, which stock is less impacted, that is Indian Hotel, at least, and I have seen sometime outperform also. So I think he can hold further. If your horizon is 1 year and more than 1 year, we can see 1,000 level in Indian Hotel as well. If anyone want to add on any downside, then they can add further. Company is doing very well. I think the more potential could become in the Indian Hotel as well.
So that's the view coming in on Indian Hotels as well as Lemon Tree. The next counter that we're talking about is L&T. Anmol wants to know as to what will be the right level to make an entry in L&T where technicals are concerned. Vaishali, what do you think is the right level to make an entry, and where is the stop loss and targets that you're seeing?
So L&T, like all stocks, has given a bounce back. So it's right now showing a little bit of a resistance at 3,500 levels. So I would say wait for it to retrace at around 3,300 levels. That would be the ideal level to get into the stock. And stop loss would be below 3,300. And then look for a target of at least 3,800 to 4,000.
3,800 to 4,000 on L&T, Larsen and Toubro, all right. And on the fundamentals, let's see where things go in the fourth quarter, because things are expected to have started moving on the ground as the lead indicators have indicated, or the high frequency indicators have indicated on the capex front. So watch out for that as well. Murli is calling us from Bengaluru. Hi Murli, good morning, and how can we help you today?
Good morning. I thank you for taking up my query. Just I have one stock query, but one clarification.
Okay.
The stock query is about Venus Pipes. I bought 300 shares at 13.15.
Yes.
Can I hold it from 12 to 15 months point of view?
Okay. Okay.
B, it's not on a query, it's a clarification. Can I raise queries about the brokerages houses are giving buy call, sell call, hold call, leading foreign domestic brokerages? How far it is reliable? You can answer either one of them.
So, I don't have an answer, unfortunately, to the second one. And these are all based on their own research house or their own research that they pull up, right? So, each one of them has a thesis, just like any other analyst in the market would have a thesis about the earnings potential of a given company. They will look forward and they'll draw out the EPS estimates for the next, or the earnings per share estimates for the next year or the next couple of years, and they'll put price targets to that. But then, just like any other analyst, they would have to face a challenge if things change, and it's not a given, right? So you would have to take it with a pinch of salt and perhaps do your own reading. Have you done your reading on Venus Pipes?
Yeah, of course I did.
Okay, and what is it, sir, if you don't mind my asking, what according to you stood out according to, or rather Venus Pipes?
Yeah, they are going for a big expansion from 38,000 tons to 48, and it's a backward integration to improve the margin and reduce the cost. And number two, pipes being in the industry, you take anything in the pipes industry today, the water and all, they are doing really going to do well. That's the trend now. So it seems to be reasonably priced also. It's not expensive.
Yeah.
And from the peak, it has come down by around 25%.
Yes. So you've done fantastic work on your research. Let me see if Mahesh concurs with your view and what his view is on Venus Pipes as well. Venus, Mahesh, apologies. What is the view on the fundamentals?
I think he's on at par level. He can switch the stocks to other. I think Astral Pipe is looking good in this sector. So I don't think much more upside in coming time for a Venus pipe. At least if any upside if he not like to exit here, then he can switch on a higher level. That could be a 1350, 1360 level. So he can switch to other counter that is we are looking at more safety concern on that sector. So I think Astral pipe could be a good pick from these levels.
Okay, all right. So that's the view on Venus pipes, and congratulations, Murli, on the research that you put in on that stock. Shweta is calling us from Hyderabad. Hi, Shweta. Good morning. How can we help you today?
Hi, Alex. Hi, Manmohan. Good morning.
Very good morning.
I want to know. I have some money. I want to know best picks in railways, defense, and NBFCs.
Okay, so 3 pockets that you're looking at, and okay, I'm trying to understand what is the time frame that you have.
I can hold it for 1 year.
Okay. Vaishali, I'll come to you. A few of these names have picked up. NBFCs, of course, in the context of foreign institutional buying. A lot of people looking at it. Valuations, a lot of people have pointed out, are looking attractive, and resilience has been seen in the banking space as well. So, which would you buy? NBFCs, railways, and defense?
So, well, we have to choose stocks because right now in the banking stocks, I think Axis Bank is doing well and it needs to buck up. So, Axis Bank is one of the banks that I would look at right now because it has still scope for a lot of upside. And I would also look at Canara Bank because in the public sector bank, Canara Bank is also not run up. So, these are the 2 stocks that I would look at from the banking sector. As far as the defense is concerned, well, we have Mazgaon Docks, Cochin Shipyard. They've already run up. So I would say now start accumulating, buy at every dip, start buying in tranches. And as far as rail sector is concerned, well, we are focusing more on Jupiter Wagons. That is also showing a good strength and it has scope for good upside from here on. And the other one that I would look at would be IRFC.
All right, so that's the pick that Vaishali has given on all 3 of these counters. What was the last stock that you mentioned, Vaishali?
IRFC.
IRFC. Okay, so that's the pick. Those are the picks, in fact, that she's given in railways, defense, as well as NBFCs. All right, the next question is from Menak, who's from Kolkata, and his question is on IRB Infra. He's holding around 588 shares, bought at 68 a piece. And he wants to know whether he should continue to hold or not. Mahesh, I'll come to you for this one. What's the outlook like for IRB Infra?
I think he can hold further. Fundamentals of company are good, and at least we can see 65 to 70 level could become in 1 year horizon. So I think he can hold further. Fundamentals are good for the company.
Okay, so that's the view with respect to IRB Infra. Our next caller, Babu from Mysuru, is calling in. Babu, a very good morning to you. How can we help you?
Good morning, madam. I have bought 400 shares of Jindal World at 73 rupees 85 1 month back.
Okay.
But it is a future, or can I sell?
Okay, and you bought this from a longer term perspective, right?
Yeah.
Okay. Mahesh, I'm not sure if you have a view on this particular counter. Jindal Worldwide is basically into the textile space and is manufacturing for the retail space as well. What's the view like?
I think the sector is also improving. So from that perspective, I can say that he can hold further that at least 70 to 75 level could become in near term.
All right, so that's a view on Jindal Worldwide. Let's talk about Canara Bank from the banking pack. And Vaishali, you've already given us a pick. Axis Bank is your pick from the private sector space, but specific view is being sought by Dinesh on Canara Bank. He's been holding at levels of 110. He's got 1,800 shares. And so it's given up a little bit of ground. He's looking at the next 3 months. Is it possible for him to recover his buy price? If not, what are the key levels that he should watch out for, both on the upside as well as on the downside?
So if we are taking a smaller term horizon, that is 3 months, I would say keep a range of 86 as support, 85, 86 as support. And the first resistance that we would be looking at would be around 104, keeping 3-month horizon. So from there on, we can have a relook. So I would say follow the range of 85 to 104.
Okay, all right. So that's the view on Canara Bank. We've got Ray calling us from Bengaluru. Hi, Ray. Good morning. How can we help you today?
Hi, Alex. Good morning. And thank you for being our guiding light under such choppy situations. My query was around solar industries. So I'm holding 5 shares at 9474 per share, and just want to view whether it is good to sell off now and buy at a lower level, or should I keep holding?
So should you take some money off the table? Ray, first of all, you're very kind. It's basically all of our experts and guests that join us on the program that we're only facilitating this. So thank you so much. You're very kind.
Thank you so much.
But let me ask you this: when did you buy this, and how long did you intend to hold?
So I bought it about a month back, and I can hold it for about 5-6 months.
Okay. So then, Vaishali, I'm coming back to you. He's in the green. Gaining a little bit of ground, in fact quite a bit of ground, considering that he's only got 5 shares. Should he take money off the table now?
So I would say actually it's in a very strong uptrend. Keep a trailing stop loss of 10,700, and if this momentum continues, I think you can book at around 11,500.
You put the stop loss though?
Yes, 10,700.
10,700. Ray, hopefully that answers your question, and congratulations for the purchase that you've made. You may already made some money. All right, guys, do stay with us, Vaishali as well as Mahesh, and we'll come back after a very quick break to take more questions from our viewers. Viewers, do stay tuned.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad bet last time we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Beth, last time we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that.
Welcome back. You're watching Ask Profit. Well, there is a news that is coming in. Indira IVF Hospital, which is a fertility clinic chain, has withdrawn DHRP for IPO. They had filed this via confidential route, and this comes after SEBI has raised objection over the release of founder's biopic. My colleague Agni joins in with more details on that. Agni, what are you picking up?
Right, so our sources are telling us that this is a strange but true incident that has taken place. So SEBI has raised concerns over Indira IVF's IPO and the timing of the biopic that has been released. Now remember, last month Indira IVF had confidentially filed draft papers for an IPO, and we know that they were looking to raise around 3,500 crore rupees from it. However, a month after the IPO was filed, a movie came out about Ajay Murdia's life, a fictionalized version of his life, and the movie was produced by Indira Entertainment. Now Ajay Murdia's sons are credited as producers in the movie, and SEBI has said that this looks like an indirect promotion for the company at a time when details of the IPO are not made clear to the wider public. So this is sort of what pushed the company into withdrawing draft papers, because there was a regulatory lens over the timing of the movie and the link between that and when the company has filed for an IPO. We will be giving you more details. We'll be bringing out additional details, but this is a developing story, so stay tuned.
All right, thank you so much, Agni, for breaking that down for us. And this is a developing story, as he rightly mentioned, and we'll bring in more details as soon as we uncover it. All right, moving on to the next caller, Sasta Mani from Coimbatore is calling in. A very good morning to you. I hope I've pronounced your name properly, and how can we help you?
Good morning, madam. Yes, you have pronounced my name correctly. I have the Premier Explosives.
Okay.
Which is, I have a quantity of 110, which I bought 690 rupees in July 2024.
Okay.
So I would like to know how long can I hold it, say for a year and a half, to get, let's say, around 14 to 15% return.
Okay, got your question. I'll take your question with Mahesh. Mahesh is holding Premier Explosives and wants a longer term view. He's sitting on a loss of 37,000 odd rupees right now. What's the view like?
I think he can hold for the stock at a potential of up to 450 to 480 zone. So if his horizon is more than 1 year or a 1 year, then we can see 450 to 480 level at least. After that, we can review further for the same. Company fundamentals are good, so he can hold further.
Okay, hold further is the view coming in on Premier Explosives. The next counter that we're talking about is LIC Housing Finance. Mahesh, I'll again stick with you for this. Santosh John from Dubai wants a longer term view. That is 2 to 3 years is his time horizon, and he wants to view on LIC Housing Finance. What's the outlook like?
Our stance on NBFC and the housing finance companies are quite bullish, and we can see some more upward movement in 1 to 2 year horizon for the LIC housing for the same. So currently we are our target is near 700-750 zone for the LIC for a 1 year horizon.
Okay, all right, so that's the view on LIC Housing Finance. Let's talk about the next question. It's a caller. In fact, we've got Vishal calling us from New Delhi. Hi Vishal, good morning, and how can we help you today?
Very good morning, guys. So I would be knowing the stock about M&M.
Okay.
And I would also like to know about the auto sector in whole. Like, I've been holding M&M for 3 months now, and I bought it at around levels of 2801.
Yes.
And I would also like to know that since the stock is very volatile, so how long I should hold this stock for, and what should be my price target?
Okay.
And in comprising auto sector, I would also know to have the perspective of the...
Okay, Vishal, just a couple of clarifications here. When you bought it, did you buy it for the long term, or was it a trade that you were trying to get into?
I bought it as a long-term perspective.
Okay. And do you own anything else in the automotive pack?
No, not yet.
Okay, all right. So, of course, if you bought it a few months back, then you will have seen the volatility in the entire market. To that extent, Mahindra and Mahindra has also had to bear with that. And so, I guess to a certain extent, that is what explains some of it. Let me get you a perspective on the fundamentals. And Mahesh, Mahindra and Mahindra, it's a comprehensive play, one can argue, in the automotive space, because it's got every touch point covered, right? At least in the four-wheeler space. And it's got the farm equipment sector, the latest entry into the electric vehicle space, good bookings as well for those two products that they've launched. What's the view? 2,800 is the buy price. What's the long-term perspective?
I think there in industry there is quite two views coming on for Mahindra, but we are quite bullish on Mahindra and Mahindra. I think he can hold further for a 1 year horizon. If your horizon is more than 1 year, that could be much more potential. But yes, if your horizon is 1 year, then we can see up to 3,200, 3,250 range, minimum range. And if we last in EV, we have seen quite good booking in the Mahindra and Mahindra EV products. So I think he can. There is a good potential for upside in Mahindra and Mahindra, and we are quite bullish on it. And 1 year horizon, minimum 3,200, 3,250 in any kind of market. But I think if your horizon is more than 1 year, that could be more potential. And if your horizon is up to 18 months, we can see 3,500, 3,800 level odd.
Aggressive targets on Mahindra and Mahindra. All right, Vishal, so hopefully that answers your question, and watch out for this one. Of course, a number of brokerage notes coming through earlier on in the day as well, and one of them, of course, was BOFA, and they are preferring Eicher as well as Maruti Suzuki and also Mahindra in the automotive pack. Let's take the next question. This is on Sterling and Wilson Solar, and once again, this is a long-term question that is being asked. This is from Suresh Nair, who is writing in from Hyderabad. He's bought at levels of 268, not too far away from the current market price. And this is a stock that is seen quite the drubbing over the course of the last several months. In fact, let's try and pull up the longer term charts. There you go. So drop of as much as 60% over the last 6 months. I know it's a long term question, but Vaishali, I'm coming to you on this one. Would you buy more at the current juncture?
Well, I would say, stock is showing signs of bottoming out. I mean, yes, I would say, yes, do buy it at these levels, because once the going gets good, I think this can give a strong bounce, at least till 400 to 450.
Okay. Any view on this one? Very quickly, Mahesh, I believe that considerable ownership in this is with Reliance Industries.
Yeah, definitely. I think he can hold further. At least we can see 340, 350 level in the medium term also.
Okay, so that's the view coming in on Sterling and Wilson. The next caller that is lined up is Pranab Kishore, who's calling in from Odisha. A very good morning to you, Pranab. How can we help you?
Good morning, ma'am.
Good morning.
I want to inquire about that stock which I bought on 4 April 2024.
Okay.
The stock name is Spandana Spurti.
Okay.
Currently, I am suffering a loss of 11,000. Because I had got it at the average price of 892, and now it has decreased.
Right. Okay, and you bought this from a longer term perspective, Pranab?
Yeah.
Okay. Mahesh, Spandana Spurti is the counter. He's sitting on a loss of 11,000 as he mentioned right now, and his buying price is pretty high, but his quantity is not much, which is why this losses right now are at around some 1,000 odd rupees. So in terms of the outlook for Spandana Spurti from a longer term perspective, what do you think? Should he continue to hold or book losses right now?
I think we are not optimistic for Spandana Spurti. If any upside near 350 zone, he should try to exit the same.
Okay. All right, so that's the view on Spandana Spurti. Let's take the next question, and this one is coming in on. I want to ask Hindustan Aeronautics, but then since my viewers asked about Heritage Foods, by the way, Venkat from Andhra Pradesh, if you're listening, please respond to the question that I have asked you on WhatsApp, because, by the way, he bought Hindustan Aeronautics at a price of, I think, 3,608. Vaishali, this one should interest you. 3,608, and he had 8,000 quantity. So over the course of a week or so, he saw his holding, if he held on, go up by quite a considerable amount, by as much as 30 to 40 lakhs. But he's asking specifically about Heritage Foods. 5,000 shares he's got at an average price of 426. The stock is currently trading at just under 400. What is the perspective over 6 month time frame? And this accounts, he says, for about 5% of his overall portfolio.
I would say on technical terms, the stock has corrected right from 660 levels to now at around, it made a low of 380. So it is in the process. I mean, I'll give you a very precise explanation. It has bottomed out at around 380 levels. And currently, it is attempting to show a bounce back, making a higher bottom formation. So I would say keep a stop loss of 380, and I think this stock can go towards 440 to 500 levels. So this is how you should play your trade, and probably add more with 380 as stop loss.
Okay, and let me add to that, because he has responded saying that he's still holding on to his position in HAL. Would you suggest taking some money off the table?
Keep a stop loss.
3806
yes.
was the buy price, yeah.
3,900 should be the stop loss, because if the momentum continues, this can go towards 4,200 as well. So keep 3,900 as your trailing stop loss.
Okay, so that's the view with respect to HAL. Vaishali, before I move on to the next caller, can you also just give us the stop loss and target for Sterling and Wilson?
So Sterling and Wilson, we just spoke, it was 257. Currently, 240 will act as a stop loss.
Thank you so much for that, Vaishali. All right, moving on to the next caller. Srinivas from Bengaluru is calling in. A very good morning to you, Srinivas. How can we help you?
Good morning. I'm Srinivas calling from Bangalore. I recently bought the CDSL 125 shares at 1,210. So my question is, I just took it for the 3 to 6 months of time frame in mind. So what could be the price that we could exit from this counter?
Okay, Srinivas, did you buy this from a longer term perspective or did you see the charts while buying this?
I bought it for 3 to 6 months time. It's not long term.
Got it. All right. Got your query. I'll take your query with Vaishali. Vaishali, what are the charts saying about CDSL? What's the stop loss and targets?
So, well, I would say these stocks actually should not be taken for trading, but if you still insist, keep a stop loss of 1100 and 3 to 6 months, look for a target of 16 to 1700.
Okay, so that's the view with respect to CDSL. The next counter that we're talking about is Kalyan Jewellers. Darshan from Surat has bought it at the price of 573. He's bought 20 shares and he wants to hold this stock by the month of November 2025 and he wants to buy more. At what price should he add is something that he wants to know. Mahesh, I'll come to you. Should he add more of Kalyan Jewellers to his portfolio till November?
I think if any downside near 420 to 440 zone, that could be recently we have seen in lower lane, then he can add in those levels if anyone want to add. And from November perspective, we can see up to 525 to 540 zone. So from a current perspective, if anyone want to add, then he should wait further because the downside we can see up to 420 to 440 range. If any downside coming start, then we can see that level also.
Kalyan Jewellers up about 2% or so in trade today. Pankaj is calling us from Pune. Good morning, Pankaj, and how can we help you today?
Hey, morning, Alex and everyone. My question is on Tilak Industries. I have bought 1,000 shares at 250. I just wanted a long-term view.
Okay. Tilak Nagar Industries, when did you acquire this?
So in fact, I had acquired this a year back. I sold it at around 410. And then there was a news around trademark dispute for this. And the stocks came down from 410 to around 220. And then I bought it a couple of days back at 250. I thought it is in oversold zone.
You're talking about Tilak Nagar Industries?
Tilak Nagar Industries,
yes,
that's right.
Okay,
yeah.
Okay. Yeah. All right. So you're looking, and at this juncture, what you want to know is the shorter term view?
Long-term perspective, honestly, I'm okay to hold it for as long as possible. Yeah.
Understood. Mahesh, I'm going to come to you on this one. Tilak Nagar Industries, he's booked profit once and now he's re-entered. What's the view on the fundamentals?
I think he can hold in last few years. If you are seeing in Tilak Nagar industry, that is a turnaround type of industry. So company is doing quite good and his price is the near term. So I think he can hold further. We can see up to 325 to 350 zone in 1 year horizon.
Okay. All right, so that's the view coming in on Tilak Nagar Industries. In fact, the dispute that he was talking about was for its mansion brand where there is a IP dispute, and which is why we've seen a significant tanking in the stock in the past month as well. All right, moving on to the next counter, we're talking about Tata Motors. Nilesh from Kerala bought it at the price of 854 and the quantity that he's holding is 338. He's sitting on a loss of roughly 37,000 odd rupees is what he's saying, and he wants to know what should he do. Should he hold or sell for tax harvesting? Do you see the benefit of holding this counter for another 1 year is his question. Mahesh, I'll stick with you for this particular counter. Two questions he's asking. Should he book losses for tax harvesting? And secondly, should he buy it back for the next 1 year?
I think he can hold for a 1 year. If your horizon is 1 year, we can see up to 850 or and above that level also. For tax harvesting, I would not suggest to book tax harvesting in this type of stock because if you are booking on this year, then you have to pay in next year. That is not much more beneficial. But yes, you can hold further.
ओके मोहित जयपुर से कॉल कर रहे हैं हमें. मोहित नमस्कार, हम कैसे मदद करें आपके?
सर मेरे पास बाटा के 15-18 प्राइस पे 14 शेयर हैं.
ओके.
तो इसको लॉन्ग टर्म के लिए होल्ड करना चाहिए या एवरेज आउट कैसे करें?
ओके, आपने ये शेयर कब खरीदी थी और उस टाइम पे क्या था आपका प्लान?
मैंने फंडामेंटल से के खरीदे थे 2023 में. उस टाइम पे लॉन्ग टर्म खरीदा.
Okay, understood. All right. So, Mahesh, the question is for you then. On the fundamentals, 1,227 is the buy price. Oh no, is the current market price. 1518 is the buy price. So would you continue to hold? And what are the prospects for this company? What are the headwinds that it is facing? Can you explain that? और आप हिंदी में जवाब दे सकते हैं.
देखिए मोहित जी, आपने एक बढ़िया कंपनी का चयन किया है तो घबराने की जरूरत नहीं है। अब आप यहाँ से अगर आपको एवरेज करना है तो एवरेज कर लीजिए। जैसे कि अपने गवर्नमेंट ने अभी जो भी टैक्स अनाउंसमेंट किए हैं तो वो सारी चीजों का बेनिफिट जो है आने वाले कुछ क्वार्टर्स के अंदर ऐसी सारी कंपनीज में देखने को मिलेगा जहाँ पे स्पेंडिंग जो है कुछ एक जो कंजप्शन की ओर बढ़ेगी। तो मेरे हिसाब से आपको एवरेज आउट करना है तो ये लेवल पे आप बाइंग कर सकते हैं। फर्दर आपका टारगेट सर तो शायद हो सकता है कि उस टारगेट लेवल पे नहीं है, लेकिन 1450 से 1500 तक के लेवल जो है आपको जरूर देखने को मिल सकते हैं। आप होल्ड कर सकते हैं इसको।
Okay, so that's the view with respect to Bata. Gautam from Mumbai is holding 500 shares of Exide at 526 a piece. He wants to know that what are the charts saying about this counter. Vaishali, I'll come to you. What are the technicals looking like for this counter, and what are the stop loss and targets that you're observing?
Well, it is trying to get into a trend, and I think the near-term stop loss that he can look at is 348, and the near-term target what he can look at is 400 levels. So 348 to 400 would be the range that for a short term he can look at.
Okay, all right. So that's the view on Exide. Abhirami is calling us from Chennai. Good morning, Abhirami. How can we help you today?
Good morning, sir. Sir, I can buy the Bell stock for 50, 282 my LTP. What is the target of Bell?
What is the target and what's the time frame that you have, Abhirami?
5 months, sir.
Okay, 5 months. All right. Vaishali, on the charts then, BEL was in focus. It's, if I'm not mistaken, let's pull up the intraday chart right now. 282 is the buy price. She's got 5 months. What would you do?
Well, I would say the stock has really given a good run up, right? From 245 to 302. I would say book at 310, 320. That is a level which is a good resistance. And then let's have a relook, because I don't see the stock moving very quick beyond this.
All right. So BL hold for now is a view. Anwar from Abu Dhabi is asking about selling Britannia and switching to ITC at this juncture, looking for long-term view. Mahesh, relatively short answer. What's the view here?
Yes, he can do further.
Okay. All right. You can do that. You want to spell that out?
Sorry?
Yeah. You want to explain why you're saying that?
No, we can see some exit from dredging. So I think from that view, I think ITC has much more potential, and ITC is trading at lower P in this sector. So I think ITC has a much more potential than Britannia.
Okay. Prabhakara is asking Reliance is a buy or hold right now. On the charts, Vaishali?
Well, it is in a no trade zone right now. Reliance, we are just observing a range of 1280 to 1320. So if it is going below that, it is a sell. So I would say it's not a trading zone right now.
Not a trading zone for Reliance Industries. All right. It's time now to hit the rapid fire segment, and both of you know what this means. Mahesh as well as Vaishali will throw as many questions at you over the course of 2 minutes as possible. I'd request you to keep your answers as crisp as possible. Fundamental view is being sought on Tube investment. The buy price is 3,600. Dilip wants to know whether to hold or exit. Considerable loss of capital. Mahesh, okay, hold.
All right, Cyan DLM is the next counter. Vineet from Kerala is holding 500 shares, bought at 611 a piece. What are the charts looking like for Cyan DLM? Vaishali?
Add more.
Add more. GE Shipping is the name of the counter. 57 shares, bought at 896 for the long term, more than 5 years. Mahesh?
Hold.
Okay, Epigral. Vijay from Bhiwandi is holding 51 shares at 2145 a piece. What are the charts saying, Vaishali?
Epigral, you said, right?
Yes.
So it's 101. I think hold 1800 as stop loss and look for a target of 2200.
Okay. Short-term view. Indraprastha Gas is the name of the counter. Anish from Hyderabad wants to know. Buy price is 196. 20 is the quantity. Would you hold? And what's the view? Vaishali?
Yes, so hold with 190 as stop loss, target 210.
Okay, Suzlon is the next counter. Gaurav Chaudhary from Uttar Pradesh is holding 40,000 shares, bought at 47 a piece. What's the long-term outlook like, Mahesh, for Suzlon?
You can hold further.
Okay. Sun Pharma, 91 shares at 80% profit. Rajiv wants to know whether to hold or exit. Vaishali?
Hold with stop loss 1700 and target 1900.
Okay, the next view is asking about Zensa Technology, bought at 717 a piece. What's the short-term target like on the charts, Vaishali?
So Zensa Technology stop loss 680 and bounce back can give up to 760.
Okay. Infi, coming back to you on this one, Vaishali, 255, average price is 1828. Murli wants to know, 1 year time frame, should you hold or exit?
Hold.
Okay. All right. Yeah, okay, I've lost track, but I think we've covered most of it. You've answered questions faster than I could ask them. So thank you so much to the both of you, and pleasure as always having you on the program.
Thank you.
All right, that brings us to the end of this edition of Ask Profit. Thanks so much for tuning in from Vaishali. I've got my names all wrong today.
Venus, you're calling me Vaishali.
Yeah, okay.
Alex needs rest.
I do. I need to go and get a coffee. But thanks so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Beth, last time we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and
Hello and welcome. You're watching KYC, Know Your Company. We're going to today speak about Webov Global. We'll try and break the company down, try and see how it's performed maybe over the last 3 to 4 years. And first off, we'll start off by understanding what it does. Very unique business in that sense. What it essentially does is it manufactures jewelry. It started at least with that. It started with jewelry. Now it has diversified even into lifestyle products. Lifestyle products meaning your regular home care products from bed sheets to towels. But let me first start off with the key starting point, which is jewelry. They actually had they're more like an e-tailer of jewelry, right? And a lot of it being artificial. They target the value conscious customer in the West. So whether it's US, whether it's now Europe, UK, largely US and UK is where they have a significant presence. They're now diversifying into Europe. What they do is they push ads through TV channels, and like your typical Naptol model in India, they try and sell their products in US and the UK to the value conscious buyer. And there aren't just a few, there are 7 lakh unique customers that they have in some of these geographies, US and UK in particular. Now they are growing in Europe as well and growing their presence fast in Europe. They've re-entered the Germany market in 2021. That's why you'll see some numbers starting to get impacted from 2022, 2023, and now even in first half of 2020, rather FY24, but even in first half of FY25, we've seen a bit of an impact on the numbers. Q3 is when we've started to see an unwind. It's an omni-channel e-tailer of fashion jewelry, accessories and lifestyle products. Omni-channel meaning that they not only deal with online shopping but also offline. They sell their products through a single channel which is manufactured by them. So it's a fully integrated supply chain all within Web of Global. Even brands are within Web of Global. So it's vertically integrated, and fashion jewelry and lifestyle products is largely what they focus on. Fashion jewelry, which was 70% a couple of years back, currently sits at 66%. Lifestyle products, the mix is increasing. It's an end-to-end B2C model. So from raw materials to manufacturing to selling and including marketing and customer service, all is dealt with within the company itself. There are proprietary TV channels and digital platforms that they sell through. All of the products that they sell are sold through single source, manufactured by them. So that's one of the big positives. 7 manufacturing units is what they have across India as well as China. And largely, the factory at Jaipur is large, 169,000 square feet is what the factory size is. In terms of capacity, 5 million pieces per annum is what they can manufacture. In terms of SKUs, they have a very solid number in terms of unique products that they are able to sell. They have around 25,000 SKUs, including 5,000 unique SKUs in the lifestyle category. And they generate around 28,500 plus new product ideas annually. And there are over nearly 5,000 ideators and 14 to 15,000 new jewelry designs that are brought out on an annual basis. So those are some of the growth levers which will likely play out. They have 31 in-house brands. The largest ones are these. Those are just some of them. Of course, they don't cater to the Indian market. Therefore, you and me don't hear these brands on a daily basis. Very niche, value-conscious customer in the West is what they deal with. But we're going to speak with the management later on this show. We are going to be speaking with Nitin Panwad, who's the Group CFO of Web of Global. But more importantly, how do we analyze this one? So what are the metrics we look at? We'll look at it typically like a retailer. We'll start off with income statement, balance sheet and cash flow. We'll try and zoom in on how those have played out. We'll look at return ratios as well, long term as well as short term. And we'll look at shareholding, street cred, valuation and street coverage we'll combine because street coverage is limited. And then we'll speak about what the outlook and the guidance is at the end of Q3. And we'll go and we'll speak with the CFO of the company as well. Joining me today, Mahima Vajrajani, to talk to us about exactly this, try and break this one down and help me do that. So thanks, Mahima, for joining. Start off with the income statement.
Right. So, I'll start off with the 4 numbers that we always concentrate on. That is your revenue, EBITDA, margins, as well as your profit numbers. In terms of revenue, there has been a 3-year CAGR of 11%. But as we were discussing earlier as well, it has been a steady 11% CAGR for the counter. For EBITDA and net profit, the 3-year CAGR is negative. For EBITDA, it is around minus 10% and net profit is around minus 22%. But this is because they have been expanding in European markets as well as in overall focusing on Germany as well, which is why there has been a slight degrowth where EBITDA as well as net profit is concerned. Margins have improved as compared to FY24, where it stood at 9.7, which has improved to 11.5 in 9 months FY25. So overall, an improving trend in terms of revenue, but EBITDA and net profit slight degrowth because of expansion plans, which is why overall we've given a neutral rating right now, because management has also guided that FY26 is when overall impact of Germany's expansion will have on bottom line. That's when Germany turns positive and will have an overall impact on the net profit numbers as well. In terms of how revenue is divided for Vaibhav Global, where in terms of revenues by format, right now 60% revenue comes from TV and 40% comes from digital. They are focusing on digital and want to expand overall their digital presence. Revenue by product, well, 66% comes from jewelry and 34% comes from lifestyle. In terms of geography, US contributes 59%, UK contributes 29%, and Europe contributes around 12% right now. Now, in terms of how overall divisional performance has panned out in terms of TV division, TV revenue stood at 1,444 in 9 months FY25, which is improved as compared to 9 months FY24. Sales volume has also improved. In terms of average selling price, that has gone down by a tad bit, which stood around $39.1 versus that of $38.3 in 9 months FY25. For digital, revenues again have improved here from 840 to 964 crores. Sales volumes have also improved, and average selling price has also improved where digital presence is concerned. It stood around $30.2 versus that of $31.6 in 9 months FY25. Lastly, B2B division, the revenue stood at 122 crores in 9 months FY25, which has improved from 96 crores in 9 months FY24. So overall, even in terms of divisional sales, there has been an improving trend. Because there is a slight degrowth in EBITDA and net profit, we have given it a neutral right now, taking a conservative approach, and this is the overall view as to how income statement pans out for Vaibhav Global.
Yeah, absolutely. So Mahima, thank you for that. It's a fairly detailed breakdown. Couple of things that I want to add to this. The company does nearly 60+% in gross margins. For a retailer to be able to do that, it's commendable. So that's the first piece. A lot of the expenses are on the marketing side, and because they've opened Europe, therefore margins are slightly stretched, if I can call it, over the last couple of years. How those margins unwind is going to hold the key. That's the EBITDA margin. The gross margin doing fairly well. But let's quickly go across to the balance sheet, and I'm not going to take too much time here. Looking at net worth, FY24 versus 25, you've seen an expansion in H1. Debt, they're a zero debt company. That's the one big positive that you're seeing. There's very limited risk that a company has when debt is zero. Lease liabilities, okay, there are some, but cash balances are more than enough to offset lease liabilities. And what we've noticed is company regularly maintains a decent amount of cash on its books, which is always healthy. So therefore a clear thumbs up. Cash flow, Mahima.
Right, so cash flow, the net cash, overall cash flow from operations has declined a tad bit in first half of FY25, but overall we'll have to wait and watch out for as to how FY25 overall pans out, because they might have put in some money in acquisitions or in expansions in European as well as US markets, and overall, you know, as you rightly mentioned, they're putting in money for advertisements as well as marketing spends are going up. So that might also have an impact on overall net cash flow position. But in terms of the net cash flow position overall has improved as compared to FY24 as well as first half of FY24, because that was a negative number which has turned positive to 8 crores in first half of FY25, which is why overall we've given it a neutral rating for now.
Perfect. Let's talk about return ratios. Again, a neutral on this count, because what we've seen is return ratios were elevated for the better part of pre-2023. Thereafter, we've seen return ratios fall. It's because of their European expansion to a certain extent. It's because of acquisitions also to a certain extent. Now, you would hope that as margins start to recover, return ratios also start to normalize. So we'll have to wait and watch for this metric. But otherwise, historically, it's been a high ROCE business and high ROE business, as you can see. There's been a bit of a dent, but you could well see this bounce back. And if it were to go to 31 or even 20 plus levels on the ROE count, you could well turn this into a thumbs up very quickly. So it's a wait and watch, a neutral for that reason.
Absolutely. The next parameter that we're tracking is shareholding, where in terms of how shareholding has panned out as compared to how it was in March 2022 versus how it is right now as of December 2024. Promoters have slightly diluted their stake from 58% to 57%. FIIs have increased their stake from 10% to 18%. DIs, however, have decreased their stake significantly. They're now holding only 0.7% versus that of 18.5% which they were holding in March 22. And public shareholding has significantly gone up from 12.6% to almost 23.5%. But it's also important to mention here that there are some marquee investors who have invested in this particular company, that is Vaibhav Global. There's Nalanda India Fund, which is holding around 7.6% stake in the counter. There's Malabar India Fund, which is holding around 5.7% stake. And Vijay Kedia is also holding 2% stake in the counter. We have given this a neutral rating only because DI holding has overall gone down quite significantly, and we've taken a conservative approach here, but we've seen good marquee investors that have already invested in the company. That shows their confidence in the company as well.
I want to quickly mark out one piece here. The DI number of 18.5% was in March of 2022 included a 10% stake of Nalanda. Now Nalanda has converted itself into an FII, and therefore that 10% stake has actually come here. It's gone down a little bit. Nalanda has sold off around 2 to 2.5% stake, and therefore that 2.5% delta versus March of 2022, but that's the one big addition. So that's one. Second, on the shareholding side, I see very, very interesting dynamics. One is you have a Vijay Kedia, which you correctly said. There's also an Ashish Kacholia, which owns 1.2% of the company. And of course, public shareholding has definitely gone up as a result of some of these marquee investors coming in and buying a stake. So that's how it's playing out. It's neutral only on the count that you're seeing outside of this 10% ownership of Nalanda, 8.5% has been sold by DIIs. Largely Motilal Oswal Mutual Fund to some extent has sold out. And therefore, maybe a bit of a neutral, maybe some overhang there. And you're also seeing Nalanda slowly sell. And that's why the neutral on the counter, on this metric that we're giving. But otherwise, it's very interesting, the shareholding on this one, Mahima. Let me though go ahead with regard to street cred. Well, not doing well from a street cred perspective, very frankly. The 6-month chart, stock is down 25%. When you're looking at the 1-year chart, it's down 38% in the last year. And the 5 years, it's down, it's up 58% only. So 5-year returns not too impressive. The question only is, is all the negatives really built in? But the way we are looking at the way street cred has played out, it's definitely a thumbs down. Valuations.
Right. So in terms of valuations, there's no direct peer for Vaibhav Global. So we don't have a peer-to-peer comparison here. But if you see the Bloomberg PE estimates for Vaibhav Global itself, the trailing 12-month PE stands at 29 times, which is not cheap for a retailer. And going forward also, the slide in PE comes to around 22 times in 2025 and comes to 14 times in 2026. 14 times, the slide from 29 times to 14 times is quite steep. But right now the valuation is not looking cheap, which is why we've given it a neutral rating. And overall, in terms of analyst recommendations as well, there are not a lot of analysts tracking this counter. It's just one analyst which is actually tracking it and has given a buy rating. And the return potential as per Bloomberg is 189%. But since it's just one analyst tracking it, we've given it a neutral rating, taking a conservative approach again here. So that's with respect to valuations and analyst recommendation. But what's the outlook like?
Why do you cover outlook?
All right. So in terms of outlook, we went to the con call and we saw that the management has given a revenue guidance of around 12%. This revenue guidance, however, has been cut down from 14 to 17% to around 12%. And this is because of performance in US and UK, and the consumer environment is right now muted there. Early teens revenue growth in FY26, and they remain cautious with respect to the macroeconomic trends, confident in sustaining profitable growth. And last lastly, they plan to enhance profitability through supply chain as well as adding new subscription box launches. So this is the overall outlook so far that the management has given for the company, Harsh.
Yeah, outlook definitely looking positive. But you know what? I'm not going to waste any more time. Very quickly on to a summary of the metrics. It gives us a 4.5 on 8 with regard to parameters, income statement, balance sheet, cash flow, return ratios, and thereafter we look at shareholding, street cred, valuation, street coverage, and outlook. That's broadly the way in which it's played out. 4.5 on 8 is our rating. Let's go across to the management. We spoke with them earlier today. Mahima was able to speak with the group CFO, Nitin Panwad. Listen in to what he had to say.
On the tariff terms, like global landscape is fluid at the moment with the multiple trade wars and the political changes happening. The tariff is now new thing which Trump administration has announced, and on the 2nd of April that he may impose some tariff on the multiple countries. But the multiple research report available in JP Morgan and other research reporters said that the maximum impact would be on Mexico, Canada, and China. However, India would be untouched upon it. But the vertical integrated supply chain model we not only operate in India, but also we have a sourcing in 30 different countries across the world, which establish us in a much better position to diverse our risk to mitigate all the tariff if they implement from 2nd of April. However, there will be definitely impact. We cannot say that it will not be impacted, but we operate with the lower cost of goods sold compared to other retailer, which will be compared to them, the duty impact on us, which will be lower than that. And it will not only for us, the duty impact will be across all the retailers. So comparing them, we have a two advantage of diversify our risk to the multiple sourcing countries we have, and also that we have a lower cost of goods sold. So comparatively, we have a lower impact on tariff.
Got it. Lower impact of tariff on Vivo Global is the takeaway from that particular question. Now, in terms of lab-grown diamonds, there has been a surge of demand where lab-grown diamonds is concerned, especially in the US and the UK. And as of the last quarter, we saw that around 9% of your overall revenues is now from lab-grown diamonds. I just want to understand as to what are the key trends that you're observing where lab-grown diamond sales are concerned, and what's the outlook like? Where will this 9% number go to? And overall, how will that impact your margins as well as top line?
Sure. Yeah, so in past 9 months to 12 months, the lab-grown demand is increasing quite a lot. And we have seen that customer is asking more for lab-grown, it is more affordable than the natural diamond. The pricing is 1/10 or even lower than the natural diamond, and we see continued good response. The two advantages that we have for the lab-grown, one is the customer demand and velocity is quite high when we sell the product on air on the social media, and also that we have a higher gross margins on the lab-grown product as we have sourcing in multiple countries the lab-grown product. And also that we have seen over the time period, we have a lower sales return also for the lab-grown products. So we continue to see that product share is increased from 3% in Q1 to 9% in Q3. And we expected that it will hit the double-digit share in near term in lab-grown products. So it will continue to expand the near terms the lab-grown product. As we have seen, the customer acceptance and velocity is quite high, and we believe that the share of the lab-grown product will reach to double-digit near term.
Okay, and with respect to your Germany business, overall in Q3 there was a robust over 30% revenue growth, and you also in your con call said that you are expecting positive momentum in Q4 as well. In terms of contributing towards the bottom line, do you expect Germany will start contributing towards the bottom line in FY26?
Yeah, so FY25 Q3 we have breakthrough with Germany. And now it will start contributing in terms of more profitability in upcoming quarters. Germany not only contribute in terms of the operating margin, but also contributed in the lower tax rate as the carry forward losses is pretty high in Germany. So the once the profit will generate, so the effective tax rate will also reduce for the company and continue to be expecting, even with the recessionary environment in Germany, we are continuously growing in the past quarter 30% growth. And we expect that will continue to grow and generate more market share and more market margins from Germany operation.
Got it. And in terms of your US and UK business, because when I went through your con calls, I saw that Q2 you had given a guidance, revenue guidance of a growth of around 14 to 17%, which you actually lowered to 12% in Q3, and this was because of muted consumer sentiment in the US and UK. I just want to understand as to how things are looking like now in US and UK, and in terms of demand where consumer sentiment is concerned, and going forward, do you expect that to improve in FY26?
Yeah, so consumer demand is still muted, and especially with this tariff and the multiple trade war situation, the customer is still cautious of the discretionary spending. However, customer is spending on the investment item. We see the values kind of like a gold or the other high-end items where they perceive some value, but the discretionary demand is muted. And our value proposition, our model is value proposition. We offer quite a lot of the discretionary products, but the ability and agility we have to move the products where the demand lies. So we moved in past years our product more on the gold items and more on the higher price point items where they perceive some value. But we still see the economy in US and UK, both are muted, especially in Europe and UK. We are seeing the impact of the cost of living crisis over there. So that is why we have trimmed our guidance for the upcoming quarters.
Okay, so out of time on this edition of KYC with that conversation. We hope you found this insightful and helpful. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad bet last time we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm Malika Mishra. Let's take a look at how the markets are doing first. The markets seem to be continuing a volatile run as the Nifty 50 tumbles off the day's high and is now trading around 23,500 levels, while the 30-pack Sensex, if you see on your screen, is currently hovering around 77,600 levels with a negative bias as well. The broader markets don't seem to be showing any evident action as well. As you see, the Nifty Mid-Cap 150 is about 0.04% down and the Nifty Small Cap 250 is down about over 0.5% as well. Let's check the main contributors to the pressure that we're currently seeing to the Nifty 50 basket, and you'd see on your screen that counters like Reliance, Axis Bank, Kotak Mahindra, Infosys seem to be adding some pressure to the market as well and pinching the index. On the other hand, you would see counters like M&M, Bharti Airtel, Trent, IndusInd are sort of providing some kind of relief at the moment. Let's take a look at the top gainers and losers in the Nifty 50 basket to see the broader picture and to get a sense of which stocks are exactly advancing and declining in trade. And you'll see significant proportion of losers led by NTPC, Tech Mahindra, Cipla, DRL, Axis Bank. These are all actually losing. Cipla being down 1.61%, SBI Life over 1.5% down, Axis Bank also 1.27% down. Let's take a look at the top gainers, and you'd notice that IndusInd Bank comes on your screen, is over 3% up. Then there is M&M, there's Trent, also around 1.5% up. Let's take a look at Power Grid. You'd see Power Grid is about 0.76% up, BEL 0.81%, and Adani Enterprises 0.58%. So some handful number of counters that are doing well, but largely a lot of counters are in the negative zone. Let's take a look at the sectoral heat map to understand which sectors are losing the most. And you would see a lot more red than green, as I mentioned, just 1.5 rows of green, as you can see on your screen. And media, pharma, oil and gas, realty, IT, these are the top losers as we speak. And on the other hand, you would see counters like, sectoral sectors like, you have your auto, you have your metal, defense. These are only gaining. Let's also take a look at the advance decline ratio to understand the market breadth. And you'll see that a lot more declines than advances. In fact, just about 600 stocks at the moment are advancing. Therefore, the market breadth is heavily skewed in favor of the declines. Now, US President Trump is all set to implement reciprocal tariffs on trade partners in an attempt to extract concessions for his country, which has a high trade deficit. Now, Trump is said to be implementing tariffs in a targeted approach, and he has targeted India for its high tariffs on cars and motorbikes as well. Now, which sectors are likely to be hit? My colleague Sajid Manghat has written in a detailed report, and he's standing by to explain what he's picked up.
That's right. Barely 5 days left for the US to impose the reciprocal tariff on many of the partner countries with which the US has trade relationship. If you look at India and US trade, India exported roughly around $80 billion in 2024 calendar year and imported roughly around $44 billion from the US. And that's where the India's trade surplus is, and that's where the deficit is for the US there. And the US wants to bridge that deficit by imposing equivalent tariff which India imposes on anything which is imported from the United States. If you look from a tariff perspective, while it is not clear on what basis the reciprocal tariff will come in, whether it's going to come in at the country level, whether it's going to come in the industry level or sector or product level, that's not known yet. But what is available is that India imposes a higher tariff on an aggregate basis, on a weighted average aggregate basis compared to the US. So if you look at the countrywide tariff rate which is there, India charges roughly around 7.7% tariff, while the US has a 2.8% tariff for anything that it imports from India. And so the differential there is around 4.9% of tariff there. This entire differential is primarily driven by the agriculture segment, where India imposes nearly 37.7% tariff as compared to 5.3% by the US. So there is a huge differential with respect to agriculture of 32.4%, which is there. In the industry part, India doesn't have much of a higher tariff there, except if you look at India from an industry point of view or the manufactured goods point of view, it's 5.9%, and for the US it's around 2.6% there. So the differential is very minimal with respect to industry there. But what is important to note is that in the US-India trade, 95% is the manufactured good and only 5% is agriculture. So when the weighted average comes in, that's why the weighted average is much lower at 7.7% there. So what India could do is, rationalize some of the industrial tariffs, or manufacturing goods tariff, which it exports to the US or which it imports from the US. and as a result of which it can escape this entire reciprocal tariff there. The reason being is one, India has a free trade agreement with Japan, South Korea and ASEAN, and these three countries account for 90% of the entire industrial goods that we import, and we import them at zero tariff, and the same can be offered to the United States, and that's where the entire negotiation lies, that whether India is able to convince the US, saying that it's opening up the entire industrial goods segment at zero tariff for you, because anyways India is importing them from the three countries with which we have FTAs. India is also looking at a bilateral trade agreement with the US going forward, so some of that would get implemented by the end of the year and over the next 1 or 2 years as the negotiations progress. But as of now, it seems that there is some sectors which will be impacted the more because of the kind of differential which is there on the tariff which we have. On top of it is agriculture goods, where the differential tariff is around 32.4%. That's followed by auto and auto components. While auto components is a very small tariff that we have, but together auto and auto components has a differential tariff of nearly 23.1%, followed by gems and jewelry at 13%, chemicals and pharma at 8.6%, plastics at 6.9%, and machinery at 3.9%. Two sectors where there isn't going to be much of impact is iron and steel, and the textiles, because not much of an import we do from the US, and our tariffs are anyways lower in those segments there. So on a holistic basis, it needs to be seen how US is going to impose its reciprocal tariff. If it's going to be on an country level, then the differential is around 4.9%. But if it's industry level, then every industry will have a differential tariff rate, and that's where India will have to negotiate hard with the US.
Right, Sujit, thank you so much. I think this information is so useful, especially for all of us who have been pondering upon how these tariffs are going to impact. And one thing that I pick up is that the most trade differential, as you may have already mentioned, that is going to be seen in the agricultural segment, followed by auto and auto components, with textiles, steel and iron being on the safer side. Let's see how FTA talks between India and US roll out in the coming days, and what kind of relief India could garner from these discussions. However, let's take a look at the auto industry as well. Both BofA and Jefferies have released note on the sector, highlighting weak demand environment among other things. And my colleague Sumit is here to explain us all the details.
Well, yes, auto stocks would remain in focus in trade today, given the fact that March is about to end, so the sales number would start coming in, or the estimates would start coming in before that. And also a couple of brokerages, in fact, BofA and Jefferies, both have come out with kind of negative notes on the auto sales. Now, what Bank of America here is saying that March demand was quite weakish. They're saying weak retail trends for both two-wheelers and passenger vehicles in the month of March, and they're also saying that the underlying inquiries or walk-ins have also been quite subdued in the month of March. Now, among all the auto stocks, including four-wheelers and two-wheelers, Eicher is one thing that they have pointed out, and that company could stand out, and they're expecting sub 90,000 sales again from Eicher Motors in the month of March. As well, for passenger vehicle OEMs, they're expecting, or they're saying that the annual price hikes that they have taken of around 2 to 3% is something that they have done in past also, but sustainability of this will be important to watch out for going forward. For electric vehicle, they're saying that the adoptions have been quite weak in the two-wheeler space. In fact, the adoption is weak despite the fact that electric vehicle two-wheelers are quite cheaper when compared to petrol two-wheelers as well. Apart from that, they're saying that the commercial vehicle has seen some stabilization in demand in the month of Feb and March, and from tractor segment, they're expecting a strong uptick in the upcoming season. For April month, they're saying that will be an important month to track, given the fact that there is festive season coming up, there are wedding dates as well, and some easing out of financial will also aid to demand in the April month, but that is something that they will be watching out for. And in the auto space, their preferred picks are Eicher, Mahindra & Mahindra and Maruti. Now, when it comes to Jefferies, they're also concurring with the view of BofA. They're saying that the auto demand have been quite weak in the recent months. In fact, in the month of Feb and March, they're saying that the auto retail sales were down around 11% for passenger vehicles and 6% down on a YOY basis for two-wheelers. They're saying that channel check checks that they have conducted with nearly 50 dealers of passenger vehicles and two-wheelers are suggesting weak inquiries in both the segments, and they are also saying that the inventory levels for passenger vehicles continue to remain on the higher levels, and for two-wheelers, another issue that that customers are facing is stricter financing that is happening currently in the market. And there's when it comes to Jefferies, they're saying that amid this underlying demand, they are preferring stocks like M&M, which has been outperforming in the passenger vehicle space, and TVS and Eicher, which have been outperforming in the two-wheeler space.
Right, so Amit, thank you so much for bringing us those details. Now, ZF Commercial is buzzing in trade today after Ministry of Road Transport and Highways has announced fresh proposals for buses and trucks. My colleague Mihika is joining us with the highlights of how this new proposal will benefit ZF Commercial.
So in terms of what has been proposed, the MORTH has mandated two systems for buses and trucks to be taken into consideration. One is the Advanced Emergency Braking System, or AEBS, and ADAS, which is the Advanced Driver Assistance Systems. And the proposed mandate timeline for new vehicles is October 2026, and for existing vehicles, it's October 2026, and for new vehicles, April 2026. Now, ZF Commercial is a major maker of both these systems. One, in terms of how it could benefit. Now, addition of both these systems can add content per vehicle of up to 80,000 rupees. Even if you consider and assume a 50,000 content addition from October of 2026, this could help ZF Commercial's EPS. As per analysts, the potential increase in their FY27 and 28 EPS could be of 10% and 19%. And when you look at the change of estimates in terms of their revenue CAGR versus an old estimate of 14%, this could increase the estimate of a 30% CAGR, and for the EPS, a 29% EPS CAGR over FY26 to 28 versus an earlier estimate of 18%.
Right, and now Goldman Sachs has issued a note on AU Small Finance Bank highlighting its industry-leading earnings growth profile. However, an important one to note here is that the brokerage has also cut the target price on the counter despite maintaining a buy rating. Let's get in Harsh to understand their view on AU Small Finance Bank.
Yeah, absolutely. They're calling this growth at the right price, and that's what's really making it attractive for them. 31% earnings compounding is what they are seeing on this one. Of course, EPS may not be the best metric, but we did some analysis earlier today, and even in terms of price to book, this one is trading at over a 50% discount to the 5-year average price to book. So growth at the right price is, I believe, what Goldman Sachs seems to be really punching on this one. Valuation derating, they believe, is an opportunity. Sector leading earnings growth 31%. I did speak about that. FY25 to 27. Believe AU will start likely delivering with a strong growth momentum in FY26, which could be a lever for the re-rating, and that's where Goldman Sachs believes that AU stands out. Of course, they've cut the target price, but just by 2% thereabouts. Believe it's just a minor adjustment, and therefore the upside even from here looking very healthy on this one.
Right, Harsh. So, another brokerage call of the day. Nuvama has initiated coverage with a buy rating on Lakshmi Dental with a target price of 570 rupees. Could you please explain what else has the report highlighted about Lakshmi Dental?
A 40% upside. So really healthy. They've initiated coverage. They believe that formalization with regard to dental and dental care in India will largely be led by a consolidation, and one of the plays of that is surely Lakshmi Dental. Now, in terms of the market itself, they believe that it's an underpenetrated market. This is Nuvama's view. It's got Lakshmi Dental in particular has a wide range of product offering, 22,000 plus strong dental network, which is also unique. Catalysts with regard to the stock and the lab business is one, there's a shift to metal-free products, which will likely drive numbers. You'll also see digitalization, especially with physical impressions now shifting to digital. That is the other big shift with regard to the business itself, and there's a larger focus with regard to export growth as well. So those maybe 2 to 3 levers will well keep the growth with regard to this business poised. You're seeing the lab business revenue growth expected to be around the 20% CAGR number, so extremely healthy on that count. Margins in the meantime to expand by over 9% absolute. So the margin number will sit at around 22% is what they're penciling in for FY27. They value this at 40 times FY27 expected earnings. It's still a 25% discount to Polymedicure, not exactly a peer, but nonetheless it's something that they've looked at and they've said that it's at a 25% discount. And there's also another Chinese company. So they've taken a couple of these as related companies and therefore compared their valuations. Key risks being one, slow ramp up with regard to the aligners product, geographic concentration and a pending CBI case. Those could well be overhangs as well.
Right, so therefore, on that note, you must have Lakshmi Dental on your radar. Now, Indira IVF Hospital, major fertility clinic chain, has withdrawn its DRHP for IPO plans, which they had filed via a confidential route. Now, this comes after SEBI has raised objection over the release of the founder's biopic. This is an interesting one, and my colleague Agni is joining us with more details on the same.
Our sources are telling us that this is a strange but true incident that has taken place. So SEBI has raised concerns over Indira IVF's IPO and the timing of the biopic that has been released. Now remember, last month Indira IVF had confidentially filed draft papers for an IPO, and we know that they were looking to raise around 3,500 crore rupees from it. However, a month after the IPO was filed, a movie came out about Ajay Murdia's life, a fictionalized version of his life, and the movie was produced by Indira Entertainment. Now Ajay Murdia's sons are credited as producers in the movie, and SEBI has said that this looks like an indirect promotion for the company at a time when details of the IPO are not made clear to the wider public. So this is sort of what pushed the company into withdrawing draft papers, because there was a regulatory lens over the timing of the movie and the link between that and when the company has filed for an IPO. We will be giving you more details, we'll be bringing out additional details, but this is a developing story, so stay tuned.
Right, so a film coming in the way of IPO plans is definitely a strange one. Now, counters like NCC, Wellspin Enterprise and Vari Renewables are also in focus on the back of order wins. And my colleague Mika is joining us back to explain these orders to us.
The order wins that we have in focus, up first we have an NCC. It's received two major orders that aggregate to a total 10,805 crores, and these orders are received from BSNL. Order 1 is valued at around 2,640 crores, while the second order is valued at 8,100 crores. Now, the orders are for the BharatNet in Uttarakhand as well as Madhya Pradesh. Construction period is at 3 years, but there's also a maintenance part of the contract, which is for a period of 10 years. In terms of the order inflow details, NCC has seen a strong order inflow this quarter. March 25 so far, 14,415 crores worth of orders that we've seen the company getting. Feb 25 marked 218 odd crores. So the estimated order book, depending on what they closed in Q3, is at over 70,181 crores. In terms of the second stock, it's Wellspin Enterprise, where this arm has received a 209 crore order from the BMC. This is for the upgradation of the Haji Ali Storm water pumping station, and this order is expected to be executed in 18 months, but this 18 months starts from October 1st of 2025. In terms of the total order book of the company now, Wellspin Enterprise has a total order book of 2,915 crores. EPC part of this is 2,670 odd crores, and the balance is operations and maintenance order book. And lastly, a Vari Renewables, they received a letter of award for a 232 crore order. This is received from their promoter Vari Energies, and it's for the EPC work of a 170 megawatt ground mounted solar project, and the project is scheduled for completion by FY26.
Right, Mika, thank you for bringing us those details. And now, on that note, viewers, let's shift focus to Anant Raj. We have been bringing you exclusive action from the Motilal Oswal Financial Services 11th Ideation Conference, during which we had a conversation with Manoj Goyal, who is the Chief Business Officer at Anant Raj, about the current operational capacity expansions of data centers. Let's listen in to a slice of that conversation.
Data center industry is an emerging industry. Country has a sizable number of data center in the country, but it is not enough to meet the requirement or the demand that is getting generated. This is number one. Number two, what was happening, the India is generating about 28% of their data globally, but only storing 1% of the data in the India. So there is a requirement to push the data's digital infrastructure in the country. Secondly, because of the penetration of Internet of the things, 5G, and the government push to localize the data and have a Data Protection Act which was passed in Parliament, that is leading to further generation of the demand for the data center. Currently, the capacity that we have about 900 megawatt, and based on the projections, in next 3 to 4 years, will be requiring about 3,000 to 5,000 megawatt of the data center in the country to meet the requirement. The growth of artificial intelligence globally is another factor which will lead to increase in the requirement of the digital infrastructure and the data infrastructure. As Anandraj, we have stepped into this business and we have aggressive plans, as you said, 307 megawatt, along with the cloud services, which is infrastructure as a services, and from a current 6 megawatt capacity, very soon we will be operationalizing about 28 megawatt of the capacity and will be ramping it further to 307 in 4 to 5 years time. So we see is a huge potential, and there is a huge gap between the demand and the supply for the next 4 to 5 years time. And since Anantraj already has the buildings ready for 157 megawatt of the data center, we have an edge over the people who are just starting constructing the data center. So that 4-year runway we have over other peoples that want to get into the data center.
Mr. Goyal, while the plan is very strong in terms of where the data center is for the next 4 years, what to just get your outlook? Firstly, you've mentioned about the 28 megawatt addition which is going to take place, and eventually moving to the 300 odd mark that we are looking at. I want to understand from you, with these kind of additions which are going to take place, what is the kind of growth that we expect for the business in terms of the overall picture if we look, and even the cloud services business, as you've mentioned, is mainly more margin accretive. So I want to get your perspective on the overall margin shift and the revenue growth that you're seeing in the next 4 years as compared to what we have seen in the past for Anantraj.
See, if you look at the trend, so if we talk about the co-location or hyperscaling business, the revenue potential has increased. So from about 90 lakh rupees per megawatt per month kind of rentals for the racks, it has increased to 1.1 crore in a certain segment of the data center. The industry is at a nascent stage. It has yet to grow. As and when it will grow, when technology advancement will happen, when the push for more modern high-tech data center will come in, and ultimately this may lead to increase in the margins in a medium term, which we anticipate.
Well, viewers, that's all the time we have on this show, but do stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Beth, last time we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
the DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
Marks stumble amid volatility. Nifty down 0.5%, Sensex below the 78,000 mark.
Sectoral action remains mixed. Nifty Defence leads the way. Nifty Media and Pharma and FMCG drag.
Zomato and Jio Financial Services set to replace Jio Financial Services and Britannia in Nifty 50 tomorrow. Highest inflows expected from Zomato, JFS, Indian Hotels and Power Grid.
Siemens Energy India gets NCLT nod for energy division demerger. This is to unlock further value and will take place on April 7th.
And is it the right time to bet on power stocks? JP Morgan initiates coverage on 5 power companies. We bring you details of these counters and why JP Morgan is positive. Hello and welcome to Profit Buzzers on NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Datia and with me is Mika Barve. Mika, clearly an interesting day with regards to where markets go because we started off the week on an absolute positive note. Yesterday's session, there was profit booking that did come in the lag end. And overall, if you see in terms of today's session as well, we're pretty much now hovering around the 23,600 mark at the day's lowest levels. We hit a high of 23,736 on Nifty 50. Let's quickly pull up Bank Nifty on the screens as well and see what Bank Nifty is doing. And then we'll have the sectoral heat map and the Nifty 50 heat map. Bank Nifty, there you go at the day's lows again with cuts of 0.3% coming in there. But what's interesting with Bank Nifty is that we're hovering around that 41,450 mark. 51,450 mark, I beg your pardon. And that 51,000 mark is a crucial support that we are seeing. And the FIs that are coming in, absolutely putting in money in the BFSI space. Tech is something that they're ignoring for the moment, taking into consideration the mood that is across in the global markets, the kind of job cuts that you've been hearing about, the consumer discretionary spending that is going down as well. And that's what is keeping them pretty much on the tender hook. So that's with regards to IT. But let's quickly have a heat map in terms of the various sectors. There you go. You still have defense, which is leading 1.7%. And I think on NDTV Profit, there was a conversation on Monday. You can go back on YouTube and check as to which are the defense plays that you should be betting big on from here on. You have Nifty Auto, which is also in the positive. Metals is trading with smart gains. Infra, energy and FMCG pretty much on the borderline. What's losing out? Media is on the downtake. Healthcare is trading under pressure. Pharma is trading under pressure. In fact, there has been a great update on the GLP-1 portfolio where Eli Lilly has gone ahead and launched Mounjaro. So that's going to be an interesting conversation that we will be having on this show, as well as an extended conversation on India Market Open tomorrow. Private banks also under pressure. IT, which is seeing cuts of almost 0.3%. Let's quickly pull up the Nifty 50 heat map and see what's happening on that front. IndusInd, interesting moves on that one, 3.5% up move. Trent is in the positive. M&M, you have Power Grid, Grasim, Adani Enterprises, Hindalco, HCL Tech and Adani Ports, which are up in trade. But if you see in terms of the advanced decline on Nifty 50 as well, clearly you can see it's in favor of the declines with a Tech Mahindra losing, Cipla also which is losing, which is the second top loser in terms of Nifty 50. But overall, if you see, what's interesting is, Mika, people, investors and fund managers are betting big on the large cap space. The clear picture that they have is that the valuations have actually got reasonable in the large cap space, but still no one really wants to touch the small and mid cap space. And you're seeing individual stocks which are really reacting well.
Even in conversations we had yesterday, valuations have not, come off to a reasonable space in the, small and mid cap space. But, we have conversations that are also saying that you need to be stock specific, and there are certain counters that are still giving a good, offering. Now, let's just quickly look at the broader markets. You have the Nifty Mid Cap 150, which is performing, the best in terms of the other indices. It's trading flat and, it's, flipping dipping with a negative and positive bias here and there, but the Nifty small cap 250 is the underperformer of today's day of trade, down about 0.65%. You have 182 stocks on the Nifty small cap that are declining versus just 61 advancing. In terms of something that is seeing large cuts today, you have Chola Holdings down about almost 5%. This is followed by weakness in Rajesh Exports, KFin Technologies. Both of these counters again down 4 to 5% in trade today. We also have some cuts in Suven Pharma, Tejas Networks, as well as a Credit Access. Some of the counters on the small cap on the other side, it is doing well. It's a Capri Global. It's up 10% right now. We've seen it's gained 10% from its lows at the day's highs. You've continued strength in HEG yet again. The stock is already up 13% in the last 2 trading sessions. That's up 6% right now, followed by an NCC on the back of an order win, which we'll talk about in some time. And counters like Graphite India also continue to trade in the positive. But with that, let's just welcome our guest for today, Gaurang Shah, Head Investment Strategist at Geojit Financial Services. Welcome to the show, Gaurang. But before I come to you, I just want to talk about the Nifty reject. Zomato and Jio Financials are one of the companies that are going to be included in the Nifty from tomorrow as a part of the semi-annual reject. We have Somit joining us with the details of the inflows and the outflows and what can be expected once this reject comes into effect. Somit.
Well, multiple stocks remain in focus on the back of the Nifty reject, which was announced a month back. But whatever changes were announced a month back, the flows regarding the same, in fact, the passive flows regarding the same, are expected to happen on March 27th. So we give to you which are the stocks that we need to keep an eye out for. Firstly, it's Zomato, where inflows of around $321 million are expected on March 27th, which is nearly 2.6 times its 20-day average volumes. For Jio Financial, inflows of around $200 million are expected. Apart from that, keep an eye out for Indian Hotels, Power Grid, and CG Power. Inflows of anywhere between $47 to $85 million are expected in these 3 stocks. Now, when it comes to outflows, Britannia is a stock that is expected to see the highest amount of outflow of close to $153 million, which is nearly 8 times its 20-day average volume. BPCL is expected to see an outflow of close to $145 million, which is nearly 4.6 times its 20-day average volume. Well, apart from that, it's Bajaj Finance, Kotak Mahindra Bank, and NTPC, which we should keep an eye out for, which could see an outflow of anywhere between $72 to $79 million, which is nearly 1.2 to 0.6 times its 20-day average volume. Now, this is the net inflow and outflow that we are expecting in these stocks across all the indices, that is Nifty, Nifty Next 50, Nifty Mid Cap, Nifty Small Cap, and also the CPSE index that we have. So keep an eye out for a host of stocks on the back of the Nifty reject, which is expected to happen on March 27th.
Thank you, Samit, for giving us those details. Gaurang, I'll come to you. You have the inclusion of Zomato and Jio Financials into the benchmark, and BPCL and Britannia, 2 of the counters that could potentially be moved out. Any specific view on these counters? How does it fare well for a Zomato, and how does it look for something like a BPCL?
Well, thank you, Mika, for having me on the show. So first of all, let me give a prudent disclosure. We have coverage on Zomato, Jio, Britannia, and BPCL. Now, Mika, you realize one thing. Of course, I agree with what your colleague was just mentioning about flows and outflows. But does this entry-exit materially impact the fundamentals of the company, or does it impact its earnings? I would beg to differ. It does not have any material impact on the earnings or the working of the company or the fundamentals. Yes, for that particular day, as and when these adjustments are going to take place in terms of entry and exit, you may have flows coming in and going out, which may have maybe for that hour kind of reaction on the stocks. But if you ask me, fundamentally, there is no change. We've been maintaining a positive stance on BPCL, Britannia, Jio, Zomato for a very long time, and we continue to do that, including some other names like Indian Hotels, Power Grid, etc., which may possibly be in the news flow for these entry-exit related levels. But we remain positive on all these programs.
That's the word coming in on companies. And the reject that could be happening on Nifty 50. But moving on, a whole host of other companies which are in focus today, and this is on the back of order wins. L&T, NCC, Welspun Enterprises, and Waaree Renewables. Let me head across to Anushi to get more details on it. Anushi, a whole host of companies that you're seeing are buzzing in trade on the back of order wins, which is in terms of priority, making to the top of the list on the back of the reactions.
Hiral, which first of all, if you look at that in terms of order wins, what stands out is something like L&T. It's a significant order that we are looking over here with a size of around 15,000 crore, marking the biggest order for the company till date. This is for the offshore hydrocarbon business from its Qatar Energy LNG. That's where the company has received the order from. And this is for North Field Production Sustainability offshore compression project that they have. So this is in the ultra high category that we are looking at in terms of the order flow is concerned, which is at the size of 15,000 crore. Now, if you look back to the 9-month picture and look at how the order inflows had shaped up, order inflows were up around 16% at 2.67 lakh crore as of December 24, and order book was up around 20% at 5.64 lakh crore again as of December 24. Second one on the list is also a particularly big one that we are looking at, which is NCC. They've received 2 major orders worth about 10,805 crore from BSNL. These orders are for the BharatNet in Uttarakhand and Madhya Pradesh with a construction period of around 3 years, along with a maintenance contract after that for 10 years. So NCC is another stock in focus. If you look at the order book of the company, that stands at about 55,500 crore, and they have guided for a order guidance of 20,000 crore as of FY25. This picture is concerned. Coming to the third one is Welspun Enterprises, wherein subsidiary Welspun Michigan Engineers have received a 209 crore of an order, and this is from BMC that they have received this order for the upgradation of Haji Ali stormwater pumping station, with the expectation that this order is to be executed in the next 18 months. Now, total order book of this company stands at 2,915 crore. So that's where Welspun is in focus. And the last one on the list is Waaree Renewables. This is after they have received a letter of award worth about 232 crore. And this order is for the EPC work of a 170 megawatt ground mount solar project. Order they have received from their promoter, that's Waaree Energies, and this is to be completed in FY26 period itself. So these are 4 big order wins that we are looking for, various of these counters that we just talked about.
Thank you, Anishi, for getting us the details. Gaurang, Waaree Renewables, NCC, L&T, and I mean 4 of them that are in focus in today's session. Again, where would your bets be? I think the 4th one is just what I missed, is Welspun Enterprise. Yeah.
So hi, good afternoon to you as well. So I will restrict my comments to HCC and L&T. On L&T, we have a target on the fundamental side of somewhere close to about 4,200 approximately. On NCC Limited, I think the risk reward is extremely favorable. From where it is trading, our target is somewhere close to about 340 approximate. These 2 companies continue to remain on our radar. On Welspun and Waaree, well, on Waaree, I think the stock has been a stellar performer before we saw the correction come into the markets and into the stock. And the kind of valuation that it is fairly valued, though we don't have coverage on Waaree Renewables, so I won't give any specific comments. But this sector looks very exciting to us.
Got it, Gaurang. The next counter that we want to talk about is a ZF Commercial, and this is a counter that is buzzing quite a bit in trade today, and this is on the back of the MORTH proposal. Now, the MORTH has proposed mandatory 2 systems for buses and trucks. One is an AEBS, which is an advanced emergency braking system, and an ADAS, advanced driver system, and the proposed mandated timelines for existing vehicles is for October 2026. For newer vehicles, it's April 2026. And ZF Commercial, has seen can benefit from this announcement because it's a maker of both of these systems. In terms of how the benefits, what the benefits are. Well, both these systems could add content per vehicle of 80,000 rupees. And even if you assume a content addition of 50,000 rupees from this mandate from October 2026, it would help ZF Commercial's EPS. Now, the potential increase in the EPS of FY27 and FY28 as per analysts is at 10% and 19%. And it could also change the CAGR estimates over FY26 and FY28. Revenue CAGR could see a new estimate of around 30% versus an old estimate of 14%. And EPS CAGR could see of 29% versus an 18% earlier. So this is why the stock has been buzzing in trade. It's up about 6%. Gaurang, we do have, a proposal that's come into the picture by the MORTH. You've seen ZF Commercial, surge in trade today. Your view on what lies ahead for this counter and how this proposal could help it?
So, Mika, these two proposals are basically to safeguard the ultimate unpleasant situation in terms of if there is any kind of accident or something like that. So both these proposals are basically to make commercial vehicles more safe on the road and to enable driver to handle the situation in case if something comes up. As far as ZF Commercial is concerned, prudent to give a disclosure, we have a positive coverage. Stock is up today close to about 6.6%. 780 rupees uptake, and our targets on the long-term fundamental side is somewhere close to about 13,100. The only thing that I would like to mention over here, for those who are planning to trade into the stock after seeing 6.5% uptake, please be very, very careful because the volumes are very, very thin on this counter. Fundamentally, it's a different story altogether.
Absolutely. Fundamental different story. I think in the morning when I was seeing 2,100 odd shares were the ones that were being traded, and that was, I think, literally 5.5 times your average 5 or 7 day volume. So I think on a daily basis you're not seeing more than 150-200 shares that get traded on a ZF. So that's an interesting one, but business looks pretty strong from what's happening on the benefits that it'll get from the MORTH proposal as well. But let's quickly pull up NTPC on the screens first before we look at the next stock. You have a Jindal ITF versus NTPC update that is coming in right now as we speak. What they have indicated is right now that I'll wait for the first line to come in so far, but they're refusing to stay the order in the NTPC Jindal ITF arbitration case. That is what has come in so far. The judge has rejected the arbitral award favoring Jindal ITF on the plea that was put in by NTPC. The arbitral tribunal had told NTPC to pay almost 1,890 odd crores to Jindal ITF. In fact, just a quick update was that the Delhi High Court had also overturned the 2019 arbitral award directing NTPC to pay 1,891 crore damages to Jindal ITF for alleged wrongful termination of a coal transportation agreement, and the court had noted that the award was patently illegal and violated public policy. On the back of this, if you let's just pull up a NTPC on the screens and see what's happening on that one as we on the in terms of the stock price. There you go, at the day's lowest levels. Very quickly, Gaurang, any update on this one?
Well, I think news is just flashing in front of me as well, but this has been a long standing from 2019, as you were mentioning rightly, and I think corporate obligations, if any, not met with, will definitely land up in the courts, and the court's verdict is to be upheld with all respect and dignity. Since we are discussing about NTPC, let me give a disclosure. We have a buy recommendation on the fundamental from a long-term point of view on NTPC.
Right, so that's NTPC, a long-term positive from a business perspective. But Siemens, on the other hand, is in focus, and this is on the back of the NCLT Mumbai approval that did come in on the back of the demerger record date. Anushi is back with us for more details. Anushi, more details in terms of the demerger?
Right, Hiral, thanks for that. So in terms of the demerger, now most of the details were already out. Now we have the record date update which is there. So if you are looking at NCLT has approved Siemens Energy India demerger, and they have set 7th April as the record date for this demerger to take place. So if you are looking to buy, the last day to buy shares to be eligible for having Siemens Energy shares, it's 4th of April is the last day to do so. The demerger ratio stands at 1:1 of ratio that we are looking at. In fact, also let's talk about how Siemens Energy has performed, Siemens Energy India has performed in terms of the Q1 numbers for the company. Do note that the company follows another accounting method in which they follow our financial year in October to September period. So if you are looking in terms of revenues, they have seen about 28% of growth, while the EBIT margins, they have improved to 21.5% versus 10.9% last year, and net profits saw about a 2.5 times of a growth to 243 crore. In the past, we have seen a couple of brokerages being bullish on the demerger taking place. In fact, we had a Jefferies note wherein they believe that the demerger of energy division is expected to unlock further value for Siemens India, so that could potentially add value for the business, and they expect around 8 to 21% of an upside considering this demerger takes place. Even Motilal Oswal had a favorable outlook on the energy business prospects for the going forward. They see that there is strong demand remaining for the India and the overseas demand which is there, and continuous focus on the T&D side of the business, as a transmission and distribution along with renewable capacity addition, is going to support Siemens Energy India division as well. So this is the overall outlook that we are looking at. The stock is buzzing after the record date has been set for on 7th April.
Right. Thank you for getting us the details, Anushi. Gaurang, how are you looking at Siemens India and the demerger? Do you think someone who's not holding a Siemens currently should get into the stock and take the benefits of the demerger?
Well, not only to take the benefits of the demerger, Hiral, but also thereafter, post-demerger. Our sense, Hiral, is that the entire cap goods engineering space is going to look very, very attractive in terms of order inflows. And via execution of those order inflows, the earnings is going to report better than expected. This is what our assumption is. On Siemens, well, again, to give a disclosure prudent enough, we have a target of somewhere close to in excess of 7,600. Demergers like this, Hiral, has proven history in terms of value unlocking and wealth creation. So we believe that this will also be in the same line. So if you're not holding a Siemens in your portfolio, or if any other capital goods engineering stock, I think it is time, including likes of L&T, ABB, Siemens, Cummins, KC International, to name a few. We are positive on all these stocks. And if you do want to invest, forget about demerger, but even post that from a long point of view, because you will get benefit of both the entities.
Got it, Gaurang. Thank you for giving us the details. But, moving on from order wins, we're going to real estate. The space is in focus after Axis Capital's February report. My colleague Anushi joins us yet again with more details from the report. Anushi, what do the details say?
Right. So if you are looking at what Axis Capital is talking about, is the key operational trends that we are looking for the February ones, which includes the launches, the absorption, how the inventory trends are faring up. In terms of launches are concerned across the top 7 cities, we're looking at a 49% of a drop in the month of February. Now, this is a significant downtick that we are looking at, considering even in the past few con calls, we have seen the companies citing RERA approval challenges over there, leading to a slowdown of pace of launches that we have seen. MMR, NCR, Hyderabad and Pune were some of the key underperformers in terms of where the pace of launches are concerned. However, on the flip side, Bengaluru emerged was the only outlier, seeing about 19% of a year-on-year growth in terms of where the launches are concerned. So that remains on a healthier side. So this brings focus to the southern-based developers, which are there, like you say, a Prestige or Brigade enterprises or so. However, if you look at absorption trends, they have comparatively remained stable in terms of if the launches were compared. Absorption was down about 5% on a year-on-year basis to 56 million square feet. So due to the demand mismatch that we are seeing in terms of launches and the absorption trends, inventory has declined 7% on a year-on-year basis and 3% on a month-on basis to 717 million square feet, and inventory has remained on the lower side of that in the last couple of months that we have seen. It has stayed below the 500,000 mark, in fact at 484,000 units. So these are the trends that we are picking up for the month of Feb in terms of launches, absorption and inventory.
Got it, Anushi. Thank you for giving us those details. Gaurang, I'll come to you. I mean, the Nifty Realty has seen a pretty good uptick this month, up about 8%. But, when you look year to date, it's still the top sectoral laggard in 2025. Are there any pockets within the space that look attractive to you?
I think real estate, again, it's a sector that you have to look at it from a longer gestation. There are times when your registrations are at lower levels, both in terms of residential or commercials. interest rates coming down is a big positive for real estate sector and housing finance companies. This is what our understanding is, Mika. We have four names: DLF, Godrej Properties, Shobha Limited, and Prestige Estates. Now, incidentally, the uptick that we have seen in Bangalore, Shobha Limited and Prestige Estates are the two real estate companies based out of state of Karnataka, Bangalore city. But we remain positive on real estate, and these are the four names on the fundamental side.
Right. So that's with regards to where real estate as a space goes. Let's just quickly pull up a Hindustan Aeronautics on the screens. You have an antique report that has come in. 4% is the kind of up move that you're seeing on the counter. They have a buy rating with a target price of 4,887. That's an interesting one. The stock has actually gone up to the day's highest levels as we speak. 4160 is where the stock is trading at. GE Aerospace has gone ahead and delivered, successfully delivered. Delivery elevates concerns on engine availability to execute 83 aircrafts is what they're looking at. GE Aerospace delivers their first one, and this is a successful one, and they're looking to execute 83 aircraft order from here on. So a strong call coming in from an antique. 4157 is where Hindustan Aeronautics is trading at, and probably a further upside on the back of the recommendation Antique has given so far. Very quickly, Gaurang, your view on HAL, because the defense space apparently is now making a comeback.
Well, absolutely, Hiral, and we are positive on this sector. We have coverage on Cochin Shipyard and BEL. Hindustan Aeronautics Limited, I think after the delivery of the first F404 fighter jet engine, the hurdle that was there is now away, because the delivery of the next gen Tejas MK Mark II is now virtually coming into a reality, as it will shape up from a long-term point of view. Not only that, I think the light combat helicopter in form of Prachand has also delivered better than expected performance, and there are good order inflows coming in for HAL. I won't give a specific buy, sell and hold on HAL because currently we don't have a coverage, but it is one of the strongest competitors in terms of long-term investment idea as far as defense sector is concerned.
Got it. One of the strongest ideas in the defense space and one of the strongest gainers today. But on that note, let's just take a quick break. But do stay tuned. Lots more lined up on the other side.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. Let's now move to, two stocks that have been gaining steam all week. HEG and Graphite India. If you could just pull up those two counters right now. We have HEG up 4.5%, even Graphite India seeing some strength up 2%. And even if you look at, the last two trading sessions, barring today, HEG is up 13% this week. Graphite India is up 7% this week, and the major trigger was Japan's cabinet, which imposed a 95.2% anti-dumping duty on China, and this is on Chinese graphite electrodes, and this duty is supposed to be imposed for 4 months as a provisional measure. It's effective March 29th, and this is after a decision, after a report in a government probe that talked about how China was exporting unfairly low-priced graphite electrodes to Japan. Now, Japan is a big market, and you have HEG and Graphite India, both of these companies that do export to over 30 plus countries. 67% of HEG's FY24 revenues did come from exports, and Graphite India's 35% of their revenues came from the export markets. But one
thing when you mention about the weekly growth in terms of both these counters, if you see the rally in the last 2 days itself, it's almost around 15 to 20%, right? That's right? So that's an interesting aspect to pick, because the moment these one stock moves, the other one
always move in
together.
Tandem,
exactly,
because they are operating the same space, fairly similar capacity profiles and fairly similar customer profiles as well.
Whose utilization is lower right now?
Right now?
Between the two of them, because I think the one whose utilization is lower is going to be itching to export more.
That's true, but it also depends when you're talking about Japan, and if there's an opportunity in Japan, it depends on who already has exposure, okay? Because they have those contracts and they have those end customers, and it's actually HEG, very minor revenues from Japan, 6 crores versus 1,500 crores in exports for FY24. But there could be, an opportunity there. Gaurang, I'll come to you, and I also want to welcome Gaurav Sharma, Associate VP, Head of Research, Equity, Commodity and Currency at Globe Capital. Gaurang, Gaurang, I'll come to you. You know, Japan imposing on anti-dumping duties on China. We have HEG and Graphite India, two major global players, not let alone India. Could this be an opportunity for them?
So, Mika, I don't know about you, but I'm sure Hiral will remember this. Both these stocks, Graphite and HEG, were a lower double digit or a lower three-digit stock. China was exactly the reason why these stocks rallied to four-digit because of the ban on graphite electrodes in China at that point of time. Rest is history. I don't want to go into it. We don't have any specific coverage also on HEG and graphite, so I won't be able to comment on buy, sell, and hold. But I would definitely advise a word of cautious on both these names.
But Gaurang, you know, I was just reading a couple of articles, and clearly what they were indicating is that with HEG, who has almost 100,000 ton capacity, they could be grabbing almost 3 to 4,500 tons of this gap, and that translates to almost around $35 to $40 million in terms of revenue. Now, taking this aspect into consideration, are the good days back for the company when we saw both the stocks, I mean, trading into those four digits? I remember the 3,000 number on either of them as well, what you're alluding to. But this is probably, if they're able to grab this opportunity, if they have the capacity, I think this is going to be something where we will probably see a good turnaround that could be coming in. But quickly, in terms of overall, Gaurav, your view in terms of charts, what do these stocks mean to you? Do you see any opportunity?
As far as technical chart point, is concerned, both these stocks has saw a good amount of run up in the recent past, especially in the past couple of days. So I would also not advise my clients to, actually get into, hop onto and look for opportunities in these specific space. As of now, wait for a dip because both these stocks are trading close to their resistance levels, and I think a dip is probably what one should consider from a trading perspective to enter into the stock. Not exactly right now.
Right. So that's with regards to HEG as well as Graphite India. But moving on, the pharma pack is absolutely interesting, and we're not talking about the overall pharma pack. We're talking about the GLP-1 portfolio, which is the diabetes portfolio. Eli Lilly has gone ahead and launched its type 2 diabetes drug Mounjaro in India. Now, probably, this aspect is actually in the news not only to treat diabetes, but a lot of people are using these GLP-1 drugs to reduce weight, right? Now, whether it's for the right reasons or not is anyone's say, but Varsha has more details, then let's discuss the same. Varsha, over to you.
Thank you so much for that. On a lighter note, summer is coming, and if you want to have that beach look, I think Eli Lilly's Mounjaro drug will be for use. So they've launched this drug which treats type 2 diabetes, and this causes significant weight loss by reducing appetite, and it also enhances blood sugar control basically. Now, is this product Mounjaro an alternative to Ozempic, which is very famous when it comes to losing weight? So it does not have Mounjaro, the product by Eli Lilly does not have the same drug combination as Ozempic, but is another GLP-1 drug, semaglutide, which is a generic version of Ozempic. And Eli Lilly has a first mover advantage over Novo Nordisk, which is the innovator of Ozempic, because Novo Nordisk was supposed to launch this product in India, but they'll soon launch it later. And now the point is, why are the masses using this GLP-1 drugs? So they reduce appetite and promote weight loss, and it is being used to losing weight, and also uses the feel lighter, fuller, and eat less, and due to that they are actually losing weight. But if I want to talk about the price comparison, if you take Mounjaro for a month, the cost is around 14,000 to 17,000, while Ozempic has the same cost of around 30,000 to almost 30,000 rupees. So it's very cheaper as compared to Ozempic, and also the Lirafit, which is launched by Glenmark Pharma, is way cheaper than all these products. This is on the price comparative measures. Now, if I want to talk about the potential competitors, who will be the competitors when it comes to Mounjaro, because this is the first company which will be launching this product in India. So semaglutide, which is a class of GLP-1 product, again a generic version of Ozempic, the patent will expire in India in 2026, and you have Biocon, Glenmark and Dr. Reddy's who will be making generic version of this product. And also Glenmark launched Lirafit, which is a cheaper liraglutide, again a class of GLP-1 product. So they've launched this Lirafit, which is very cheaper version, and Sun Pharma is actually developing their own patented molecule when it comes to this weight loss product. Lastly, if I were to talk about how this, what will the impact of this drug on, FMCG market, if I were to talk about, GLP-1 drugs may affect food, beverage and insurance sectors, which was seen in US. Walmart saw its sales down drastically because of people consuming this drug. Retailers are seeing reduction in food purchases, and alcohol consumption is also being reduced.
That's an interesting aspect, Varsha, that you're getting for us. Gaurang, what is your view? Because, India is the diabetes hub. The drugs are being used not only to control diabetes, but for an alternative purpose as well. Now, how big a portfolio could this become? And do you see any of the companies benefiting, like the ones you have, a Glenmark or a Dr. Reddy's or a Sun Pharma?
On a lighter note, Dhiral, I wish I would have studied medicine to answer this question, to be very honest. But having said that, I think, India, you rightly said, diabetes is a big problem in India. Obesity is also a big problem. Heart-related diseases, especially post-COVID vaccination, has also become a big problem. Amongst the name that your colleague Varsha mentioned, I could at least identify 3 or 4 of them. Lupin, Sun Pharma, Glenmark, if that was there, and Biocon. On the fundamental side, we have positive coverage on all these 4 names. Of course, other than these 4 names, there are other names in the pharma universe that we are positive on. The only problem is Trump, trade tantrums and tariff, at least in the immediate short term, because again, today I was reading a report that he's strongly worded some sentences in terms of increasing tariff on the pharmaceutical related goods that come into US from the rest of the world.
Another thing, another development that's come into the picture is Siemens Gamesa, part of Siemens Energy, which is the business segment that is soon to be divested, demerged of Siemens. The latest press release states that Siemens Gamesa and a group of investors led by TPG intend to jointly address the Indian onshore wind market potential. Siemens Gamesa will be divesting 90% of its wind business in India and Sri Lanka, and then retaining 10% stake in the transferred business. Now, the agreement includes the manufacturing, installation and services of onshore wind turbines in both countries, India and Sri Lanka. And when you look at, what the kind of potential is, Siemens Gamesa as a whole has 130 gigawatts of installed capacity. But in terms of wind manufacture in India, well, it holds 30% market share as per the company, and it's supported by a manufacturing and supply chain based in India itself. They have a cumulative installation base of almost 10 gigawatts and provide service of fleet of more than 7 gigawatts under long-term agreements. And this is what we've been, the latest move for Siemens Gamesa coming in. Gaurang?
So just to understand, Mika, Siemens Gamesa is divesting 90% of its wind business in India and Sri Lanka. And they will be retaining 10% of the stake.
Yeah, but Siemens Gamesa as a business also is very focused on wind, but they do have global reach, 130,
and who are they divesting it to? Any details mentioned on that front?
They're going to give it to TBG, which will become the majority shareholder. So that's what we've done. We actually did have some reports come in yesterday as well, but now the final confirmation about this deal has come through.
And the 10% stake will remain under Siemens Energy? Or will it not be under that, or we have no clarity on that yet?
No clarity yet, but it's key to know that Siemens Gamesa is a part of the energy segment. Obviously, the shareholding pattern is a little different, but it's a part of that.
Right. So that's with regards to Siemens. This is going to be an interesting development we should be watching out for. In fact, Gaurav, let me come to you on 2 stocks. One is Siemens, which is already in the news right now, And let's look at the pharma pack as well, which we were talking about with Eli Lilly. So you have the likes of Sun Pharma, Glenmark, Dr. Reddy's, Biocon. From the four and a Siemens, any charts that look interesting?
Siemens is looking pretty attractive at current juncture. Currently quoting somewhat around 5,500 odd levels. This stock gained about 7.5% in today's trade. Of course, this news came in with good amount of volumes coming in. Good accumulation was witnessed in the past as well, and I see it heading towards 5,800 and then close to 6,000 levels in the immediate near term. Now coming on to specifically to the pharma names that you have said, yes, Lupin and Glenmark is on our radar as well, and both these stocks have good chart formations. Yes, Gaurang rightly mentioned that the hiccups coming from the US front on the trade tariffs that can come up anytime. So this is a concern that is not allowing the stock to move freely, but otherwise these are the two stocks which can be considered from a short-term standpoint, keeping a minor 3 to 4% stop loss in the respective places.
Got it. But let's move on to the big brokerage call of the day. You have Nuvama, which has initiated coverage with a buy rating on Lakshmi Dental and has set a target price of 570 rupees. Stock is cooled off from its highs, but still up 2%. Varsha is joining us with more on the report.
For that, so 38% of upside potential is what we are speaking about. And the brokerage noted that India has a high oral disease burden but remains an underpenetrated and fragmented dental care market, and organized market share is mere in single digit. They believe that Lakshmi is poised to capture this market, meaningful share of the pie given the wide portfolio for the company. And so the trigger point is the shift to metal-free products and digitalization are the catalyst when it comes to their lab business, and the aligners, which are although at a nascent stage, but they are actually the thriving segment. And kids e-dental is also a pioneer when it comes to the company. Well, if you see that Lakshmi Dental has recently raised through IPO 138 crore, which they're going to use to repay their debt, the debt of the subsidiary, and also they're going to use this money for the capacity expansion for the capex that they've been trying to. With the balance sheet turning healthy and capex plans provided by Lakshmi Dental, it is well positioned to benefit from the sector tailwind. This is according to a brokerage report. Now, lastly, if you see, Nuvama is expecting a revenue and adjusted PAT CAGR of around 26% and 59%, with ROC rising from 19% to 29% from FY25 to 28.
Thank you, Varsha, for giving us those key details. Gaurang, I'll come to you. It's a newly listed stock, integrated dental product company. We have a strong buy call coming in from Nuvama. What are your how do the prospects look for this company according to you?
Mika, unfortunately, we don't cover this stock, so I won't be in a position to answer this.
Gaurav, I know the timeline is very short, but do the charts indicate anything at all?
Kind of similar view coming from my side as well. We also haven't started tracking it. Neither the data is too much. But even though with the limited data point, what I can see is that the stock is able to sustain above 400 odd levels. Till the point it is in a fine trajectory. If someone is having it from a short to medium term perspective, they can go on holding the stock. So, but if it closes below 400, that is the time one should start exiting the position.
Right, so that's what Lakshmi Dental, with the limited information that Gaurav has in terms of data. But thank you, Gaurav. Thank you, Gaurang, for joining us on the show and sharing your views on the various stocks that we've discussed so far. But moving on, Indira IVF Hospital, a major fertility clinic chain, has actually gone ahead and withdrawn the DRHP for their IPO, which they had filed via a confidential route. Now, this comes after SEBI has raised objections over the release of the founder's biopic. My colleague Agni joins us with more details on this. Agni, over to you. That's an interesting find that you have.
Our sources are telling us that this is a strange but true incident that has taken place. So SEBI has raised concerns over Indira IVF's IPO and the timing of the biopic that has been released. Now remember, last month Indira IVF had confidentially filed draft papers for an IPO, and we know that they were looking to raise around 3,500 crore rupees from it. However, a month after the IPO was filed, a movie came out about Ajay Murdia's life, a fictionalized version run of his life, and the movie was produced by Indira Entertainment. Now Ajay Murdia's sons are credited as producers in the movie, and SEBI has said that this looks like an indirect promotion for the company at a time when details of the IPO are not made clear to the wider public. So this is sort of what pushed the company into withdrawing draft papers, because there was a regulatory lens over the timing of the movie and the link between that and when the company has filed for an IPO. We will be giving you more details, we'll be bringing out additional details, but this is a developing story, so stay tuned.
Thank you, Agni, for giving us those key details. But it's time for an NDTV Profit exclusive. The Payments Council of India last week wrote to the Prime Minister office about the sustainability of digital payments ecosystem, citing concerns about the recent zero MDR policy and reduced government incentives at 1,500 crore rupees for FY25. We spoke to PCI Chairman Vishwas Patel about this and more. Do listen in.
The growth that we have been seeing in the UPI phase, right? Today, 50% of the world's real-time transactions are happening in India. What this means is that there is no money for growth, right? If the whole payment ecosystem does not make enough revenue, the next 350 million, what we want to get onto the people, Indians, who we want to get onto the UPI bandwagon, there is no money to be made since it's zero MDR, right? And the whole ecosystem where we have so many costs, right, to comply with, to keep that UPI growth momentum going. On one side, getting this 350 million Indians onto the UPI bandwagon and going into the hinterland, right, to let merchants accept digital payments, right? If there's no money in the whole ecosystem, then how will the growth happen?
Yeah. Yeah. So what you've written to the PMO, if I'm not wrong, seeking further funds. Apart from the government funding this for a time being is fine, because during COVID you removed the MDR. Since then the government started providing this kind of an incentive. But this is obviously not a long-term solution to the core problem that somebody needs to pay for these payments.
Exactly. I think you have hit the correct thing. What we have been saying time and again, that we don't want incentives. What we are saying now is that there are 6 crore merchants who are accepting digital payments. Out of that, 90% merchants are categorized in the small businesses, which is 20 lakhs and below. We are saying, please keep zero MDR for the small merchants and let's keep supporting them with incentives and other things and give them zero MDR. But for the rest of the 10% of the ecosystem, the merchants that are there, which are around 54 lakh, right? These merchants are already accepting credit card, debit cards and paying interchange, MDR of 1.8% on credit card.
Yeah.
So why can't they pay 30 bips as MDR for UPI transactions? UPI is such a forced reckoning that no merchant is not going to not give UPI as a payment option. And these ecosystem players is already in their products and services ingrained the MDR. So let us allow this. We don't want any government incentives for these large merchants. Today, what is happening is whatever this 3,600 crore that was provided last year, right? Most of it was used for, the incentives were given for transactions for large merchants, right? That is government giving taxpayers money so that large merchants, the big jewelry shops, the malls, all the bigger merchants, right? Marketplaces and others who can well afford this kind of a 30 bips MDR, government is giving them for free and using taxpayers' money to incentivize us. It does not make sense.
What is the 30 pips, looking at the current transaction base, the value of transactions that were processed just in 2024 is near 250 lakh crore, 20 lakh odd crore per month, right? I just wanted to get a sense of what the 0.3 MDR would mean. Could you quantify that?
So what amount you said that was processed on UPI includes P2P and P2M, person to merchant payments, as well as P2P.
Right.
The exact P2M merchant volume, we don't have it, but we made a rough estimate that 30 bips on large merchants, which is just 10% of the overall base, would give enough money of around 10 to 12,000 crores to the ecosystem,
Right.
which will help us to grow this entire UPI ecosystem faster, get more the next 350 million UPI users, as well as to get the next 6 crore merchants onto the UPI acceptance bandwagon.
And on that note, it's an end to this edition of Profit Buzzers, but do stay tuned to NDTV Profit. Lots more lined up on the other side.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Soumit Sarkar, and my co-anchor Anushi. Well, Anushi, market continues its downward trend. In fact, from yesterday's highest point, if you see, Nifty has fallen more than 300 points.
Right, in the last half an hour or so, at least we are seeing some weakness in the markets, especially in the benchmark indices. If we pull out the Nifty 50 chart, seeing cuts of around 0.48% right now. Let's see what's leading to this kind of weakness that we are looking in the markets. So let's see the point contribution table if we can pull that out. We are seeing weakness in HDFC Bank, Infosys, Axis Bank adding to the pressure. But on the green side, we have some bit of positivity from M&M, Trend, Bharti Airtel and Power Grid India. Do note Power Grid was also on focus on the back of update which came out. But moving to the what is happening in Nifty Bank, let's also pull out that as well. We are seeing cuts of around 0.7% in Nifty Bank as well. So benchmark indices in pressure in trade today. Let's see how the overall breadth of the markets is in terms of where the advanced decline ratio is concerned. Certainly a day where we are seeing high number of declines, the market skewed towards the red as compared to the green that we are looking at. 1,700 to 500 is the kind of ratio that we are looking at in terms of where the advanced to decline ratio is concerned. Let's also pull out the sectoral indices to get a picture on which are the sectors which are in focus currently. So what Nifty Defense is up around 1.56%. We have a lot of emphasis have been on these defense counters, especially HAL, which we'll discuss shortly. A big update on that side. Another sector in focus is Nifty Auto, about 0.6% up in green. However, Nifty Metals also seeing some bits of green over here. But it's the Nifty Media Pack, Nifty Private Banks, which are all under pressure, seeing cuts of around 1.91% to 1.65%. So that's as far as the benchmark and the sectoral breadth is concerned. But also let's see how the broader markets are faring. If you are looking at the mid-cap 150, it's faring better than the benchmark indices which are there, seeing cuts of around 0.12%, while for Nifty small-cap 250, we are looking at about 0.9% of cuts. So this is how the overall markets are looking at. Weakness, as you've mentioned, is something which is persisting from yesterday's levels, as you spoke about, right?
Right. Well, let's also get in our guest for the day, Prashant Tapse, Senior Vice President Analyst with Mehta Equities. Prashant, coming to you first, after 6 straight days of rally, market seems to have been taking some breather. Do you see this as a profit booking or just before expiry move this is happening?
Again, 2 reasons. I think profit booking would be one reason why the traders are trying to book their profits. We are heading towards the expiry. Again, we are heading towards near the April to the Trump day, where we will be expecting a lot of volatility with respect to whatever he is going to talk about. So traders as well as investors would like to take this opportunity of last 6-7 days of rally. A lot of mid caps, small caps, and large caps have done well, at least by 10 to 15% in terms of their short-term trades. So that can be one reason. Again, there can be like third reason with respect to year-end, close of year-end. I think today and tomorrow would be the last day for people to close their trades for the last financial year. So that can also be one reason for this sell-off.
Well, yes, another stock that remains in focus is Hindustan Aeronautics. We have seen some wild moves when it comes to Hindustan Aeronautics, right, Anushi? From one point it was at day's low, and from there right now it's the second highest F&O gainer. It's up around 3.7%. What's been happening with HAL throughout the day?
So with what we are seeing for HAL is now there have been concerns about its supply chain issues in terms of whether GE Aerospace is concerned. But now we are looking at a big update. The stock is up around 4%. This is after GE Aerospace delivers its first of 99 F404 IN-20 engines that we are looking at, which is an essential part needed for the Tejas light combat aerocraft MK fighter jet that we are seeing. The company, if you had seen, it had ordered these 99 additional engines in 2021 for the Tejas flights that we are looking at. Again, a lot of past history that we are seeing with GE Aerospace and Hindustan Aeronautics. Now, this F404 engines we are seeing were especially designed for India's Tejas flights which are there. But the production line was shut down after 2016. So there was a period of dormancy for 5 years, after which the company in 2021 had placed an additional order for 99 of more of such engines. But the supply overhang was something which was a concern. The expectation was that the delivery was expected to start from Feb 24 of last year, but because of the supply issues which are happening with GE Aerospace, this led to a shift from FY24 delivery which was expected to FY26 now. So again, there was a lot of emphasis. The stock has also corrected in the past, as we have seen. Also, a quick pointer on this LC, this light combat aircraft MK1A order accounts for 49% of the 94,000 crore of order book which HAL has as of the March 24 number that we have. In fact, we also have a brokerage note on the same. Antique, after this update which came out, wherein Antique continues to maintain a buy rating, and this is at a price of 4,887. Sees that the company's successful delivery of engine alleviates concerns on the engine availability which is there, and now they estimate execution of 8 to 10 aircraft for FY26 to 27 period, and consistent delivery of 2 engines per month from GE Aerospace should help HAL achieve its delivery schedule of 16 aircraft to IAF which is there. So this could lead to an upside in terms of where the FY26-27 earnings estimates which are considered. As pointed out, this points out to a significant contribution to the order book which is currently there. So Prashant, let me come to you on this one. What is your outlook? What's your view after this big update which has come for Hindustan Aeronautics? Because this was one of the biggest overhangs for the company, and now the earnings estimates, the order execution, that points towards a positive bias for the company going forward.
You rightly pointed out 2 things. One was the supply chain disturbance, plus the execution risk what the defense companies are going from last 2 to 3 quarters. So obviously HAL being the largest in terms of defense supporter, I think with the recent correction again, such kind of headlines are giving a lot of comfort levels for the valuation value buyer. So I think that was the one reason why stock is trading sentimentally up by 3 to 4% today. But overall, again, I am very much optimistic on the business model. Obviously, the delay will have some concern, but obviously that will be addressed next financial year. Overall, the outlook remains very, very, very optimistic, and the near-term target can be anywhere between at least 4,500 from the current levels, and for long term, I think 48 to 5,000 can be a target for a long-term investor.
Right. Another important development that will happen on March 27th is the fact that the Nifty reject that was announced a month back, flows regarding that, in fact the passive flows regarding the same are expected to happen on March 27th. So key stocks that we need to focus here is firstly Zomato. That stock could see a net inflow of close to $391 million, which is nearly 2.6 times its 20-day moving average. Jio Financial could see an inflow of close to 200 million, which is again 2.5 times its 20-day moving average. Apart from that, it's Indian Hotels, Power Grid and CG Power, which can see an inflows of anywhere between 47 to 85 million which is nearly 0.9 to 2.7 times its 20-day average, 20-day moving average. 20-day moving volumes. On the flip side, that is the stocks that would see the highest amount of outflow. Firstly, it's Britannia, which could see an outflow of close to $153 million, which is nearly 8 times its 20-day moving average, followed by BPCL, which could see an outflow of $145 million. Then there is Bajaj Finance, Kotak Mahindra Bank and NTPC, which could see an outflow of anywhere between $72 to $79 million. Now, this is the combined number of inflow and outflow that we are giving you of all the Nifty indices, which includes Nifty 50, Nifty Next 50, CPAC index, as well as the Nifty Mid Cap and the Nifty Small Cap index. So keep an eye out for these stocks. Flows are expected to happen tomorrow, March 27, most likely in the last half an hour of trade. But coming to you, Anushi, it has been a busy day, I believe. Siemens is also another stock that has been buzzing in trade for you.
Absolutely, and this is after the big update that we are looking for Siemens India, and this is on the announcement of its demerger record date. So now the NCLT has approved Siemens India's demerger, and they have set 7th April as the record date for the demerger. So the last day to buy shares to be eligible to get Siemens Energy India shares would be 4th April 2025. Again, just to reiterate on the demerger ratio, that stands in the ratio of 1:1 is what we are looking at. To talk more about Siemens Energy, we have the Q1 performance as well, wherein the unit saw 28% of a YOY growth to 1,431 crore. In fact, if you look at the EBIT margins, they shifted to 21.5% as compared to 10.9% of last year, and net profit was up around 2.5 times to rupees 243 crore. Now, we have seen a couple of brokerage notes covering the stock before discussing about Siemens Energy India outlook. So, Jefferies, first of all, they believe that the demerger of energy division is expected to unlock further value for Siemens India as well, and the energy demerger could potentially add up to 8 to 21% of upside from the current market price which was there. This was a note which was dated back in last 1 to 2 months, I believe. And another note which was there was Motilal Oswal, which remains very positive on the outlook for its India and overseas business for the energy segment, which is there, and expects company to benefit from continuous focus on renewable capacity addition as well as the transmission and distribution side of the segment. So, Prashant, let me come to you on this one. If you currently look at Siemens, it's up around 7%. Want to get your perspective on the stock, on the demerger details. What's your outlook for Siemens Energy as well?
On the sector, very positive. I think the way India is growing and the way Siemens is delivering his business model in India is very positive for the business model. And the demerger, obviously, it is a value unlocking for the shareholders currently. You rightly pointed out the date, which is around April 7th. Before that, I think clients should or investors should buy this stock for a long term. We have seen historically Siemens has delivered a good financial performance as well as return to their shareholders. If you see last 10 years, I think the stock has delivered almost a CAGR return of 15%. If you see even 5 years, it has delivered a 35% return to investors. Obviously, this demerger will also create a lot of value for the investors who are holding before the record date, as well as the outlook for the sector, very positive. I think if you see a power sector or energy sector going forward, I think that will have a lot of order books to Siemens, and the stock is really doing good.
That's the view for Siemens India that we are looking at. But, a couple of other counters which are in focus on the back of order wins that we are looking at. Let me address, first of all, L&T. Now, the company has received order worth about 15,000 crore. And this is for its offshore hydrocarbon business from Qatar Energy LNG. This is L&T's largest order till date for its North Field Production Sustainability Offshore Compression project. If you saw in the last 9-month period, what has happened is the company had reported about 16% growth in their order inflows, but the order book was up around 20% at 5.64 lakh crore. In fact, NCC is one other counter which is in focus after it received 2 big orders worth about 10,805 crore from BSNL. Of the first order value being about 2,647 crore and the second one about 8,157 crore. These orders are from BharatNet in Uttarakhand and Madhya Pradesh that we are seeing with a construction period of 3 years and along with a maintenance contract of 10 years. Again, if you look at the order inflow, they have guided for a 20,000 crore mark for FY25. Currently, March 25 so far, 14,415 crore is the kind of inflows that we are looking at. Order book stands at roughly around 55,500 crore. Welspun Enterprises and another stock which is in focus after its subsidiary. Welspun Michigan Engineers received a 209 crore of an order, and this order is for the upgradation of Haji Ali stormwater pumping station to be executed in 18 months itself. If you look at the total order book of this company, that stands at 2,915 crore. Worry Renewables is another stock which is in focus. They have received a letter of award for 232 crore of an order, and this order is for EPC work of a 170 megawatt of ground mount solar project. Again, they have received this order from its promoter itself, which is Worry Energies, and this project is scheduled to be completed in FY26. Also want to pull out something like Bharat Dynamics, which is in focus on the back of a big order win that we are looking at. It's a 4,000 crore plus of an order that we are seeing. So a lot of stocks in focus on the back of order wins. Prashant, I want to understand your view from these 5 counters, which are the counters that you're constructive on? What's your view on some of these orders that have come through?
One should understand March as a month. Obviously, a lot of companies are getting their order books. This can be one reason why the stocks are were down historically and the stocks are sentimentally up today, to give some kind of visibility for the business model going forward. But obviously, in these 4-5 stocks, NCC looks very good for me. Obviously, with respect to their order books, it is almost 2.5% to their turnover last year. And technically also the stock looks very aggressive right now. I think it is trying to close about 50-day DMI. So I think 2111 can be a good price for investors to start buying this. Again, big orders like 10,000 crores from BSNL also gives some kind of great visibility for the stock for going forward. Overall outlook remains very strong and optimistic.
Right. Another counter that has been buzzing in trade is ZF Commercial. Now, what's the reason behind that? Let's get in Mihika to give us all those details.
The order wins that we have in focus, up first we have an NCC. It's received 2 major orders that aggregate to a total 10,805 crores, and these orders are received from BSNL. Order 1 is valued at around 2,640 crores, while the second order is valued at 8,100 crores. Now, the orders are for the Bharat Net in Uttarakhand as well as Madhya Pradesh. Construction period is at 3 years, but there's also a maintenance part of the contract, which is for a period of 10 years. In terms of the order inflow details, NCC has seen a strong order inflow this quarter. March 25 so far, 14,415 crores worth of orders that we've seen the company getting. Feb 25 marked 218 odd crores. So the estimated order book, depending on what they closed in Q3, is at over 70,181 crores. In terms of the second stock, it's Welspun Enterprise, where this arm has received a 209 crore order from the BMC. This is for the upgradation of the Haji Ali Storm water pumping station, and this order is expected to be executed in 18 months. But this 18 months starts from October 1st of 2025. In terms of the total order book of the company now, Welspun Enterprise has a total order book of 2,915 crores. EPC part of this is 2,670 odd crores, and the balance is operations and maintenance order book. And lastly, a Worry Renewables, they received a letter of award for a 232 crore order. This is received from their promoter Worry Energies, and it's for the EPC work of a 170 megawatt ground mounted solar project, and the project is scheduled for completion by FY26.
Right. Well, Prashant, coming to you on ZF Commercial actually, so it's on the ministry which has mandated 2 systems for buses and trucks. It's the Advanced Emergency Braking System and Advanced Driver Assistance System, and both these proposals have made the timeline of 2026, for October 2026, to make it compulsory for buses and trucks. Do you see this as a major positive coming in for ZF Commercial here?
Obviously, yes, it's the major, largest manufacturer of advanced braking system in India right now. So that was the one reason stock was really up by 5 to 6% today. But obviously, the government is thinking to have a very safe, heavy vehicle infrastructure for the roads. So I think ZF will have a lot of traction with respect to new orders going forward from the government. But obviously, one has to wait and watch how much this will cost for a companies like Tata, Ashok Leyland. That will add a lot of additional pressure for the prices as well as their margins. So if that is adjusted to the current market price in the Tata Motors or Ashoka Leyland with respect to their commercial vehicles, obviously that will be very positive. But if that will add some kind of pressure in the margin, that will be negative for the companies like Tata Motors and Ashoka Leyland. But ZF, obviously, it's a great opportunity to surprise for the company, but they are really expert and they are the largest manufacturer of advanced braking system. That will add a lot of value. But at this point of time, this price cannot be a right price for a new investors to buy.
Okay, so that's the view for ZF Commercial that we are seeing. But let's shift focus to the quick commerce side. And Zomato and Swiggy are currently trading with cuts today after BOFA cut their price targets for the same. What exactly is BOFA saying on these 2 counters? Let's bring in Mahima with more details on the same.
Bank of America has downgraded Zomato to neutral from a buy rating, has cut target price to 250 from 300. Swiggy, they have downgraded to underperform from buy and cut target price to 325 from 420. Now, there are a couple of reasons as to why they have done this. First one being that they're saying that the quick commerce overall picture, there has been prolonged competition and they are expecting higher losses going forward because of the dark store addition overall. In terms of medium term prospect, they remain positive, but overall picture in terms of competition is getting tougher. Food, they're not in the food delivery space, they're not seeing any material slowdown, but overall cash flow is set to sink is what they're expecting. And lastly, in terms of changing narrative in a risk aver market overall right now, they are cutting their overall earnings estimates as well for both of these counters, and these are the reasons, the specific reasons as to why they have downgraded both Zomato as well as Swiggy.
Okay, thanks for those details, Mahima. Prashant, coming to you on Swiggy and Zomato, are you constructive in this space, or what's your view, or are you thinking growing competition is one of the key concerns over here?
That concern will remain for the shorter period of time with respect to high competition as well as the high cash burn to acquire a lot of clients, because the high competition, Amazon, Zepto, as well as Reliance is thinking to enter into this quick commerce segment. So that will obviously broader the market, more bigger than the current levels. But Zomato, Swiggy, obviously they are the current market leaders. There can be some kind of loss in the market share, but obviously the way they have established their network, that they will have a lot of advantage going forward once the markets get matured. So Zomato, I still continue to be very positive on the in the prices in action, but obviously there can be some kind of dip because of these kind of headlines. With a stop loss of 170, 184, a trader as well as an investor can try to hunt this stock at this point of time for a long-term investment.
Right. And Prashant, what would be your view when it comes to one of the other holding companies of Zomato, that is InfoEdge? I understand that InfoEdge does not hold a meaningful stake in Zomato, but sometimes we have seen a negative stock reaction on InfoEdge also when there's a sharp share price fall when it comes to Zomato. So what are your views on InfoEdge?
So overall, again, very neutral to that because they are not holding larger at this point of time. But obviously, headlines will make some kind of negative noise in the market, but there can be some kind of negative actions for a shorter period of time. But overall, the main business of InfoEdge will deliver a lot of growth going forward. So I think as a long-term investor, still it's a hold for me.
Okay, so it's a whole reading that we are seeing for InfoEdge. But shifting focus, Goldman Sachs has issued a note on AU Small Finance Bank highlighting its industry-leading earnings growth profile. However, the brokerage has cut the target price on the counter despite maintaining a buy rating. Let's get in Harsh to understand their view on this counter.
Yeah, absolutely. They're calling this growth at the right price, and that's what's really making it attractive for them. 31% earnings compounding is what they are seeing on this one. Of course, EPS may not be the best metric, but we did some analysis earlier today, and even in terms of price to book, this one is trading at over a 50% discount to the 5-year average price to book. So growth at the right price is, I believe, what Goldman Sachs seems to be really punching on this one. Valuation derating, they believe, is an opportunity. Sector leading earnings growth 31%. I did speak about that. FY25 to 27. Believe AU will start likely delivering with a strong growth momentum in FY26, which could be a lever for the re-rating, and that's where Goldman Sachs believes that AU stands out. Of course, they've cut the target price, but just by 2% thereabouts. Believe it's just a minor adjustment, and therefore the upside even from here looking very healthy on this one.
Okay, thank you for that perspective. Harsh, Prashant, your view on AU Small Finance Bank, are you constructive on this counter as well?
Yes, very constructive and optimistic. One reason why the way how RBI has given a lot of liquidity support to small finance banks as well as NBFCs, that will create a lot of growth for these kind of companies going forward for next financial year. So very positive in terms of valuation, very comfortable, still slightly expensive, but obviously the way how growth has been expected with respect to loan book as well as the credit growth going forward. So I think with a limited downside, investors can hunt this stock at this point of time.
Well, auto stocks continue to remain in focus. Couple of brokerages actually came out with their note, and in fact, in the next couple of days, we will also start getting the March sales numbers. So, what are the brokerages saying here? Firstly, the Bank of America note, which has come in, that is quite negative. In fact, on the auto stocks, they are saying that the March demand has continued to be subdued. They are saying that they are seeing weak retail trends for both two-wheelers and passenger vehicles, and they are also saying that the underlying inquiries and walk-ins have also been quite subdued in the month of March. And among all the auto stocks, it's only Eicher where they are quite positive and they're expecting sub 90,000 number of sales coming in the month of March for Eicher yet again. For passenger vehicle OEMs, they have said that they have taken an annual price hike of around 2 to 3%, but it remains to be seen whether these price hikes remain sustainable or not going forward. On EV adoption, they are saying that despite the fact that electric vehicle two-wheelers are cheaper compared to petrol two-wheelers, despite that the adoption has been quite stagnant on this segment. And when it comes to commercial vehicle segment, they are seeing some kind of stabilization in the month of Feb and March, and for tractors they're expecting a strong pickup from the upcoming season going forward. And when it comes to overall, they are quite bullish on Eicher, M&M and Maruti. That's Bank of America's view. But when it comes to Jefferies, they're again saying that the channel checks are indicating weak demand in the month of March. In fact, in the Feb and March month, if you look at on a YY basis, passenger vehicle sales are down nearly 11%, while two-wheeler registrations are down nearly 6%. And they also did the channel checks with nearly 50 dealers across passenger vehicles and two-wheelers. And the feedback that they have got is that the sales have been quite weak in the month of March. In fact, they're saying higher inventories for passenger vehicles and also stricter finance underwriting when it comes to two-wheeler sales as well. And amid the underlying weak demand, the brokerage is quite bullish on M&M given the fact that it's outperforming the passenger vehicle space, and they're also bullish on TVS and Eicher in the two-wheeler space.
Okay, so overall a weak demand is what we are seeing for the auto space, but that's all the time that we have in this edition of Profit Top Trades. Thank you, Prashant, for joining and sharing perspective on various of these counters, but stay tuned for India Market Close coming up next.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
a big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Beth, last time we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is my Mavachra Janin. Quickly on to what we're seeing in markets at this point. Nifty is down 200 points from the highs of the day. We've lost roughly 400 points on the Nifty Bank as well. So there's an underperformance creeping in over there. You're also seeing broader markets in the decline. So the breadth is looking weak. Let's pull up the advanced decline and you'll likely see that the market breadth looking increasingly weaker. And weakening as we go as well. In fact, it was choppy probably for till around noon today, and thereafter we've seen the market breadth just consistently weaken. So that's how it's playing out. Now, how much worse does it get from here is essentially the question. Let's pull up the mid cap and small cap indices. Slightly outperforming, but essentially no real impact of that. We're at the day's low where the mid cap is concerned. And the Nifty small cap as well, down over 1%. So this one clearly underperforming the Nifty, but that's how it's playing out. Let's look at the heat map, maybe auto is one pocket where you're seeing some bit of optimism, and M&M is doing well, and the Nifty auto index also staying afloat. Tata Motors is flat on a day like this. Hero Moto is up 0.4. Oysha Motors as well up by a similar kind of a number. So those may be clutch of stocks aiding the index as well as the Nifty auto index, but outside of that it's difficult overall in terms of how the breadth is playing out. Look at an Axis Bank down 2, a Kotak Mahindra Bank down 2, IT index also seeing some bit of pressure, the Nifty IT. Let's pull up the sectoral indices as well actually. So Maruti is down 1%, but otherwise you're seeing Nifty auto up around 0.5% thereabouts. Metals also not a bad day, flattish kind of move on metals and FMCG, but look at what's not doing well. Private banks down 1%, IT down 0.8%, pharma also seeing 0.6% or thereabouts lower in trade today. So that's how it's playing out. I want to try and sum all of this up. Try and see what we take away from this. One, you're seeing the Nifty down 200 points from the day's highs. The broader markets also see declines. The breadth is difficult, and we'll talk about that. The Nifty Auto is the only sector currently trading in the green. Of course, some other smaller sectors, but among the major ones. Private banks, IT is clearly under pressure. On a day like this, you will see large caps underperform, and the breadth is weak. So even small caps in that sense, the small cap end of the spectrum also you're seeing around 1% or so lower. But specific stocks, Mahima, let's go across. Mahima, talk to us about maybe some names which are really underperforming or outperforming in this market.
Well, I'll start with the outperforming stocks right now. Capri Global is, topping the chart for sure, where the BSE 500 is concerned. It's up 8% as we speak. Reliance Infrastructure is another counter which is up by 7% odd. There you go. Some counters that I'm talking about. Siemens, on the back of demerger of Siemens Energy, up by about 7% odd. Reliance Power is also seeing gains of 7% odd. ZF Commercial is also seeing gains of about 6% odd. There's HEG, second day of gains for something like HEG, as well as Graphite, which is up 3% odd. HEG is up 4% odd. HAL is also up 4%. ABB India up 3% odd. And NCC on the back of the order win of around 10,000 odd crores is up 5%. But on the losing side, we have something like a Tejas Network. There is Suven Pharma, which is seeing loss of around 5% odd. Rajesh Exports, fourth odd session where Rajesh Exports is down. It's down by about 5% odd. There's Arkin Chemicals, which is also down. FTC is down. There's also Garvey Technicals, which is down by about 4% odd. So all of these counters buzzing today, and so the broader end of spectrum is definitely where we are seeing pressure, but all of these counters also leading to that pressure, especially the ones in the red. With that, let's also welcome in our guest for the day, Shivangi Sharda, equity analyst and derivative and technical from Motilal Oswal, joining us now. A very good afternoon to you, Shivangi. Before I move on to stock specific action, what are the levels that you're observing on the Nifty as well as the Bank Nifty?
Very good afternoon. Thank you, Mahima and Harsh, for having me. So we've seen that the indices have witnessed a slight bit of a cool off after 8 trading sessions of buying. And we've seen that the index has rallied by almost 1,900 points in the last 3 weeks. Now, of course, recouped all of its losses of the previous month. So we've come a long way in the last 3 weeks. But of course, there has been slight bit of a rub off in the last 2 trading sessions. We've seen that the index did manage to just right about hold 23,500 marks. So that will be a very important level to watch out on an immediate basis. Till the time it holds above 23,500, we could expect some bounce towards 23,750 and 23,850 marks. Of course, tomorrow is expiry, so we'll be expecting some volatility here. Now, 23,350 would be an important support to watch out. So these would be the levels to play out for the expiry session tomorrow. But overall, we are above our VWAP levels. So VWAP is, the weekly VWAP is near about, the current trading levels. But the monthly VWAP, we are trading comfortably above those levels. The monthly VWAP is at 22,800. So the bullish bias is going to continue for the expiry POV.
And Shivangi, right, so that's the call on the Nifty. What's the call on the Bank Nifty? And could you just give us a flavor of levels as well for viewers?
So talking about Bank Nifty, of course, we've seen that it has been very similar to that of Nifty and, slight bit of a rub off in the last 2 trading sessions. Also, heavyweights banking stocks, which were earlier performing this week, have now taken a slight bit of a back foot, and we are seeing smaller, even PSU banking names are picking up strength. So overall texture of the entire banking space is quite positive, and 51,000 is what I'm looking at. Till the time it holds above these levels, we could expect 52,000 odd levels for Bank Nifty. But overall, we've seen that the market texture looks quite positive. There is, of course, sector rotation, but we've seen FIIs have been also coming back with their buying interest. And the FII's long-short ratio has also improved to around about 34%, which clearly indicates that there is comfort in buying even at these levels.
And what are your picks for this afternoon, Shivangi?
So talking about picks, first up on my radar is Cummins India. We've seen that there has been a lot of buying interest in the other stocks in this space, and this one has been consolidating within a range in the last 5 trading sessions. The good part is that it is holding on to the lower band, which is 2950 odd levels from the last 1 week, and we've seen that even though it did surpass its cluster zones, there has been some sort of stickiness there. So unwinding can be seen, which is quite positive. RSI is positive as well, which is confirming the uptrend over here. So there is a lot of potential in this stock. We could look for a buying opportunity here with a target of around 3150 and a stop loss of 2970 levels. Now, second pick on my radar is SBI Card. The entire banking, non-banking space is looking quite positive. Especially the NBFCs as well. So SBI Card, technically speaking, we've come out of a Poland flag pattern formation on the weekly basis, and we've seen that from the last 60 trading sessions, it has been respecting an upward sloping trend line, with any small declines being converted into buying. So overall, quite positively placed, and the stock is poised towards 910 levels with a support of 855 zone.
Okay, Shivangi, Capri Global is something that's really buzzing in trade today in terms of its stock performance. What are the charts indicating, and what is the kind of support and resistance that you're observing on the charts?
So of course we've seen 8.5% run up over here today, and the stock has been in momentum. But we've seen that even in earlier instances, wherever these stocks have run up with such a surge, the next 7 to 8 trading sessions have been quite lackluster and sort of like a profit booking. So I am, would recommend a wait and watch here. The volumes have surprisingly sparked today, which, calls out for a support here. So I think 175 would be an important support to watch out for in this stock, and one could, trail, of course, but 175 would be a make or break zone here. And if it manages to hold above the same, we could see 190 levels.
So, Shivangi, with regard to one stock within the Nifty 50 basket, Trent, now yesterday as well as today we saw markets being sluggish, but Trent has held up very, very well on both days, 2.5% plus yesterday, 3% or so up today as well. What's the outlook here, and what levels should one look for? Because we've seen, even from a fundamental perspective, Mahima, Trent really corrects sharply from those highs, and nearly 40% in terms of top line growth being maintained there. So
right. So 37% growth in the past 2 quarters, and that has been over 50% in the quarters gone by before the past 2 quarters, right? Which is why the street was not happy with a growth of 37%. Interesting, and that is why, because the street was expecting performance as good as 50%, the stock has corrected since then. But as you rightly mentioned, the stock in the past 2 days is gaining. Interesting to watch out for as to what charts are indicating, Shivangi.
So talking about trend, of course, we've seen momentum pick up in these last 2 trading sessions, but the stock has been in a downtrend from the last 5 months. We've seen that rollovers have been fairly okay as we head towards the monthly expiry. But overall, this stock is poised to pick momentum only if it manages to hold above 5,400 levels. So my recommendation would be to wait and watch for 5,400 levels, and then maybe we could see the next 5,600 odd levels. But of course, it's a conditional buy over here, and one has to look at these levels because there is a little bit of more unwinding which is yet to happen.
Okay, so that's the view with respect to trend. Now, the stock of the day today is definitely HAL, and we have Anushi joining in with more details as to what's happening with the company and why is the stock seeing an up move of almost 4% in trade today. Anushi?
Well, thanks for that, Mahima. It's a big development that we are seeing for Hindustan Aeronautics, which is why the stock is in focus. And this is one of the biggest overhangs of the company, which was discussed in the past as well, which is the GE Aerospace supply issues in the past that we have been seeing. Now, GE Aerospace delivers first of its F404 I-20 engines, which was something that the company was looking forward to. Important in terms of the execution from the order book, which is there, and the earning estimate projections for various of these brokerages have put out there. So these deliveries that we are seeing is for the Tejas light combat aircraft jet, and company had ordered additional 91 engines in 2021 for this Tejas fight jet that we are looking at. So what had happened essentially, let's discuss this role of GE Aerospace more in detail. So if we had seen that the F404 especially designed for India's Tejas, and the production line was shut down in 2016. Post there were no demand concerns or demand orders as such, but in 2021 HAL had placed an additional order of 99 of such engines for the Tejas Mk1 LCA flight that we are looking at in 2021. But the delay in supply of these engines had was an overhang for the company. The expectation was the first delivery to happen in Feb 2024 onwards, but since there had been delay on 2 to 3 occasions as we had seen in the past. So now the delivery expectation is for FY26 as compared to what it was in FY24 earlier. Do note that the LCA, that's light combat aircraft Mk1A that we are looking at, accounts for almost 49% of the mix of the HAL's current order book, which is there. The last order book value that we have, which is around the size of 94,000 crore. So it's a significant development that we are seeing now. The supply chain concern, which was an overhang for the company, that has started to ease out. So what we are seeing is now also a brokerage note. This is from Antique, and they have maintained a buy call with a target price of 4,887, remaining bullish on the prospects of this development which has took place. Now the company expects to execute 83 aircraft order that HAL has received from IAF, and estimate execution of 8 to 10 aircraft for FY26 to 27 period. What Antiques believes is consistent delivery of 2 engines per month from GE, something that we should be watching out for, and will help Hindustan Aeronautics to achieve its delivery schedule of 16 aircraft to IAF. This could lead to an upside in terms of where the earnings estimates are concerned for FY26 to 27 as well, and execution in terms of order book is also something that we should be watching out for Hindustan Aeronautics. So that's why the stock is in focus. We are looking at a considerable upside to the stock price today.
Right, Anushi, thank you so much for breaking that down for us in such a detailed manner. Shivangi, I'll come to you. In the past 6 months, the stock is down by about 5%, but in the past 1 month, it's gained over 28%. What are the charts indicating? Is the momentum back in something like an HAL?
The momentum has been seen back from the last 2 weeks, and we've seen that good amount of long build-up can be seen after the short covering move last week. So definitely follow-up is quite strong here. Now, there has been a sector tailwind which has also been, played out well, and we are in fact looking at next 4,300 odd levels for HAL. Of course, there is in support of 4,100 to watch out for the quick, short-term trade.
And what about the larger defense pack, Shivangi? Curious to know where you feel that one is headed.
So talking about the entire defense pack, of course, there has been a lot of interest in the last 2 to 3 weeks. If we talk about, BEL as well, because my radar is on that stock. And we've seen that from the last 4 weeks, the stock has been consistently making higher lows, and RSI is kind of settling in at the higher zones. So overall, stock is looking quite positive. It has recouped most of its losses of the previous month, and we've seen an outside bar formation on the monthly basis. Of course, monthly candle is yet to form, but overall, the comeback of the bulls have been quite strong in this one. So this one will be on radar for the next up move towards 315 odd levels with a support of 295.
Okay, just something that's flashing on your screen right now. Ashok Leyland has clarified, saying that reports on buying SML Isuzu stake is factually incorrect. The stock right now is trading around 2.4% higher. The stock did see a positive momentum, even after the reports were suggesting them buying. But the stock has upheld its position as of now. Let's see how the stock. We have to wait and watch out for as to how the stock reacts as well.
But nonetheless, plenty of buzz, right, in this space. Let's pull up an SML Isuzu as well. Let's pull up M&M as well. Those were the other players. There you go, SML Isuzu giving up those gains all of a sudden. M&M still perked up 1.5% higher in trade. So that's how it's playing out. We have with us Ashwin Patil, Head of Fundamental Research at LKP Securities. It's one of those days and one of those sectors which have clearly been which has clearly been outperforming on a day like this. Ashwin, good afternoon. Harsh here. Wanted to quickly understand your take with regard to how March is playing out with on the auto sales front. Of course, I'll come to the Ashok Leyland clarification, but first your quick take with regard to March on how the Vahan data is indicating sales to be.
See, the numbers of March are yet to be out, and Vahan data for the month of February, we all know how it fared out. But I think that March is generally it's a good month for most of the auto companies. It's the last month of the financial year, Q4 also, and therefore most of the companies are. They sometimes we would say that the demand is good. Sometimes they push the inventories to the dealer side, but on and on, it's a good month as such. Even on a month-on-month basis, on a truncated base of February, as well as on a YY basis as well. March is a good month. We believe that two-wheelers will be performing well this month as well. Especially companies like Bajaj Auto, where the exports are leading the pack over there, as well as on companies which are rural based like Hero MotoCorp. Over there also we can see a good growth. For TVS, I would say that TVS has been always outperforming other companies, other two-wheeler packs when it comes to the monthly sales numbers. So I think TVS also will be doing good. On the passenger vehicle side, as the trend will be continuing, we are seeing we are seeing a trend of sluggish kind of growth on the passenger vehicles. So this year, I think there will be somewhere near 3 to 4%. The industry, passenger vehicle industry. And for the two-wheelers, I think close to about 10% we can see a growth this year. For commercial vehicles, I would say that if the Q4 is flattish kind of on last year's Q4, that means on YY basis, then we can see a good growth coming from Q1 on the lower base of FY25. And also we have seen that month-on-month basis as well as YY basis, commercial vehicles, the rate of decline has reduced to a great extent, and therefore we can see we can expect actually good growth in FY26 based on the infrastructure, then the government's emphasis on various construction activities, mining, real estate, etc. And we have already seen some sort of green shoots in the commercial vehicle industry of late. So I think, on and on, it looks a good year for FY26, and March also is expected to be good.
Ashwin, hi. Mahima also joining in. Before I move on to the macro aspect of autos, Ashok Leyland has just now clarified as to the reports that were being floated are not true about them buying a stake in SML Isuzu. Overall, how are you reading this entire play out, and what's your view like?
See, Ashok Leyland's, there is a board meeting right now, maybe in the afternoon, and there is a conference. There is a conference call in the evening at about 5:15. So, the rounds the news were making rounds that since M&M has refused that they are not intending to buy anything in SML Isuzu, it then came to Ashok Leyland because it was like, it's just market rumors again that since the company has been making rounds, and this con call on an urgent basis coming from Ashok Leyland, everybody was thinking that SML Isuzu will be acquired by Ashok Leyland, it's not M&M. But again, that is not true. So I think that SML Isuzu is one company, it's a small company in the commercial vehicle space where it, it sells buses and commercial vehicles, that trucks also. And it's a small company, and it would be a fit for Ashok Leyland considering the similar kind of business and the strength that SML Isuzu is having in the northern market. But on the other hand, just we can't look at the operational performance. Even the financial performance of SML Isuzu needs to be considered, which is not really very, in sync with what Ashok Leyland is and what M&M is. So therefore, the stock has reacted positively when the news regarding, it's not true. I mean, it's not a fact that Ashok Leyland is acquiring it. So I think let's wait for what the conference call is about, and then we'll be gaining some sort of clarity. But as of now, SML Isuzu acquisition is not, correct news from both M&M as well as Ashok Leyland houses.
Fair point. Would you term that as a material negative, Ashwin?
Material negative as in for?
For either of the three stocks?
I won't think that it is a materially negative for Ashok Leyland or M&M. So for SML Isuzu, maybe like it, had it been acquired, then maybe, and from such big companies, then maybe we would have seen a good, movement in the stock.
Sure. Ashwin, what's the best way to play auto at this point? You spoke about a CV comeback probably this calendar year. Is the best way currently two-wheeler? Would it be PV? Would it be CV? How best would you play it? And also give us this perspective, basis value as well, value versus the macro.
See, most of the stocks have been falling since last couple of months now. Since last 2 weeks, we are seeing some sort of recovery. But, so all of them are looking quite attractive from investment point of view or valuations. But, there is a point of fundamentals. So I think that within the two-wheeler pack, Bajaj Auto is looking better to us, considering its export exposure, that too in countries like Africa, Latin America, where the growth is quite strong for it. Also in the domestic markets with its two-wheeler exposure in the executive segment, and its EV Chetak doing great. Then the three-wheeler pack is doing good for them. So I think within the two-wheelers, Bajaj Auto is looking good, and on overall basis, I think two-wheelers will be outperforming the other sectors within the auto pack. Then coming to passenger vehicles, still within passenger vehicles, I think Mahindra and Mahindra looks better to us, considering its exposure in the SUV segment, which is growing at a very good pace. At about 15% they are reporting numbers every month. And the exposure to the farm equipment segment also, they are having 40-41% kind of market share, and they are the leader over there. So Mahindra and Mahindra looks good to us. Then within the CV, sector, Ashok Leyland is looking good to us, considering, too many multiple levels for Tata Motors and things, happening, quite uncertainty in the global market. So I think these three stocks we like, and this we would be pushing for FY26.
Right, Ashwin. Thank you so much for giving us all those detailed insights on the auto space, and thank you so much for taking our time and speaking with us at NDTV Profit. With that, Shivangi, SML, not just SML Isuzu, but also the other auto pack that's buzzing. But I'll first take your call on SML Isuzu and any of the counters that you find in the auto space that are attractive. So it's a two-part question for you. I think you're in mute, Shivangi.
So, of course, we've seen that there has been a little bit of attraction in the auto space, but overall, the stocks have been quite a lot beaten down from the last, few months. And we've seen that week on week basis, there has been a short build up in most of these, counters. So there is a lot of short covering required and unwinding required, which will, again drive the entire sector or these particular stocks. So I believe this entire space could be a wait and watch for the moment. And the other sectors which are looking positive are the financial space, the cement pack, and some of the travel and tourism names. So these are the sectors to watch out for with momentum.
Understood. Okay. Thanks so much for that, Shivangi. We'll actually let you go on that note as well. Thanks so much for coming and speaking with us. But very, very quickly, let's talk about what's flashing at the bottom of your screen. Hinduja Leyland Finance approves share issue to Ashok Leyland, 200 crore rupees share issue, 1 crore shares at rupees 200 a piece, which is getting issued. So Hinduja Leyland Finance to issue shares to Ashok Leyland. Well, it's of course the NBFC arm of Ashok Leyland, and likely it's an equity raise just to ensure that you're shoring up on capital requirements. But let's bring in insights from ace investor Govind Parikh, renowned for his sharp eye in identifying tomorrow's blue chip giants. In an exclusive conversation with Neeraj Shah, he reveals his secret formula for picking high yield stocks and the key lessons he's learned from market downturns. Stay tuned as you hear from one of India's most celebrated investment minds.
We follow the principle, sell, regret and grow rich. After we sell, prices go up also in the bull market, the height of bull market. You can't stop anybody's hands and say that, okay, hold his hands and say, don't buy, this is too high. People will still buy. So this word I had coined, sell, regret and grow rich. So when you sell and the price goes up, after a while you regret at that time. When it comes down, you become rich. This is just one thing. But generally, we try to sell this kind of markets. Every correction, every crash that has happened, it has rebounded in 6 months.
Got it. This one too seems like that only because there is political stability earnings in India. You think this will...
At present?
I'm just thinking...
I'm extremely bullish.
You're extremely bullish.
I'm extremely bullish. We never invested in companies which we didn't know. So basically, 2008 crash was the worst crash I have seen. In 2008 crash, the Nifty crashed about 50% in 6 months, whereas my portfolio came down by about 75% because the shares we were owning were all blue chip companies, very, very good companies, but they were quite illiquid stocks.
Okay.
And there was no market for that. When the whole market is in red, nobody was caring for these kind of stocks. So we took a big beating there. Fortunately, we were not borrowed. We never invest in the market.
No leverage.
No leverage. But we took a big beating, and so we held on to our whatever shares we were. And unfortunately, I didn't have enough cash to buy at those levels, which are so attractive. Subsequently, the lesson that I've learned from this crash, the most important lesson is you must have some cash with you. You cannot have everything in the equities for these kind of things to come, and you should also expect the unexpected to happen. So that was a very big lesson in 2008, and after that we've decided that my son Chinmay is working with me. So we both decided that we should have at least 10% cash in our portfolio.
Even if you like a business a lot, I'm guessing you are saying that if it goes up quite steeply, in a slightly unemotional fashion, you are happy to trim down some of that position. Would that be a fair assessment, sir?
Yes, we do that. Whenever the market goes up crazily, valuations are crazy, and people feel there's no tomorrow. You're not going to get stocks tomorrow, or you have to pay for looking at a share certificate or demat certificate, and when taxi driver is asking you and everybody is asking you kya lena hai. That's the time I think we sell some shares also,
Okay, you do that.
Even the best of the best companies, we sell a little bit.
Okay.
This is basically from risk management point of view.
Got it.
Because in the cash collected is always going to be helpful. big proponent of value investing principles. But what is Govind Parikh's secret to market mastery? Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
Welcome back. You're watching India Market Close here on NDTV Profit. Now, in terms of where we are, it's that time of the show where daily Swami joins us and gives us a download of all the chatter he's been hearing from dealing rooms. Swami, what are you hearing today?
Well, the first stock on the list is JSW Steel. Now, what I'm hearing from Steel is that large HNIs have started to accumulate this counter at lower level. There could be a potential positive corporate development is what the street is expecting from JSW Steel. Second on the list is JV Chemical. Now, dealers are indicating that there's a large promoter block that could launch anytime soon, and the block could be as huge as 4,000 crore rupees, which is nearly 15% of the total shareholding of JV Chemical. So keep an eye out for that counter. KKR is the promoter here, and there could be a large block coming in from the promoter. Third stock on the list is Trend. Now that stock is 3% up in trade. What I'm hearing is that HNIs have been buying this counter. Dealers are indicating that there's a potential note that could come, positive brokerage note that could come in for Trend from a multinational broking firm. TCS is the fourth stock on the list. There are buy flows on the FII desk when it comes to TCS, and there's a potential buyback buzz also when it comes to TCS. But the announcement of that is not yet confirmed, given the fact that in the previous quarter the company had announced a large dividend amount, but that's what the potential buzz is on the street, that there could be a buyback when it comes to TCS. And the last stock on the list is IndusInd Bank. Now, the stock is higher in trade. It was up around 3.5%. Right now it's up 2%, but dealers are indicating that the stock move is largely on the back of short covering. Tomorrow's expiry, and the stock is most likely expected to come out of ban as well today. And street is expecting some kind of fund infusion that could happen post. There is a RBI clearance that comes in related to recent issues that we know about IndusInd Bank. Post that, there could be a potential fund infusion as well in IndusInd Bank. So keep an eye out for that counter as well.
Sumit, sorry, just quick question or follow up with regard to IndusInd Bank, because counter has seen a lot of interest. So short covering today, expiry tomorrow.
And the stock will come out of ban.
So where do we sit? Do you believe that tomorrow we could see a further fall, a further correction on the stock price?
There could be a further rise as well tomorrow. Given the fact that tomorrow's expiry, a lot of people won't likely carry the shorts going forward. So
understood. Oh yes, okay. Right. Okay, and let's in fact take that question with Kosh, because he will be best placed to answer that. Kush Bora joining us, kushbora.com, Lancelot Dacuna also joining us, CIO ValueX Wealth Connect LLP. Kush, quickly, IndusInd first. From all that we've just heard from Sumit, what's the sense like? What should an investor do short covering? Is that your view as well?
Sure. Hi, Harsh. Hi. Lancelot. Yeah, I kind of agree with what Sumit just said. Whatever moves that you're seeing today is more on account of short covering positions being rolled over. The entire month, there's been heavy shorting on this one. In fact, if you see, the move today is higher on volumes, but hasn't even crossed the day high that it made yesterday. So the strength really is missing. I do concur with the fact that, perhaps even tomorrow you might see some rollover activity and perhaps some kind of consolidation, sideways consolidation. But once that is over, perhaps, the downward move could well resume for this stock, or at least, consolidation with a negative bias could resume. I'm not too excited about any kind of moves on this one. For me, this still remains, an avoid.
Yeah. It's interesting how I think in the past 3 weeks there has not been a day gone by where we've not discussed IndusInd. Am I right? At least you would have discussed it every day.
No, absolutely. But look at the month-to-date chart and you'll know why. 33% down on a Nifty 50 index stock warrants discussion. So
I know, beaten down left, right and center. Anyways, Sumit also talked about trend. HNI is buying in. But Lancelot, I'll come to you. What do you think of something like a trend? We also took a technical view previously in the show before. But in terms of how things are panning out for trend, how do you think? Should one... valuations, of course, were never cheap for this counter. But do you think if somebody wants to make an entry now, should he or she do that?
The issue with Trent was never about its business or the business model or the fact that they can continue to grow, but it was always about the high valuations. So it's a great company with good business growth potential, and the management has got the right formula in terms of being able to click as far as the Zudio stores are concerned. So I think the long-term prospects are good, but the question is whether this is the right time to enter, given that we have seen a correction and it's still not that cheap. But one should look at starting to maybe buy in small lots at this point in time, because you may be waiting for lower valuations, and some good companies will never really come down to very low valuations or cheap valuations, and in that you may miss out on the entire growth cycle of this company. So I think yes, it does make a case to start accumulating. And obviously you've got to be ready to buy more if it comes down, because valuations are not yet cheap.
Okay, so buy more when it comes down. We've not taken an index view from Kush, so let's quickly go across and do that. Kush, what's the index view at this point? Couple of days where we've seen the index fall over 200 points from the highs. Is the trend reversing?
Too early to call that. Okay. At best, what we could say is that, for the last week or so, we were speaking about how overstretched the markets were, but they continued to remain overstretched and gain some more territory from there. So it's a cooling off effect that we are seeing, although maybe with a bit of a lag to, at least my comfort. So it's more of those profit booking trades that you're looking at, also the expiry effect playing out, some of these things. I don't think this is a trend reversal just yet of the uptrend that began from the 22,000 odd level, right? But what could still happen is that tomorrow's the expiry. So 23,700 call is seeing a fair bit of writing, 23,500 put is seeing a fair bit of writing. So that could be the range for the couple of days. And thereafter, you're staring at the April 2nd date, which happens to have a certain significance. So I don't think anyone's going home too heavy on positions. So perhaps some consolidation with a mild negative bias, because there's this gap around the 23,350, 23,400 mark on the Nifty that perhaps could come into fill. So once that happens and the April 2nd date is passed, you'll get a clearer direction. But next few days, maybe a mild negative bias and consolidation is not a bad thing for the markets, that have risen so sharply over the last, 8-10 sessions.
Okay, and Kush, what stocks are catching your eye today?
So stock-specific action is a plenty and on the positive side. So still going with 2 long positions, both of them, being derivative, counters. Shree Cement is the first one, and SBI Cards is the second one. The entire cement pack, in fact, if you've noticed, has had quite a bit of traction going for it over the last week, 15 days. Shree Cement has broken out above that resistance mark of the 22,000 level, 29,000 level, sustaining above that. Volumes fairly decent. So going forward, 30,150, 30,750 are the targets. 28,950 is where you place that stop loss. One other stock, SBI Cards. Here too, the traction has been very healthy. Also, there was this resistance mark around the 860, 865 zone that's been taken out. The stock is healthily consolidating above that. So this momentum could very well continue for levels of 880 and 890. And now the support zone or erstwhile resistance zone of 860 will act as a stop loss and a support zone. So 860 remains as a stop loss.
Interesting. Okay, thanks so much for that, Kush. Now, we've spoken about HAL in particular, defense space as a whole, and it's been the top gainer at least over the last month or so in terms of sectors. Very, very solid gains, 25%. And if you're looking at the monthly chart on any of these, a BEL is up roughly 23% and the like. You've seen very, very sharp moves on all of those stocks over the last month or so. Lancelot, quick take with regard to defense. The correction was sharp. The bounce back is equally sharp. How do you view this at this point? Do you believe there's still value on the table for any of these? And is there a specific name that you're looking at within the defense pack which you're liking?
So I think, as far as the defense pack is concerned, yes, valuations had gone up significantly and then we saw that big correction. But, defense is a long runway. It will probably, the growth story will spread across maybe 5 to even 10 years, because as most of the countries increase their asset allocation or the allocation towards defense, we will continue to see good demand coming in from some of the Indian entities as well. And even the Indian government is increasing its defense spend and also wants to reduce its dependence on imports. And that's when we will see that a lot of domestic companies will be able to take advantage of this scenario and will be able to increase their earnings and profitability going forward. So I think, yes, defense sector is a sector that will do well. And amongst these companies, I think Bharat Electronics is one which is, one of the major beneficiaries, especially on the electronics and avionics side. You are also seeing HAL because that is another company which will benefit from the the fighter orders that they've been getting. So I think these are the spaces where profitability and return on capital could be highest. While the docks etc. will also get orders, because of the long gestation period and the high investment, the return on capital is lower, so it doesn't probably justify the high valuations that we are seeing. But companies like Bharat Electronics, HAL, these are companies which one can look at, because they will generate higher ROEs, and with the growth in revenues as well as profits, we should see significant upside on the prices and the valuation going forward.
Okay, let's pivot the conversation though. We've spoken Indian markets. Let's talk a little bit more about FIIs, and we have Jonathan Shizel joining us, Deputy CIO, Westminster Asset Management. Good morning, Jonathan. First off, I want to try and understand from you how you're looking at global flows into India as well as emerging markets. We've started to see a bit of flow reversal, at least here in India. Do you believe that there is a tilt in terms of interest towards India now, and do you believe that we've bottomed in terms of outflows from India? And what's the context like in your view? What's causing the flow?
The broader thanks. The broader context is actually, I think, overall quite positive for the emerging market space as a grouping. I think once we get a bit of this continuing noise out the way, maybe by April the 2nd and the worries over tariffs, then I think we can move on from that. But broadly speaking, I think the outlook for the pack looks good. India specifically, I think, obviously we've been through a fairly significant correction since sort of since late last year, and valuations were certainly looking a little bit more attractive. And as you're very well aware, a lot of FIIs and a lot of international investors had their money in India whilst China was underperforming and the whole emerging market space looked a bit more tricky. And obviously, as that situation more recently has changed, I guess the short-term money has left India. But I would agree with you. I think after the correction that we've seen, that probably money is mostly out. And I think India does look quite attractive here vis-a-vis other emerging markets. That said, I think obviously a lot hinges on the outlook for Chinese markets as well. And if China continues to push higher, then it will benefit the whole space, and that will obviously also, I think, ultimately benefit India going forward.
Okay. And Jonathan, the view with regard to IT, because I believe you've turned positive where IT is concerned. And if that is so, really, the question is, why is that so at this point, given the fact that the global outlook looks gloomy? Okay, maybe not Europe as much, but US in terms of growth looks slightly gloomy. So give us, if at all, you are positive IT, why is that so? And if not, your view with regard to where IT is concerned.
Yeah, so I think when we look at the major IT players, be it in India or the US, the Accentures and the rest of the pack, clearly the space has been under pressure for some time as we're worrying about slowdowns, as we're worrying about particularly the companies with a consultancy business bolted on as well, where we're worrying about what's going on with US government spend as well in that area. I think a lot of those factors to our minds were already pretty much priced in a lot of these counters, which have seen significant falls over the last few months. I think when you look, from a medium to longer term, the structural trends look pretty good for the sector. So I think I'd agree. We haven't necessarily changed our weightings, but we are actually reasonably positive on the sector because a lot of the bad news, to our mind, was already priced in. That's the main reason. We still have had exposure to the sector all the way up and all the way down. And no, we're still comfortable with the sort of medium to longer term view. And it was more just a valuation or a sort of a viewpoint on the concerns that were in the stock prices already.
Okay, Jonathan, hi, Mahima this side. In the consumption space, the consumption story, what's your view like where, the different pockets are concerned? There's staples, there's QSRs, there's hotels, lots happening in each of these pockets. So where do you see value right now, and what are the counters that you're actually looking at?
Yeah, I'll try and keep a big picture because we're fairly limited in the areas that we can invest in domestically in the Indian market, if I'm honest. I think clearly keeping it big picture, obviously with policy being eased at the RBI and as well, obviously what we're seeing, easing up, government opening up the spigots as such. So we think urban consumption certainly looks like it's overdue a sort of a pickup. Rural consumption space still looks pretty good to us as well. So, the issue's always been there is a great consumption story in India, and a premiumization story as well. The issue has always been with the stocks, which have traded extremely expensively. But as you know, one of your last guests was mentioning, the trouble with a lot of these things is if you worry about valuations too much, you'll miss the entire story. So, you know, again, it's a bit like the IT sector. We see good, strong, medium to longer term drivers in various sectors. And yeah, well, it's an area where we want to get exposure to.
Jonathan, any specific counters, if you can name, that you're liking in the consumption space?
Yeah, you see, we don't get too specific on individual names. We will just pick the bigger ones. You know, we don't tend to play in the smaller mid and small cap space. So, you know, the likes of Hindustan Unilever and some of the bigger ticket names there, the big market cap names. We don't get too involved in the smaller stuff. But look, there's clearly many interesting stocks across the broad spectrum where you can play, you know, high-end consumption, premiumization, you know, and as I mentioned previously, consumption stocks focused on urban areas. But yeah, we don't get too focused on individual names, I'm afraid.
Point taken. Thank you so much, Jonathan, for joining us this afternoon, India, but this morning for you. So thanks so much for joining us and giving us that perspective. Always great having you here. Well, let's quickly, though, try and take a domestic view as well. Lancelot, what's your take with regard to IT? This was slightly different in terms of conversation, coming from a person based out of Europe, or rather UK, that he's getting positive where IT is concerned. Are you of a similar view now that we've seen a decentish correction?
Yes, you know, I think whatever interaction we've had with most of the IT companies, what we've been seeing is that there has been some amount of, postponement of projects or postponement of new investment in technology because of the uncertainty, you know, surrounding what President Trump might come out with in terms of, impacting the businesses which are operating from offshore into the US. And for most of the IT companies, the US is one of the largest segments where they derive their, revenues from. So having said that, what is clearly coming through is that there is no cancellation or, let's say, cutting down of IT expenditure. But there was a period of uncertainty, and now that uncertainty is probably going away, we will see more and more projects getting awarded. So I think IT now valuations have become reasonable, and I think it's also time to start looking at companies that have got beaten down a lot in this space, because with all the new developments that are happening on the AI space, on various other new digitization, etc., cloud computing, we are going to see a focus go back onto IT to improve corporate efficiency, and that should augur well for the IT companies. Probably the this quarter results in the month of April will give us a better sense and confirm our views, and that would help us, in taking a much larger exposure in the IT segment.
Okay, so that's the view with respect to how things are panning out for the IT space. But Lancelot, I'll stick with you for one more question. Zomato, today Bank of America came out with a note and they've downgraded both Zomato as well as Swiggy. What they're saying is that the losses in quick commerce will widen going ahead. The pace of growth that has been seen in the food delivery space is not, looking very great. It's a muted pace at which it's growing. And overall also what they're saying is they're preferring Zomato over Swiggy, but medium term they're remaining positive on both of these counters, but long term perspective they are not very positive on both of these. Your view with respect to first Zomato and then Swiggy?
I think one has to have a view that in the long term these businesses are going to do better, and whatever profitability we've been seeing in say Zomato or even in Swiggy, that will continue to improve over time. However, at this point in time, because of higher valuations, it becomes very difficult to justify that you are paying for earnings which will probably come 5 years down the road, but you're paying that premium upfront. So I think in that sense, there could be some amount of short-term corrections or short-term pain as as most of these companies begin to announce larger losses for the quick delivery business, and there are more people who have entered that space as well. And so I think the competitive intensity in the space is only going to increase further. So I think that we will see maybe some kind of further correction in this space, and that could bring down prices further. But over a longer period of time, yes, these businesses are here to stay, and finally there'll be one or two big companies that will generate profits and continue to dominate the space.
And Kush, your quick technical take on these?
Well, Swiggy is a fairly recent one, so I'll skip that. As far as Zomato goes, yes, I mean the attempted recovery from those 200 odd levels up until 229 to 30 odd levels has fizzled out completely, and the volumes are picking up. So maybe you could wait and watch. Rather delicately placed 199, 200. That's the support zone. If that is broken, then I'm afraid levels of 190 and below can also be tested. So I wouldn't really venture a trade just yet. Let the stock find its feet, rebound, and then perhaps we can consider once it starts to move higher.
Okay, let's quickly have a look at how markets are playing out, and let's look at the Nifty. We've snapped a 7-day winning streak for sure, but now we're 200 points down, and from the highs we've slipped considerably. We've probably slipped over 250 points from the highs of the day. 23,736 was the high. Yes, we have slipped over 250 points from the highs, and at least the last 5-10 minutes or so indicating that the slip is large. Now, just in terms of what this means, there you go. That's how the breadth is playing out on the Nifty. So pressure evident, 3% lower on an NTPC, IT stocks as well as financials taking a bit on the chin. Let's pull up the Nifty Bank as well while we're at it. Try and see how that's playing out. Let's look at the Nifty IT. So maybe that slip not caused as much by the Nifty Bank as maybe IT is also seeing a bit of a slip, as you can see. So that one's probably the culprit to a certain extent. Those are your contributors, of course. HDFC Infi being the top ones, at least in trade today. Let's pull up an HDFC Bank intraday as well. See how that's playing out, but nearly 200 points down and not looking pretty. Okay, that's how HDFC Bank is playing out. But let's quickly take a look at the top 3 stocks on our radar this afternoon. Varsha joins us with those stocks. Varsha, what's buzzing today?
Thank you for that. So let me start with NCC. They've received 2 major orders of rupees 10,000 crores from BSNL. Order 1 stands around 2,647 crore, while order 2 is valued at rupees 8,000 odd crore. Now these orders are for BharatNet in Uttarakhand and Madhya Pradesh, and the construction period for the order is at 3 years. Maintenance contract is also for 10 years. If I were to talk about the order inflow details, till March 25, they've got order of almost 14,415 crore, and order book as of December 24 stands at around 55,000 crore, and order guidance for
Okay. Varsha, we believe we've lost audio from Varsha there, but NCC was the big one. Nirav Ashar, Head Equity Research Analyst at Latin Manharlal, also joining us. Nirav, now very quickly with regard to infra, NCC in particular, the size of the order, the relative fall from the 52-week high, NCC in particular looking good to you, and if yes or no, what are the other stocks in the infra space which you're liking at this point?
Well, good afternoon and thank you for the invite. It's been raining orders as far as the infrastructure companies are concerned and the defense companies are concerned, especially at this time of the year. And we've seen some meaningful orders being received by infrastructure companies. Yesterday, of course, we were discussing that NCC had an orders of, they've received orders to the tune of 3,600 crores. And today this 10,800 crore order. So I think, of course, now with a strong order book, it definitely gives good revenue visibility in the medium term to long term. And of course, execution is something which will be a key monitorable going forward. How they're able to hold on to their margins, how they're able to protect their margins, availability of raw materials, resources, manpower, etc. So I think the focus will now shift towards the execution. As far as the valuations are concerned, I think valuations are quite reasonable and compelling. So definitely this does warrant a look at this point of time. Apart from NCC, I think we also like companies which are into the power T&D space, especially the likes of KEC International and Kalpataru Power Transmission Limited. Both of these companies have been doing the high-end work as far as the EPC contracts are concerned. They have been working on evacuation of green renewable powers, and they've been working on the higher end of the spectrum, that is on the HVDC side as well as the 765 kV transmission and distribution space. So I think they should be able to perform well as far as the margins are concerned. They should be able to report better quality margins, and the order book is quite impressive at this point of time, which gives a revenue visibility of close to 3.5 years. Apart from this, we like a newly listed company called Afcons Infrastructure, which has got a very strong order book. It has a good presence in urban infrastructure as well as underground projects. So I think these are some of the stories which we like in the infrastructure space at this point of time.
And thanks for that, Nirav, for the very detailed view. Lancelot, if I can come to you with regard to AU Small, because that's a stock in focus today. We had views coming through that the depth of the fall in the stock price maybe not justified. We'll see a pickup in growth. Currently trading at around 2.1 times price to book, looked reasonable in that sense. In fact, when I did the math as well versus the 5-year average, the stock is trading at nearly a 50% discount. Quick views with regard to an AU, would you at all be positive at this point, or would you wait and watch for asset quality to improve?
So I would wait and watch, because more and more information is coming about on a little bit of stress as far as now there are new changes made by RBI as far as gold loans are concerned. You do have some amount of tightening up going on in various norms that are there for provisioning, etc. So given this overhang that AU is focusing on the retail segment, which is probably at the lower end of the spectrum, you could see a little bit more stress in that sector, and growth could be a difficult, they could have some difficulty growing at the same pace as they were in the past. So I would, sort of prefer to wait it out, see the results, and once one gets clarity, one can look at adding into the stock at that time.
Right. All right, Lancelot, thank you so much for giving us those insights. And with that, I believe we have to say a goodbye to you. Thank you so much for taking our time and speaking with us at NDTV Profit. With that, let's also slip into a quick break, but we'll be right back with Buy Today, Sell Tomorrow calls. So stay tuned.
A big proponent of value investing principles. But what is Govind Parik's secret to market mastery? Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it
only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with
You're watching India Market Close. Siemens is another counter which is in focus today, and this is on the back of NCLT approving its demerger of Siemens Energy business. Stock is up 6% as we speak, and we have Anushi joining us with more details as to how things will pan out post the demerger and what are the details with respect to the demerger as well. Anushi, what are you picking up?
In terms of the demerger, now most of the details are already out. Now we have the record date update which is there. So if you are looking at NCLT has approved Siemens Energy India demerger, and they have set 7th April as the record date for this demerger to take place. So if you are looking to buy, the last day to buy shares to be eligible for having Siemens Energy shares, it's 4th of April is the last day to do so. The demerger ratio stands at 1:1 of ratio that we are looking at. In fact, also let's talk about how Siemens Energy has performed. Siemens Energy India has performed in terms of where the Q1 numbers are for the company. Do note that the company follows another accounting method in which they follow a financial year in October to September period. So if you are looking in terms of revenues, they have seen about 28% of growth, while the EBIT margins they have improved to 21.5% versus 10.9% last year, and net profits saw about a 2.5 times of a growth to 243 crore. In the past, we have seen a couple of brokerages being bullish on the demerger taking place. In fact, we had a Jefferies note wherein they believe that the demerger of energy division is expected to unlock further value for Siemens India, so that could potentially add value for the business, and they expect around 8 to 21% of an upside considering this demerger takes place. Even Motilal Oswal had a favorable outlook on the energy business prospects for the going forward. They see that there is strong demand remaining for the India and the overseas demand which is there, and continuous focus on the T&D side of the business, that's the transmission and distribution, along with renewable capacity addition, is going to support Siemens Energy India division as well. So this is the overall outlook that we are looking at. The stock is buzzing after the record date has been set for on 7th April.
Okay, thank you so much for that, Anushi. Let's go across. Kush, what's the sense like on this one on charts? Now, of course, special situation likely to play out, but over the next few days and all the way running up to the 7th of April, what's the best way to play this? Is there still juice left? Is there a trade?
There is, in fact, the risk-reward ratio, because of the fall that we've seen recently, stacks up rather beautifully. If you look at the retracement from the late 2023 move that had begun, it came very close to the 78.6% retracement. So that's the kind of fall that the stock was witnessing. Now you've witnessed some sort of stability, the stock conquering its 20-day moving average a few sessions ago. Today, the 50-day moving average on the back of very good volumes. I think there is still room on the upside. Momentum indicators are just about starting to pick up. So if someone does want to play this, then you could still enter for levels of 5650 as the first target. And once that is taken out, you're looking at 5900 as well on the upside. And for the support zones, they come close to the 5100 mark. So not a bad idea to buy even now, but have your stop losses in place, because the entire sector hasn't really turned a corner around. It's just some sort of a rebound trade that you're witnessing. For this one being the special case, 5100 being your stop loss, you could still get into a trade for targets of 5900.
Okay, and Nirav, if I can have your view, I was just trying to pull out data on periods of time when Siemens may be trading at a reasonable valuation. Currently it trades at trailing 12 months around 85 times. When I'm looking at the 5-year average, it's 80 times. When I'm looking at the 10-year average, it's 70 times. It's never been cheap. Even during the COVID lows, it's probably hit maybe 35 to 40 times. How should you view this stock? And how should you view the story? And are there better pockets maybe at this point to invest in, where playing the cap goods theme is concerned?
Well, definitely there is going to be a scarcity premium as far as these companies are concerned. These are MNC companies with a very strong technological base, and especially considering the fact that the T&D space, the power T&D space, is in a very sweet spot with a strong highway for growth. I think this should enable these MNC companies, or give them a lot of confidence to bring their patented technologies to India, to modernize the grid infrastructure, to focus on global procurement, to focus on the best practices, and of course try to make India as an export base. So there are a lot of opportunities apart from the strong domestic demand. So I think the premium is in a way justified at this point of time.
Okay, so that's the view with respect to Siemens. ZF Commercial is also one of the counters that's buzzing in trade today, and this is after the Ministry of Roads, Transport and Highways has proposed something that will benefit the counter. The two mandates for braking system for buses and trucks is something that the Ministry of Road, Transport and Highways has proposed. That is advanced emergency braking systems and advanced driver assistance system. This has a timeline of up to October 2026 for existing vehicles, and ZF Commercial is the major maker for both of these, advanced emergency braking system as well as advanced driver assistance system. So till October 2026, all the buses and trucks are required to have these two things in the vehicles, and in terms of the regulation, it can overall add content per vehicle up to rupees 80,000. So content addition of rupees 50,000 from October 26 will help overall EPS growth for ZF Commercial as well, and potential increase as per analysts that the street is seeing is roughly 10% in FY27. This is in terms of EPS growth, and 19% with respect to FY28. In terms of potential rise in FY26 to 28 estimates, again as per analyst sources, the revenue CAGR, the old estimate was approximately 14% for ZF Commercial, which is now which might go up to 30%, and EPS CAGR will go up to 29% earlier, which was 18%. So that's the update with respect to ZF Commercial. Let's also pull up the stock and see what it's doing right now, and also if you can pull up the 6 months chart as well, it's up 5.6% right now. Nirav, I'll stick with you for this one. How have you interpreted the whole development that has taken place, and do you also reckon to the fact that this will benefit ZF Commercial in a big way?
Well, I think it's definitely going to benefit ZF Commercial, considering the fact that again we have an advanced technology which is at play, and they have a kind of a monopoly status as far as these technologies are concerned, advanced braking systems and advanced driver assistance. So I think, I think as far as today's move is concerned, I think it seems to have factored in a conservative view, but I think we can expect some more upside going forward as far as the stock is concerned.
So with respect to ZF Commercial, quickly Kush, on the charts, what are the charts indicating for something like an HEG and graphite right now?
Well, HEG was a call that we discussed some time ago, and yesterday also we gave an update that if you do have a position, it will not be a bad idea to book it partially and hold the rest. The same view continues. However, just be mindful that the stock is in deep overheated territory. So if you want to get out of this completely, that also is not a bad option at the moment. As far as Graphite India is concerned, here too you've seen the stock bump up but meet resistance around the 200-day moving average mark. So this is the one that I would get out of first. HEG I could still hold on to with a trailing stop loss around the 485, 490 mark.
Okay, Kush, that time of the day when we take BTST from you, give us your BTST trade.
Indeed, it's a BTST today. Torrent Power. It's more of a follow-up, more of an update. We did discuss this stock just about a week or so ago for a second target of 1495. That's been hit. The reason I've picked this today, opposed to some of the other names, is that this has already seen some sort of a profit booking yesterday, and that's a healthy sign. You don't want the stock to be going one way up and then perhaps see a big crash. It's seen a round of profit booking consolidation yesterday, some positive bias consolidation today as well. So that's a good sign. Plus, overall, I think the power sector is expected to do very well in the coming days. So from a near-term perspective, you could still look at targets of 1540 and 1580 with the stop loss around the 1460 mark.
Okay, Suven Pharma is another counter which is seeing pressure today in trade, down by about 5% odd. Let's pull up the charts and see. There you go, 4% odd, recovered a tad bit. Nirav, your view with respect to this counter, what's the outlook like from a longer term perspective?
I'm sorry, I don't track this counter.
All right, then on the charts, Kush, Suven Pharma, how is it looking like? I mean, what are the resistance and supports looking like?
Is that Suven Life or is it Suven Pharma?
Suven Pharma.
Suven Pharma in particular. I could have picked either, both of them not so great. It's just that Suven Life is below the 200-day moving average, and Suven Pharma is about to slip below that. So here too the view is rather negative, while the rest of the pharma pack has been doing well. This hasn't really contributed or participated in that rally. If the 200-day moving average support around the 1095 mark breaks, then you could see some further downside on this one. So for now, it's an avoid.
Coach, also curious to know what you're making of the move on the index. We're at the day's lows across indices, whether I'm talking about mid-cap, small-cap, sectoral, any sector that I pick at this point. Nifty Autos also given up all of its gains. Concerns and levels on the Nifty that you'd look out for now?
Very honestly, Harsh, no concerns at all. As I said, this is more of a delayed move of profit booking that we were expecting about a week or so earlier. But nonetheless, I actually read this as a very healthy sign. You're right in terms of levels. What do we look at? We're looking at 23,400, the gap, that was created on the Nifty 3 sessions ago to be filled first and perhaps, take support around that level. And on the Bank Nifty, that comes to 50,650 odd levels. where that gap could come into fill. But I think this profit booking and then consolidation for the next couple of days is actually a very healthy sign. If all goes well on April 2nd, then I think this uptrend could well resume. If not, then perhaps we'll see what comes out and how markets react to that. But up until then and right now, I read this as a healthy sign.
Okay, something like a Brainbees is also facing pressure in trade today. Neerav, any view on that?
Pardon?
Brainbees Solutions, First Cry. Down by about 5% in trade right now.
No, I'm sorry, I don't.
Okay, and I think we'll not have enough data on the charts as well. Reliance Power, although on the charts, how is it looking like, Kush?
Well, amongst other power names, this one still doesn't stand out. Although, yes, there is a very big move today. But if you see it's given up, it's slipped from those high levels of about 41, 41.50, that it made today. As I said, we've got some other names in the power play that are doing rather well and consistently well. This one's known for its volatility. I wouldn't really venture a trade just yet. But if you do have a trade already, then yes, 36.50 is the level to place your stop loss at and perhaps ride the momentum that just might come about.
Okay. Neerav, Ashar, quick question for you with regard to Varun Beverages. Interesting, 2% higher in trade today, and it's given a very decent kind of a move over the last month or so.
Well, yes, I think this counter has seen a sharp correction on account of the competitive intensity which is there in this space. But I think now they have completed their expansion as far as 4 facilities are concerned. They are likely to commence the commercial production very soon and contribute in this summer season. And I think they have successfully completed a 7,500 crore QIP, and expansion plans are also there in place. So valuations are also looking reasonable at this point of time. So definitely looking quite attractive from the current levels.
And Neerav, I'll stick with you with regard to a quick view on an NTPC, a power grid, some of the power names. We had a JP Morgan view coming through today that best way to play power in terms of value, and they've given it an overweight rating, both NTPC and power grid. Your quick views on this. Power grid has been phenomenal in terms of returns over the last month or so again.
Definitely, yes. I think NTPC and Power Grid both are available at very attractive valuations if you look at it from a price to I'm sorry. Both of them are available at very good and reasonable valuations as far as price to earning multiples are concerned. And of course, the prospects are looking quite strong as far as both these counters are concerned.
So that's the view with respect to where power companies are concerned, but monthly economic review data has come out, and what it's indicating is that the economy seems on track to achieve GDP growth of 6.5% for FY25. Investment by private companies would overpower risk to India growth outlook is something that the review is saying. Geopolitics, trade uncertainty, risk next year outlook seems a tad bit in line. Forex reserves adequate to cover imports of 11 months is something that they've come up with. Q4 growth driven by exports, pickup in government capex. Even in terms of service sector, performance remains robust. The economic growth momentum has improved in Q4 FY25. Agri output estimates are positive for a food inflation. And so these are the takeaways right now that we are getting in from the monthly economic review. So that's with regards to the monthly economic review. Neerav, quickly in the consumption space, your outlook and any of the counters that you're liking.
Well, I think the consumption space is looking a bit wobbly at this point of time. We have to see how the urban consumption is going to play out. So we would rather wait for commentaries from the companies as far as the Q4 results are concerned. The rural consumption is also limping back towards normalcy. So I think it will be a wait and watch approach as far as the consumption story goes.
That's the view with respect to where consumption is concerned. Quickly, something like Reliance Infrastructure is also buzzing today. Your view with respect to how charts are faring for that counter?
A fair degree of volatility, 200-day moving average resistance still playing upon this one, so I'd be a little cautious. For me, a buy would emerge once this 255, 260 resistance zone is taken out. It's attempting a rebound, but as I said, the momentum indicators are a bit flat right now. Today, we've seen a breakout above the last 4 sessions resistance zone of the 245 mark. So wait and watch. Once you're in the clear of this 260 zone, is when a more meaningful trend could emerge on this one.
Kush, your view on something like an Ashok Leyland really doing well on a day like this?
Harsh, more news-based rather than anything else, and we've all known what the news is about, what news was floating around. But for me, I think this is not a buy yet. Also, if you see the kind of moves that it's made, the last 3 sessions, this 215, 220 zone has been acting as a bit of a resistance. Even now, from the top, it's given up those gains, and again below that 215 mark. So for me, I think the news is out, the action is also done. The stock up about 10% in the last 10-15% in the last 8-10 sessions. So if you've got any positions, not a bad idea to book profit and stay out of this one for now.
Okay, Nirav, quickly, your view on Tejas Networks. The stock is down by 5% today in trade, but what's the outlook like?
I think the stock is quite expensive, so I would stay away from this counter.
Okay, thank you so much, Nirav, Kush, for joining us, giving us all of those views. Minute to close. Let's quickly track where markets are closing in at. We're at the day's low. When I last checked, are we seeing a bit of a bounce back is the question? No, we're just slipping lower. 23,470 now at this point, nearly 200 points down. And let's look at it intraday as well. Likely we're over maybe to nearly 300 points from the day's high. So from 23,736, yes, of course, 250 points or so from the day's high. So that's on the index. Let's look at the breadth on the Nifty 50 index, and that we'll see through the heat map. And within that basket, it's pharma which is in pain, it's banking as well as financials which are in pain. You're also seeing some bit of pain within IT, and Infosys is a big contributor to today's losses, and NTPC as well is a big points contributor today. So those are some pockets. IndusInd holding up fairly well in trade, some bit of short covering there is what we understand. Trent doing well on a day like this. Autopac has given up all of its gains. Let's pull up the Nifty Auto Index. It's closed at the day's low, absolutely flat line on the index. Okay, maybe not the day's low. Apart from the initial volatility, very, very close to the day's low. This was the one index which was perked up in trade. So this one was on our radar, but it's given up all of those gains. Let's talk about broader markets. Before I hand it over to Mahima, let's look at the breadth before we do that. And the breadth, of course, has increasingly gotten worse as the day has progressed. There you go. The breadth just about 400 advances to 1800 plus decline. So the breadth just worsening. Apart from that initial bit of volatility, the breadth through the day has just worsened. No cause of concern is what Kush Bora tells us. So this is just par for course. Mahima, broader markets.
Yeah, and it's interesting that there are more than 4 declines versus 1 advance. So that's how the breadth of the market has fared. But in terms of broader markets, also the pain is real. The mid-cap 150 down by about 0.63% and closed at days lower. Similarly, the small-cap 250 also closed on the day low, down by about negative 1.4%. In terms of the NSE 500, let's pull up those stocks and see where the pain is actually in. Chola is somewhere the pain it was real, down by about 7%, closed 7% lower. Rajesh Exports also closed 6% lower. Tejas Networks down by about 5%. Rights down by about 5%. Sterling and Winston also saw that pressure, down by about 5%. But some counters that did well. Well, Capri Global clearly standing out, up by about 16%. Siemens up 5% on the back of the demerger news. ZF Commercial on the back of the Ministry of Road Transport and Highways announcement, up by about 5%. IndusInd up by about 3%. HL also up by 3%. So
let me give you a throw to rest. So HAL, HEG, Honeywell, all of those doing well. HEG, of course, in focus along with graphite yesterday. Let me also look at sectors very quickly, Mahima. Highlight those. What's done well? Maybe defense, auto, absolute flatline. But look at where the drag has come from. Media getting beaten 2.5% lower. But among the larger indices, you're seeing IT 1% lower. finance 1% lower, bank around 0.8, pharma around 0.8, PSU banking also taking a bit of a beating, 1.2%. So those are some pockets where you've seen pain. And overall, these are some of the larger cap pockets as well, where the pain has actually percolated to the Nifty 50, and that's what's actually put a lid with regard to how markets have moved today. Let's look at the 5 factors that have played out in markets today. They've closed at the day's low where markets are concerned. Interesting to see how tomorrow will open. Nifty down over 250 points from the day's highs. Banks, Infosys, NTPC are the key stocks which have weighed down on indices. Broader markets have closed lower as well. The outperformer, the Nifty Auto Index, has by the end of it gave up pretty much all of its gains, has closed at the flat line. What to watch out for tomorrow's trade? You have US crude inventory, you have the UK car production data, China industrial profits year to date. Okay, nothing major per se from on the global front, at least as of the way we see it. Those are some corporate actions for you, dividend announcements and adjustments which are expected to take place. Shares to exit lock-in, we've seen some bit of pressure on those stocks today as well. Sonor's Pharma is one of them. You're seeing Unimec Aerospace and Manba Finance, which will see anchor lock-ins expire tomorrow. So you'll probably have a reaction on some of those. But with that, from everyone here, Mahima, myself, everyone who puts the show together, thanks so much for watching. Completely out of time. Thanks for staying tuned. Stay tuned to NDTV Profit. More action on the other side.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery? Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Beth, last time we coined that thing and we put it on in our office notice board. Sell regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings.
You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. US benchmarks end the volatile day of trade lower. Both the benchmark indices ended below the day's high, while Trent and Bharti Airtel showed some support. HDFC Bank and Infosys dragged the index. Sectoral action ended largely in the red. All sectors except Nifty Defence and Auto slumped on a day of poor market breadth. Now Nifty Media and Oil and Gas shred the most amount of weight. Rupee closes stronger against US dollar, strengthens 5 paise to close at 85.71 against US dollar. Ashok Leyland outrightly denies news report on buying SML Isuzu stake. Now says reports on buying SML Isuzu are factually incorrect. In other news, Hinduja Leyland Finance approves shares issued to Ashok Leyland. A total of 1 crore shares will be allotted to Ashok Leyland at 200 apiece. Now, Ashok Leyland will infuse total 200 crore rupees worth capital in Hinduja Leyland Finance. Power sector is in focus after JP Morgan initiated coverage on 5 stocks including NTPC and Power Grid as they forecast power demand CAGR to grow by 5 to 6% over the next decade. Now it also highlights continued losses in DISCOMs and persistent slippage in execution as some of the current challenges. NCC was another company in focus as they bagged 2 big orders worth 10,805 crore rupees from Bharat Sanchar Nigam Limited. Now the order will be executed in Uttarakhand and Madhya Pradesh with a construction period of 3 years and maintenance of over 10 years. The company has built an order book worth 218 crore rupees in February 2025 alone. Wellspin subsidiary received order worth 209 crore rupees from BMC. They will build up the Haji Ali pumping water station and the order will be executed in 18 months starting from October 1. Total order book of the company stands at 2,915 crore rupees. Vari Energies was also a stock in focus as they received an order letter worth 230 crore rupees. The company will execute the EPC work of a 170 megawatt ground mount solar project. And this project that has been received from their promoter is supposed to be completed in FY26. Speaking of the auto industry, both BofA and Jefferies have released a note on the sector as the space has suffered from low demand. Both two-wheelers and passenger vehicles have seen weak retail business with fewer customer walk-ins and inquiries. While BofA expect tractor sales to rise next season, Jefferies is positive on M&M, TVS and Eicher Motors. Goldman Sachs released a note on India's strategy, highlighting that the worst is already behind us in terms of economic growth and earnings trajectory. Now, this also see a GDP growth in policy easing this year. According to the brokerage, worst of the economic and earnings decline is over. It also believes that prices have dropped significantly, but it does expect more volatility in small and mid caps as tariff wars intensify global uncertainty. Goldman Sachs has also revealed their top stock picks that offer an average upside potential of 23%. Some of the key names in the category are HDFC Bank, AU Small Finance Bank, M&M, Indigo, Adani Ports, Power Grid, Apollo Hospitals, Titan and Godrej Consumer. Axis Capital released an interesting report on real estate, especially exploring its outlook on new launches. It observed that the number of new launches across our top 7 cities in India have declined by 47%, with majority of them being Mumbai metropolitan region, National Capital Region, Hyderabad and Pune. It also revealed that Bengaluru is the only city that has outperformed others with a 19% annual growth in new launches. Stocks of Lakshmi Dental rose in trade today as Nuvama initiated coverage with a buy rating. The brokerage reckons the shift to metal-free products to act as a catalyst for the company's lab business. It also notes potential in aligners, calling it nascent but a thriving segment. Zomato and Jio Financials are among the companies to be included in the Nifty from tomorrow as a part of the semi-annual rejig. They're replacing BPCL and Britannia in the Nifty 50 index. As per Nuvama Alternatives, Zomato may see an expected inflow of $391 million, while Britannia and BPCL are projected to experience an outflow of $153 and $145 million respectively. Construction and engineering firm L&T won its largest project till date. The order worth over 15,000 crore rupees is for the offshore hydrocarbon business from Qatar Energy LNG. Now, the project includes designing, sourcing materials, building, installing, and setting up 2 large offshore compression complexes. Now, shares of the company have risen close to 4% in the past 5 days. Maruti Suzuki's board has approved the establishment of a third plant at Kharkhoda with a capacity of 2.5 lakh vehicles per year. The company plans to invest 7,410 crore rupees for this capacity addition. Following the expansion, Kharkhoda's total capacity will reach 7.5 lakh units per year. Brokerage firm Bofa has released a note on food delivery apps. They have downgraded Zomato to neutral on Zomato and underperformed on Swiggy. Now, reasons behind the downgrade include rising quick commerce losses, slowing down the food delivery business, and prolonged competition in quick commerce. The brokerage also expects cash flows to shrink in the coming days. Shares of HEG and Graphite India rose today. The rally comes on the back of Japan's announcement on imposing anti-dumping duty on Chinese graphite electrodes. This will be effective from March 29. Additionally, Chinese producers have already increased prices for high-power grade graphite electrodes. Therefore, this move is expected to benefit these 2 companies as they actively supply graphite electrodes to Japan. SpiceJet announces the launch of 24 new domestic flights as part of its summer schedule. The airline is expanding its network by adding 3 new destinations, Tuticorin, Porbandar and Dehradun, while introducing new routes to enhance connectivity across the country. Operations on these new routes will commence in a phased manner from March 30, 2025, with the bookings now open. SpiceJet will also introduce new flights on Ahmedabad, Srinagar and Pune, Varanasi sectors and reconnect Bengaluru with Goa and Pune with Chennai. GE Aerospace delivers the first of 99 engines to Hindustan Aeronautics Limited for the Tejas Light Combat Aircraft. Now, this milestone marks a significant achievement in GE Aerospace's 40-year partnership with HAL. Tailored for India's single-engine fighter, the engine has the highest thrust within its family. It features unique single crystal turbine blades and specialized components. Siemens Games plans to divest 90% of its wind business in India and Sri Lanka, retaining a 10% stake in transferred business. The company has entered into a pact with TPG and other partners. This is to address the potential of the Indian onshore wind market through a new company. 1 out of 5 high net worth individuals are in the process or plan to migrate. Now, this is according to the Kotak Private Top of the Pyramid 2024 report. HNIs and ultra HNIs are deploying funds heavily overseas, and affluent clients are diversifying their portfolios. The report highlights that 45% of ultra HNIs investments are in commercial real estate, while 31% of their wealth is allocated to equities. Now, it is also, projected that the number of ultra HNIs to rise to 4.3 lakh by 2028. The government has appointed Sanjay Kumar Mishra as a fully-time member of the Economic Advisory Council to the Prime Minister. Now, Sanjay Kumar Mishra, a retired IRS officer and former chief of the Enforcement Directorate, brings a wealth of experience to the council. The EACPM is an independent body that advises the government, particularly the Prime Minister, on economic issues. Now, this appointment is expected to strengthen the council's expertise and advisory capabilities. Here's an NDTV Profit exclusive. Now, the 3 days Indo-US trade talks starting today will focus on finalizing the terms of reference for the first tranche of the proposed Indo-US bilateral trade agreement. The discussions aim to set the agenda and schedule for official level talks in the coming months. Government sources indicate that the US is recasting its trade relations primarily with China, Canada, Mexico, and the EU, where its trade deficit is notably high. While the US trade deficit with India is not significant, there are concerns about high tariff rates, particularly in the automobile sector. Director General of Foreign Trade Santosh Kumar Sarangi says that the current tariff scenario presents a golden opportunity for India. Speaking at a SourceX event, he emphasized the ambition required to achieve the $2 trillion exports target. Sarangi said that the DGFT is in touch with exporters to address trade and tariff uncertainties. He acknowledged a temporary blip in exports for the next 1 to 3 months, but expressed confidence that they will increase in the short term to medium term. Indra IVF has withdrawn its IPO plans following SEBI's objections regarding the timing of the founder Ajay Murdia's biopic. The biopic was released shortly after the company confidentially filed draft papers for the IPO. Now, SEBI has raised concerns that the film could indirectly promote the company after the offer document was filed. EQT-backed Indra IVF was originally looking to raise up to 3,500 crore rupees through the offer. Now, the decision to withdraw the IPO highlights the regulatory scrutiny surrounding promotional activities linked to public offerings. Andhra Pradesh CM Chandrababu Naidu meets a Japanese delegation which was led by the Japanese ambassador in Amravati. According to Naidu's tweet, the discussions are focused on expanding Japanese investments in Andhra Pradesh and exploring collaborations across various sectors such as shipbuilding, electronics, chemicals, automobiles, and education to drive new opportunities for growth. The Supreme Court has stayed the observations made by the Allahabad High Court in its March 17 judgment. Now, the judgment had stated that grabbing breast and breaking a pajama string were not sufficient for a charge of attempted rape. Now, Justice B.R. Gavai expressed regret for using harsh words against the judge. The Supreme Court noted that the judgment showed a total lack of sensitivity by, authoring judge. The Supreme Court has refused to urgently hear a plea against the 1991 verdict in Justice Yashwant Verma's case. The plea seeks an FIR and inquiry into the alleged recovery of a large amount of cash during a fire at Justice Verma's official residence. Chief Justice Sanjeev Khanna has asked the petitioner to contact the registry and has assured that the plea will be heard on time. And on a positive note, India's GDP doubles in last 10 years, shows International Monetary Fund data. This reflects 105% growth in the last decade. The country's GDP now stands at $4.3 trillion. India is on the cusp of overtaking Japan as the fourth largest economy in the world, whose GDP is currently $4.4 trillion. Eli Lilly launches type 2 diabetes drug Mounjaro in India. The drug enhances blood sugar control. The drug also reduces appetite and promotes weight loss as the users don't find the need to eat more. The company is in focus because it has a first mover advantage over Novo Nordisk in India. And commenting on the effect of Eli Lilly, Zerodha's Nitin Kamath says that while we may not have a fair understanding of the second order effects of the weight loss drug, the effects people are reporting are remarkable. He says that he's been following the developing around Ozempic and GLP-1 drugs with some interest for a while. And last week, Eli Lilly launched its variant Mounjaro in India. Speaking at the FATF Private Sector Collaborative Forum 2025, RBI Governor Sanjay Malhotra said that regulations must be precise in nature and not unintentionally hurt the honest. While laying out the agenda for a forum, he said that there is a need to be mindful, and that measures should not stifle investments. He further added that the need to improve data quality and work in tandem with evolving technologies. Google launches Gemini 2.5, which it calls the most intelligent AI model. This is an experimental version of 2.5 Pro. Google said that Gemini 2.5 models are thinking models and they are capable of reasoning and analyzing the responses before acting. Enhanced reasoning and advanced coding are some of its top-notch capabilities. ZF Commercial drew attention as its stock surged 5%, driven by optimism around the Road Transport Ministry's recent proposal to adopt advanced braking systems, which is expected to benefit the company significantly. In the case against comedian Kunal Kamra, Khar Police is likely to issue a second summon. Earlier, Khar Police had summoned Kunal Kamra, following which the comedian asked for a week's time to appear before the police. Now, Kunal Kamra's lawyer reached Khar Police station and handed over the hard copy of Kamra's reply and requested for a week's time on behalf of his client. West Bengal CM Mamata Banerjee is on a visit to United Kingdom as Manchester City has signed a MOU to set up sports school in Bengal. She said that the state is becoming more prominent in sports and emphasized that this partnership will further strengthen the sporting ecosystem in the state. Increasing uncertainty around trade policy, commodity prices and financial markets poses significant risk to growth in FY26. That's what the monthly economic review released by the Finance Ministry says. The report adds that private sector investment can mitigate these risks and leverage India's economic resilience. There is a hint of optimism in hiring outlook for the upcoming quarter. High-frequency indicators point to continued growth in the fourth quarter of FY25. A government watchdog group is suing Defense Secretary Pete Hegseth and other Trump officials for using Signal to discuss military plans against Houthi targets. The lawsuit alleges that chats, which mistakenly included journalist Jeffrey Goldberg, violated federal record laws. Tech startup Infinite Realty has acquired Napster for $207 million, aiming to transform it into a social music platform for artists and fans. Now, Napster's CEO says that music streaming needs to reinvent in the immersive era. US President Donald Trump signs executive order to overhaul the US election system. He cites election practices in countries like India and Brazil, where voter identification is linked to biometric databases. The order states that America fails to enforce basic and necessary election protections used by both developed and developing nations. And adding to his string of tariff plans, which wooing trade relations across the globe, President Trump announces that he may also impose taxes on copper imports within the coming weeks. As a result, copper futures hit record high yesterday as traders price in the possibility of hefty import tariffs. Now on to an update on the IPL. In the Indian Premier League, Punjab Kings defeated Gujarat Titans by 11 runs. Batting first, Punjab Kings posted a target of 243, highest being scored by their captain Shreyas Iyer, who secured 97 of 42 balls and was also awarded the man of the match. And as all the teams have now played against each other once in the Indian Premier League, now starts the competition of highest run getter and wicket taker. Currently, Orange Cap, which is given to the highest run getter, is with Ishan Kishan having 106 runs to him, while Purple Cap, which is of the highest wicket taker, is with Noor Ahmed having 4 wickets. Great news for football fans in India. We might get another glimpse of Lionel Messi and his Argentine team in an exhibition match in Kerala in October. Now, this marks a 14-year-long wait after the World Cup winning captain first visited the country in November last year. Kerala Sports Minister had announced the news of Argentina visiting the southern state and playing 2 friendly matches in Kochi. HSBC India is the official partner of the Argentina team. It will promote football in India. And lastly, what to watch out for tomorrow's trade. US crude inventory, UK spring economic statement, UK car production and China industrial profits. Year-to-year data should most likely be in your radar. Well, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead for you all.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery? Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Metta's time, we coined that thing and we put it on in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I am very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
In the red, marking the end of a 7-session winning streak for the benchmark indices, the Nifty 50 index declines after sustained gains, with NTPC and Tech Mahindra emerging as the top laggards. Meanwhile, the Nifty Bank index extended its losses for the second consecutive session, reflecting broader caution among investors. India and the US are set to begin negotiations today to outline the terms of a bilateral trade agreement. Talks will continue over 3 days. The delegation in the US, led by Assistant US Trade Representative Brendan Lynch, will engage with India on key trade and tariff issues. EQT-backed Indira IVF Hospital Limited temporarily withdraws plans for a 3,500 crore market debut over a Bollywood biopic on the company's founder. Sources say the company allegedly ran into trouble with SEBI over the timing of the movie Tumko Meri Kasam's release. As negotiations for a bilateral trade agreement continue, India is looking at ways to reduce the amount it stands to lose if reciprocal tariffs are imposed. Economists estimate that India could lose up to $31 billion in exports if tariffs reach 25%. According to the Kotak Private Top of the Pyramid 2024 report, 1 in 5 ultra HNIs are considering migration, while investment allocations show a preference for commercial real estate and equities. The Supreme Court denies an urgent hearing request regarding the case involving burnt bundles of cash found at Justice Yashwant Verma's residence, and also instructs petitioners not to make public statements. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets, but national and international news as well. So let's get right into it. The Nifty and the Sensex ended sharply lower after a volatile trading session, marking the Nifty's steepest decline in nearly a month. All sectoral indices closed in the red, with media, realty and oil and gas sectors leading the losses. My colleague Harsh now providing a comprehensive wrap-up of the day's market action.
Well, there's pressure on the Nifty evidently, and we've closed nearly 200 points lower versus yesterday. Nearly 250 plus points lower from the day's high. So we saw a bit of a correction where the Nifty is concerned from the high. Second consecutive day where we've seen the fall. But first day in 8 where we've closed in the red. So that's one piece which we'll have to continue to monitor as the week unwinds. The other piece, and likely par for course, right? Now, where were the pockets of pressure? One, you had banks which were causing pressure on the Nifty 50. You had IT, and within IT in specific, Infosys was a big contributor to today's decline. And we also saw pressure from something like an NTPC. So those were some of the large contributors, negative contributors on the Nifty. The breadth on the Nifty was weak by the end. And we slipped further from where we were broadly in the day. So we've closed towards the day's lows. Let's talk about the breadth of the market. Not favorable. We saw 4:1 in favor of the declines, and therefore the breadth was sharply negative. You're also seeing the broader markets. The Nifty mid-cap outperformed by a wee bit, but the Nifty small-cap was down over 1.5% in trades. So some pain over there as well. In terms of sectors, we've spoken about them, but Nifty Auto in particular, Nifty Auto was in the green for a better part of the day, slipped and closed absolutely flat. And on a day like this, of course, we'll take flat, but given the fact that it was in the green for a predominant part of the day, it's closed in flat. The couple of gainers on the Nifty, something like an Indusin stood out 3% higher. Trent was also the standout, up 2% odd. Outside of that, Hero and certain pockets which were in the green, but outside of that, nothing major within the Nifty really stood out. So broadly, it was a day where we've seen some bit of consolidation. Another day where there was a massive sideways movement of sorts when we were zooming out for the month of March. That's how I would put it.
Absolutely, Harsh. Thank you so much for that. But let's also gain some valuable insights from ace investor Govind Parekh, known for identifying future market leaders. In an exclusive conversation with Neeraj Shah, he shares his approach to selecting high-yield stocks and key lessons learned from market downturns.
We follow the principle, sell, regret and grow rich. After we sell, prices go up also in the bull market, the height of bull market. You can't stop anybody's hands and say that, okay, hold his hands and say, don't buy. This is too high. People will still buy. So this word I had coined, sell, regret and grow rich. So when you sell and the price goes up, after a while you regret at that time. When it comes down, you become rich. This is just one thing. But generally, we try to sell this kind of markets. Every correction, every crash that has happened, it has rebounded in 6 months.
Got it. This one too seems like that only because there is political stability, earnings in India. You think this will...
At present?
I'm just thinking...
I'm extremely bullish.
You're extremely bullish.
I'm extremely bullish.
And now let's take a look at what's happening in the national capital, where India and the US are beginning negotiations to outline the terms of a bilateral trade agreement, also known as BTA, aiming to finalize the timeline for discussions over 3 days. A US delegation led by Assistant US Trade Representative Brendan Lynch will engage with Indian officials on key trade and tariff issues during these meetings. My colleague Rishabh now joining us with more insight into what these meetings are likely to cover. Rishabh, over to you.
The first set of official meetings between senior trade officials, both from India as well as the US, have begun here in New Delhi. This is marked by the visit of the Assistant US Trade Representative Brendan Lynch. He will be meeting with senior representatives from the Indian side, from the commerce industry, and the negotiations will be led by Additional Secretary Rajesh Agarwal. Now, what we're hearing, what will happen across the next 3 days is the fact that the initial contours of the bilateral trade agreement between India and the USA will be finalized. A schedule of negotiations will also be drawn up, and what we're also hearing is that the terms of reference, which is a basic idea and a basic structure of how the bilateral trade agreement between India and the US will look like. So these three things will be on top of the mind over the next 3 days as we'll have this US delegation come visit India. Now what we're also hearing is that the formal negotiations for the bilateral trade agreement will also be chalked out in terms of what will be done when, in terms of when an Indian delegation will also possibly visit the US. And also what we're hearing is that the first tranche of this BTA that will be negotiated in 2 tranches. The first tranche will cover basically tariff measures as well as certain non-tariff measures, while more sensitive topics like visas and technology transfers will be kept for a second tranche, which will be negotiated at a later point in time. What we're hearing is that the first tranche will be finalized by the fall of this year, which is between September as well as October. These are the 2 months that we are looking at in terms of the first tranche of the bilateral trade agreement. Now, we will stay tuned to this. These will be unfolding over the next 4 days till the 29th of March, which is when the US delegation is in India, and we will bring you more updates from that.
Meanwhile, US President Donald Trump is set to implement reciprocal tariffs on trade partners, including India, starting April the 2nd. This move aims to address the significant trade deficit that the US has with these nations. Trump's targeted approach focuses on India's high tariffs on automobiles and motorcycles, which exceed 100%. Economists, however, estimate that India could lose up to $31 billion in exports if tariffs reach 25%. So as negotiations for the BTA continue, like Rishabh likely said, India is exploring ways to mitigate the impact of these tariffs while also addressing US concerns regarding its trade practices. My colleague Sajit now joining us with more details on this.
Barely 5 days left for the US to impose the reciprocal tariff on many of the partner countries with which the US has trade relationship. If you look at India and US trade, India exported roughly around $80 billion in 2024 calendar year and imported roughly around $44 billion from the US. And that's where the India's trade surplus is, and that's where the deficit is for the US there. And the US wants to bridge that deficit by imposing equivalent tariff which India imposes on anything which is imported from the United States. If you look from a tariff perspective, while it is not clear on what basis the reciprocal tariff will come in, whether it's going to come in at the country level, whether it's going to come in the industry level or sector or product level, that's not known yet. But what is available is that India imposes a higher tariff on an aggregate basis, on a weighted average aggregate basis compared to the US. So if you look at the countrywide tariff rate which is there, India charges roughly around 7.7% tariff, while the US has a 2.8% tariff for anything that it imports from India. And so the differential there is around 4.9% of tariff there. This entire differential is primarily driven by the agriculture segment, where India imposes nearly 37.7% tariff as compared to 5.3% by the US. So there is a huge differential with respect to agriculture of 32.4%, which is there.
And talking about tariffs, we also know that US President Donald Trump is likely to impose tariffs on copper imports within weeks, significantly ahead of the previously set 270-day deadline for an investigation initiated back in February. Now, this rapid timeline has led to a surge in copper prices, with futures reaching record highs amid speculation of a potential 25% tariff. This swift approach marks a departure from previous tariff investigations, which typically took much longer to resolve. And in its latest monthly economic review, the Finance Ministry has raised concerns about the increasing uncertainty surrounding trade policies, commodity prices and financial markets, which pose significant risks to the growth outlook for FY26. However, the ministry has emphasized that private sector investment could be pivotal in mitigating these risks, leveraging India's inherent economic resilience. A biopic and a suddenly withdrawn IPO. The timing of a Bollywood movie has caught the eye of market regulator SEBI. To tell us more about Indira IVF's IPO and the latest update on it, my colleague Agni now joining us. Agni, first tell us what you've gathered from your sources. We saw Indira IVF actually that was slated for a 3,500 crore IPO suddenly withdrawing.
Right, so this is a very strange but true incident is what our sources are telling us. So there is SEBI's scrutiny going on at the timing of a movie Tumko Meri Kasam and how it links to Indira IVF's IPO. So basically SEBI is looking at the timing of the movie's release, which was released sometime earlier this month around the middle of March. So regulators' scrutiny is likely what has pushed Indira IVF to withdraw its IPO. So there were concerns among SEBI about the indirect promotion of Indira IVF at a time when offer details were not known to the wider public. Now, why were these offer details not known to the wider public? So it was likely to be a 3,500 crore IPO, but since it was filed through the confidential route, the details were not available with the public.
Agni, so then tell us what is the confidential filing and where does Tumko Meri Kasam fit into the story of Indira IVF's withdrawn IPO?
Right, so a confidential filing is an optional mechanism for companies to go through about their IPO, where a company files a DRHP but document is not made public immediately. So the document is released only when the company decides to go live with its IPO. So in the time being, the details are not out with people like you and me. And companies which have gone down this route include Physicswala, Swiggy, Credila Financial Services and even Vishal Mega Mart. So the way Indira IVF and the biopic Tumko Meri Kasam features in all of this is that it's a biopic of Indira IVF's founder Ajay Murdia. It is said to be loosely based on events in his life and is even produced by a company called Indira Entertainment. The movie credits Murdia's sons as the producers, and Tumko Meri Kasam surprisingly released just within a month of the company filing for the IPO. So it includes stars like Anupam Kher, Isha Deol, Ada Sharma and Ishwak Singh. So this is what our sources have gathered, that since the movie is likely promoting the film, promoting the IPO indirectly, so SEBI scrutiny has sort of pushed the company to withdraw draft papers for its IPO. This is a developing story. We have reached out to both SEBI and Indira IVF to get confirmations, but as of now we don't have details on to whether the company will re-attempt their filing in the future.
Right, Agni, thank you so much for those updates. Let's take a look at what's happening in the food tech space now. Bank of America has downgraded shares of India's leading food delivery platforms, Zomato and Swiggy, citing concerns about their near-term growth prospects amid rising competition and increasing losses in the quick commerce segment. So these downgrades have understandably led to a notable decline in share prices, with Zomato and Swiggy experiencing drops of up to 3% in trading sessions following the announcement.
Bank of America has downgraded Zomato to neutral from a buy rating, has cut target price to 250 from 300. Swiggy, they have downgraded to underperform from buy and cut target price to 325 from 420. Now, there are a couple of reasons as to why they have done this. First one being that they're saying that the quick commerce overall picture, there has been prolonged competition and they are expecting higher losses going forward because of the dark store addition overall. In terms of medium-term prospect, they remain positive, but overall picture in terms of competition is getting tougher. Food, they're not, in the food delivery space, they're not seeing any material slowdown, but overall cash flow is set to sink is what they're expecting. And lastly, in terms of changing narrative in a risk-aver market overall right now, they are cutting their overall earnings estimates as well for both of these counters, and these are the reasons, the specific reasons as to why they have downgraded both Zomato as well as Swiggy.
At the curtain raiser for the Financial Action Task Force Private Sector Collaborative Forum of 2025 in Mumbai, Reserve Bank of India Governor Sanjay Malhotra emphasized several critical themes shaping India's financial landscape. Let's listen in.
In recent years, digitalization has been increasingly applied to customer onboarding and customer due diligence processes. India has made huge strides in this regard too. The digital KYC and video KYC are shining examples of this. The central KYC records registry with more than 1 billion records is another example, which has the potential of ushering in a new era of customer onboarding by making it easier and seamless, not only for the customers but also for the regulated entities to perform customer identification and due diligence. This is an area which I've mentioned even earlier. There is a lot of scope for improvement, both, from the regulated entities, I think more, from the side of the regulated entities, but similarly, at the side of the regulators also to further improve the system. We had a discussion offline before this coming into this session, and I think we all together need to put our heads together as to how we can make this system more robust, more effective and efficient, so that all regulated entities, all regulators, all regulated entities can coordinate and make it easier for everyone to do this KYC process. There are concerns regarding data protection and sharing of information without consent. India has recently enacted a law for digital personal data protection. Exchange of experiences from different jurisdictions in this forum will help us in better implementing this new law in our country.
And Kotak Private Banking, a division of the Kotak Mahindra Group, has released a report on ultra-high net worth individuals in India, highlighting key investment trends. The report reveals that 1 in 5 ultra HNIs are either in the process of migrating or planning to do so. My colleague Shubhana now joining us with more insights on this trend and what's driving their migration plans.
Hi. So yes, the Kotak Private Banking has launched its reports, and now with this report, now that they're saying that 1 out of 5 ultra HNIs are planning to or are in the process of moving or migrating. Now there are a confluence of factors that are affecting this. It could be an improvement in the standard of living, healthcare solutions, education or lifestyle. These are the factors that the report has highlighted. But apart from that, what they've also said that the number of ultra HNIs are expected to rise to 4.3 lakh by 2028, from 2.8 lakh as of 2023, which is a large number. They're also expecting the wealth of these ultra HNIs to rise to 359 lakh crore by 2028 from 232 lakh crores as of 2023. Now, it is also important to understand that where they are, allocating their portfolio, their investment portfolio. Now, these HNIs are allocating 32% of their investments in equities, which shows that that the bullishness in the equity market still continues, and followed by 29% in real estate, 21% in debt and 18% in alternate assets. Another thing that was interesting from the report was that 45% of ultra HNI's investments are in commercial assets. They're also saying that these HNIs are also planning their succession better. And in terms of services, the Kotak Private Banking is looking at, they're seeing demand from business families that are looking for IPOs, OFS and NRI officials.
And I understand that you also spoke with Gautami Gavankar, the president of Kotak Mahindra Bank, about the advantages that this report actually highlights for private banking industry. And she also discussed how the clients are investing in equities and key trends from the report. Let's listen into that.
The growth of wealth in India is phenomenally growing. In 2023, we had 283,000 UHNIs. We are expecting this to grow in 2028 to 430,000 UHNIs. The wealth, which is 232 trillion,